All right. Good morning, everybody, and I hope you're having a great day. Thanks so much for joining us here for our September Trader Summit. Today, we are going to have a great marathon session. We have a lot of speakers, have a lot to tell you about trading, and we have a lot to learn. So buckle up and take notes and have a great time today. Uh, If you haven't heard of MetaStock, we are sponsoring today's event along with technical analysis of stocks and commodities. And really quick, I'm going to play you a video so you can learn a little about us, just in case you have never heard of us before. And even if you have heard of us before, watch the video.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, so I hope that you learned a lot about MetaStock and who we are in that brief video. MetaStock will be coming up quite a bit today as we are the sponsor, and many, if not all, of the presenters today use MetaStock to help them with their trades, and we'll probably be discussing it at some level. And Jeff Gibby, who's speaking today, will be talking about MetaStock exclusively, so I implore you to watch his video. Okay, so like going on today, we're going to be starting here in about 3 minutes. We have learned from one of our speakers that they, for whatever reason, are not going to be able to attend today, and that is Steve Bigelow. So right now, this is the lineup. The first speaker will be Vince Vora at 10 a.m. Eastern. Then you're going to have Silas Peters at 11, Marina Villatoro at 12. Steve Bigelow is supposed to be at 1 o'clock. I believe now Jeff Gibby is going to be taking that slot. I'm not certain about that, so stay tuned. And then at 2 o'clock, Jake Bernstein and Brian Latta. Then at 3 o'clock, I'm not sure, because that was when Jeff Gibby was supposed to talk. So again, like I said, stick with us and we'll kind of let you know. Things are kind of falling into place right now. 4 p.m. Eastern, Melissa Armo is going to be speaking, and then Price Headley at 5. Now, Oscar Carboni is either going to be at 6 or 1. I'm not sure. Jeff was trying to tell me really quick before we get started, but he was still sort of sorting that out. So I'm sure by the time Jeff comes on in 2 minutes, he'll know what's going on and he can tell you. A couple things. Please do go ahead and make sure to like and... Oh, what happened to my little button? Oh, I hit the wrong button. Make sure to like and subscribe and hit that bell so you'll be notified whenever we have a live event, and we have several of them a week, especially these events, these summits, which we do just about monthly, and then about quarterly we have a conference. If you haven't registered for today's summit, I advise you to do so. Just go to metastock.com and you can hit that banner on the top, or if you're watching right now, you can also see that I pinned it on the top. Oh, and hello to, wait, who's? I want to send out a hello to Natukunda from Uganda and Kelly from Utah. And hey, if you're watching right now, go ahead and say hello. Let us know where you're watching from. We always like to know who's on board with us. Also, make sure to chat in and ask questions and comments as you like. We really encourage that. And all of the speakers do take questions, and we answer most of them. So if we don't answer your question, we apologize, but usually we get almost all the questions in. And it really makes for a better presentation all around for everybody, I think, when there's some questions going on. And it just makes it more interactive for you. And this is a great opportunity for you to ask those questions. So make sure you do. How often do you have the attention of so many marketing professionals? Okay, we're going to start in about 30 seconds, so I'm going to let you listen to a little jazzy music and hit the buttons and switches I need to get this thing going.
Good morning, everybody. It's good to see you. Thanks for coming today. My name is Jeff Gibby. I'm going to be basically reading legal disclaimers and introducing people all day, but it's good to see you. Thanks for coming. If you're joining us on YouTube, one thing I'll say is hello. Make sure to like and subscribe. Helps a great deal. If you subscribe, you'll get, we do these types of events, either full day events, full week events, focused hour-long events, and it helps a great deal. We appreciate it. So make sure to like and subscribe. Good morning, Priscilla, Vic, Johnny, Neil, Alan, Anton, let's see, Sharon, Rao, Johnny, Nat. Sure to say hi. It's good to see you. All right, so let's kick off today. I'm gonna go ahead and kind of read a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. Want to say thank you to our sponsor today, Stocks and Commodities Magazine. We've been running this Online Trader Summit it's been 10 years now. This will be complete our 10th year in a row of running these online trader sessions. And the whole time, the Stocks and Commodities Magazine has been supporting the events and sponsoring the events and helping us out with the events. We really appreciate the work that they do. If you're not familiar with Stocks and Commodities Magazine, they've been publishing physical magazines since 1982. They've got 1.3 million subscribers and have, over the years, amassed a 17,000 article archive. So as part of a bonus, if you want to get a free issue of Stocks and Commodities, if you go to metastock.com/trader summit, fill out a quick registration form, register for today's event, the very top bonus offer you can get is a free issue of Stocks and Commodities Magazine. So if you're watching this on YouTube and you haven't registered yet, make sure to do that and get your free magazine. So, and we are MetaStock. So actually it's 30 years in a row we've actually been rated #1 in our price category. We're going to talk a lot about kind of scanning markets and finding opportunities in the markets today. But we do MetaStock, as you can see. We're very, very happy with the software and proud of the fact that it's been rated so highly for so many years in a row. The special, if you're new to MetaStock, what we're going to offer you all day long is to buy 1 month. 1 month will start at $59 and get your second and third month for free. So you can do that at metastock.com/traders-summit 3-for-1. So with all of that out of the way, let's talk about our first guest. Vince Vora is a good friend of mine. I really like Vince. Every time I introduce him, I talk about how when he talks about concepts, I have a tendency to really understand what he does. He's a great trader. He's been working in the markets for a long time. He's been working with us for a very long time. But in addition to being like a really, really good trader, one of the things that I think he also really excels well at is teaching people. And let's go ahead and get him started today. So good morning, Neil. Good to see you. All right, Vince, let's go ahead and bring you on here. How you doing today?
I'm great, Jeff. Thank you for having me on. Good morning.
Good morning. Let me go ahead and I can hear you good. Let me go ahead and make you the presenter. Before I let you go, I'll make sure we can see everything. So.
Excellent. Let me know if you can see my screen. You can see the slide. Yep.
Trading Wins Victory Method.
Yes.
It's
correct.
Great. All right. I'm going to get out of your way. It's your turn. Go.
Okay. Again, thank you for having me on. Good morning, everyone. I'm happy to be here kicking off what should be an exciting session and week for MetaStock lineup of some very talented traders. I'm happy to kick this off and show you my victory method. Now, today, I'm going to keep this moving pretty quickly here. I'm going to show you maybe 2 slides at most, and then we're going to get to the charts. I want to make this as interactive as possible, so please, if there's symbols that you want to look at, type them into the chat. Any questions, type them into the chat as we go. Jeff will try to keep an eye on the chat, as will I, and we'll try to get to all your questions. Today, my goal is to show you my victory method, but whether you decide to trade with my indicator or not, I'm going to be teaching you a number of things that you can use with any strategy you want. So no need to take notes here. I want you to actually pay attention and listen. There will be a recording sent out later. It'll be on the MetaStock YouTube channel. So plenty of opportunity to go back and rewatch as we go through. Again, as Jeff said, my name is Vince Vora. I'm the head trader here at Trading Wins. And there's only 2 things I'm going to tell you about myself. You can read the slide if you want, but there's only 2 things you need to know about me. A is I've been doing this for a very long time. This slide says over 30 years. It is now approaching 40 years, getting very, very close to that I've been doing this. And the other thing is that I absolutely despise risk. Like most traders, I started doing this a long time ago. And when I did, I thought I knew a lot more than I actually did and ended up losing a lot of money. From that, I've learned some very, very good lessons that I hope to pass along to everyone here. And I've never taken another big loss since. And I will always do everything I can to manage risk before looking at profit. So that's what you need to know about me. Before we continue, please understand trading can be risky. So don't trade with real money until you get very comfortable with the system that you're trading with. Now, let's get to the charts here and let's talk about the markets and victory. One last thing I will say is I've been under the weather lately, and so I may have to cough a couple times as we go through or clear my throat. So I apologize in advance. Now, what you're seeing on your screen is the victory add-on here. These arrows, these circles, the colored bars, that comes from the algorithm behind this, and I'll explain what it is. But before I do that, I want to tell you that as a trader, you have certain responsibilities, and there are literally thousands and thousands of different things you can learn about trading and technical analysis and so on. But really, there are only 4 things that you should be focused on. 2, you are in control of, and 2, your system, whatever system you're using, should take care of for you. The 2 things you are responsible for are patience and discipline. And yes, you may hear that a lot. You may disregard it. Please don't. It is super important. I'll go through exactly what you need to do to be patient and disciplined. But as a trader, though, that's really all you need to focus on. As long as you have a system that takes care of the other 2 things, which is trend and momentum. If you're trading with trend and momentum on your side, trust me, half the battle's already won before you ever place a trade. And I will explain. So the trend and momentum part, victory takes care of for you without question. Patience and discipline, that is up to you. I'm going to ask you to create a checklist of things to look at. And I will tell you exactly what those items are. So you can create that checklist, have it beside you before you trade. And before you place any trade, make sure you can tick off every box. If you can, you are not only trading with trend and momentum, but you are trading very, very safely. Again, I hate risk. Everything I do, everything I design is based around eliminating risk from your trading. And the more patient you are, the more disciplined you are, the less risk involved. All right. So let me explain exactly what you're seeing here. The arrows, whether green or red, are obviously the initial trade entry. This is when victory is suggesting to enter either long or short. Obviously, green long, red short. The circles are the same. It means the same criteria that came together when the arrow was displayed is coming together again. The reason why it's displayed as a dot or a circle is because we're already in a trade. So if you miss the initial entry, you can enter now, or every time you see an additional dot, you can add to your position, okay? And you'll notice that once we're in a trade, all the bars remain colored the same. That is intentional. That is so it can help you, remain disciplined and not get scared out of a trade. How many times have you gotten into a trade, it starts moving your way, you see 1 or 2 red bars, and you start to doubt your decision, you start to panic about whether or not you're going to give back your profits, and a lot of times we end up getting scared out of a trade. Well, if they're all colored the same, it helps you remain calm and remain in that trade for the life of the order, all right? Now, excuse me, what you're seeing here, this blue line, this, as I'll hover over it and you can see, is a simple 20-period moving average based on the close, all right? The reason I trade with this, and I've always traded with this and will always trade with this, is because it is one of, if not the most popular moving average out there, meaning it's followed by not only retail traders like you and me, but professionals, professional money managers. So there are a lot of eyes on this moving average, and for good reason. This moving average will show you many different things, but what we use it for is one purpose specifically, and that is to judge momentum. To judge a trend overall in the market, it's pretty easy to see on most charts. I mean, when the stock is moving from bottom left to top right, you know there's an uptrend, right? It's pretty easy, even though we can get technical about it and look at the pivots, all right? Pivots are the turning points. So, for example, if stock moves up and then, and then it pulls back a little, let me clear this, do it again, and then it pulls back a little, right? And then it continues on here, and then pulls back, etc. This is a pivot high, this is a pivot low, all right? So if you have higher highs, from one pivot high to the next, it's higher. From one pivot low to the next, it's higher. You're in an uptrend, and vice versa in a downtrend. If you have lower highs and lower lows, it's pretty easy to spot a trend. To judge the momentum, what we do is use the 20-period moving average, and we're looking for the slope on that moving average, the degree of slope. So as you can see here, when there is a slight slope like this, it's positive. You get a nice, slow, steady grind. When you have more significant slope, you get a much bigger move, much more violent move in that direction. So what we're looking for is to not only trade in the direction of the trend, but to trade, during those times when there is a lot of momentum. What that does is act like a wind at the back of these candles and pushing the price forward. Basically, what it's telling you is that there's a lot more interest on the buy side than the sell side, right? A lot more people are trying to get into this stock than get out of the stock. And that's what moves the price forward. So we want to trade with trend and momentum, and Victory will take care of that for you. It is a very simple algorithm based solely on technical analysis, has very few indicators in the background, but when they align, you cannot help but take advantage of that trend with momentum. I will say you can use this on anything, whether you're trading equities, futures, Forex, crypto, whether you're trading on a different exchange. This has been tested by us on exchanges all around the world, and any time frame. So whether you prefer to trade the 1 minute, the 5 minute, the daily, weekly, if you're an investor only looking for long-term trades, you can use the monthly chart, anything you want. So this is a chart of the Qs, the QQQ, which is the ETF for the NASDAQ 100, right? And as you can see, bottom right, it is a monthly chart. So one of the other things you can do is when you're looking at an index like the S&P 500, the NASDAQ 100, the Dow Jones 30, whichever one you follow, I follow all of them, you can use this to judge the overall direction or trend in the market. So right now, as you can see, the trend is up here, okay? And you can see that overall, when we look back, the market spends a lot more time moving higher than lower, obviously. So bull markets are a lot more common than bear markets, and bull markets last a lot longer than bear markets. But when you see something like this on the higher time frame, the way you want to use that is to then switch to whatever time frame you are trading on. So my preferred time frame is the daily chart, right? And then I would look for trades in that direction. So for example, here on Thursday or on Friday, it ended with a red sell signal. Am I going to trade that right now? Am I going to short this market right now? No, I am not, because the overall longer term trend is in the opposite direction. Now, one other thing I will say before we start going through examples is that the intent here is for you not to take every single trade or signal that is on your chart here with Victory. That is not the intent. The intent is to trade the most conservative entries. Again, we want to eliminate risk from your trading. We want your accuracy rate to be extremely high. We want you to be as consistent as possible. So I'm going to give you the few rules along with this indicator that if followed, will give you that. We'll give you a higher accuracy rate. We'll keep your losses small, but we'll allow your winners to run, okay? And I'm going to go through that criteria now. So what we want is we want a signal to begin with. So let's go back with, and again, type in any symbol you want to see, for example, here. But let me start with Eli Lilly, and I'm going to go from one extreme to another, okay? I'm going to start with a monthly chart and then work my way all the way down to a 1 minute chart. So you can see that regardless of what time frame you choose, the rules, everything else works exactly the same way. So let's look at this example here, okay? What we want to see, the ideal condition, and again, you can build your checklist for this. What you want to see is you want to see that green arrow, first of all, right? But it alone, it's not good enough. For example, this is a trade I would not take. You'll understand why in just a minute. But right here, you need the green arrow. Now, we need that arrow to be as close to the 20-period moving average as possible, okay? Because when it moves away from it, it usually snaps back. We don't want to risk buying far away from it and then only to watch it pull back before a continuation of that move. We want to catch it near that 20. The other thing we want is to look at the slope of the 20. Super important here. We need to have a slope in the direction of the trade. So since it's a green arrow and it's predicting a move higher, we want the 20 to be sloping higher. We do not want the 20 to be sloping lower or to be flat. We need the 20 to slope in the direction of our trade, and the higher the degree of slope, the better. All right, so we have that. And lastly, what we need is to look to our left to see if there's going to be a lot of overhead resistance here that would prevent this underlying stock to move higher. And when we look at our left here, we don't see that. At this time, it was right at the all-time high, or just about to break out to an all-time high, which is the ideal condition. All right. When you're close or at the all-time high, there is no previous activity above that price point. So that is the ideal condition for that stock to move higher. And you can see here that it worked extremely well. So if, again, what you need is you need that initial green arrow. You need it to be close to the 20. You need the 20 sloping, and you need, excuse me, little to no overhead resistance. If you can check off those 4 boxes, right, you're on your way to a great trade. Now, in addition to that, again, you can look at the higher time frame to make sure you're trading in line with the overall trend or the longer term trend. In this case, we're at the monthly, so there's no higher time frame to look at, okay? But if we were on the daily, I would look at the weekly, the monthly, et cetera, to make sure we were in line with that direction. And you can look at the overall market. So you can look at an index like the SPY, the Qs, the Dow, and make sure you're in line with that if you want. But this is the ideal condition. Now, you enter the trade and you remain in this trade until you get a color change, all right? The color change
Hey, Vince, it appears that we do not hear you right now. Your audio just cut out. That is correct. I could, Vince, we can't hear you. Let's see. I'm not sure he can hear us either. Actually, he looks like he's still going on. We'll go ahead and try and mute him, and then we'll try and unmute him. Hey, Vince. Okay, I think he's at least aware that we can't hear him. No, he's maybe not. Yeah. No. Okay, all right, hold on, everybody. We got a little bit of a technical issue. We're going to work on it. So.
All right, everybody on YouTube, we're trying to get a hold of Vince to let him know his audio is cut out for some reason. There might be a problem with his microphone. I think now he's at least finally aware that his audio is out. Well, maybe not, though, because he continues to be apparently presenting sans audio. But if you give us a moment, I'm sure we'll get him back on and get moving on here. Again, if you're listening right now, we're trying to get Vince Vora's audio back. If you can give us just a minute, we should be back on track in not too long. Audio out there yet? Jeff, Vince, anyone? Okay. Okay, I've just got our technical difficulty banner going on the YouTube side, so. It's weird though because it showed that his audio was still going. There didn't seem to be any problem. I mean, it wasn't muted. It was the green lines. Ah, hooray! Okay, give me a second to turn YouTube back on, guys. Welcome back, Vince.
Need to reshare that, and it seems like it's a good time to talk about like some of the requests for symbols we're getting out of YouTube. So
okay,
that would be Nat, when you get a second, wants to look at Bitcoin, and Juan wants to look at Apple. So
all right, sure, absolutely.
In terms of everybody else, looks like we've got Vince back. You should be able to hear him.
Great. Sorry, I don't know at what point I got my audio went out, so I'm not quite sure what was missed.
You were still on Eli Lilly, and it was before you went from a daily to a monthly chart.
Okay. So yeah, let me just finish off with that quickly, and then I will go to Apple and Bitcoin and whatever other symbols you want to see. And by the way, when you're putting a symbol request, if there's a specific time frame, please mention that. But I was trying to make the point that regardless of the time frame you trade, there are trades you're going to find that match that criteria. And I had started to explain the areas and the types of signals we don't want to take. And the reason for that is because it increases the probability that you're going to get stopped out. So when you see here, there's a flat 20 MA here, you see how the stock just kind of goes back and forth. And if you're selling here, for example, you get stopped out, you buy here, you get stopped out, and it happens over and over again. And that's where traders lose most of their money. So you want to focus on the trending areas. Let me just go down to an extreme. I'm going to go to a 1 minute chart on Eli Lilly. And you can see that, again, there are these areas where there was a sharp slope in that 20. And you can see this example here. We got a sharp slope. The system's suggesting a short. We're near the 20. And when we look to our left, there's nothing there. There's no support. And, you know, it just keeps running in that direction. So whether it's a 1 minute, here's a 5 minute, okay, plenty of opportunities. This is why I mentioned earlier that in the training that we send you with the indicator, we spend a lot of time comparing one setup to the other, because there will be many setups for you to review. You'll never be short of setups, but we do want to focus on the best of the best. So let's look at Apple and Bitcoin. And I'm going to go to the daily chart here. It's the time frame I focus on most, but again, we can look at others. Oh, looks like I've lost connection. Can you still hear me? Can everyone still hear me?
Yes, we can.
Okay. I think I've lost connection on my chart, though.
I think you just got a bad symbol. Try it. Type it in again. AAPL.O. It looks like you got like maybe a weird one. There we go.
Okay, there we go. All right, let me just add my thing back here, victory. There we go. So this is the daily chart. And again, what we want to focus on are the areas with slope, the areas with trend and momentum. So if you're following the pivots, for example, pivot high here, pivot high here, pivot low here, pivot low here, it's easy to tell that we've got higher highs and higher lows. So we're in an uptrend. The degree of slope on the 20 tells us how much momentum there is. And throughout this period, there's quite a bit. So this is what I mean by being risk averse and by trading, excuse me, with trend and momentum, you remove that risk, because although victory will pinpoint, you know, the best areas to enter along this trend, realistically, you could buy anywhere along this trend and make money, right? And that's because there's an influx of buyers. People are fighting themselves to get in on this stock, and it's pushing the price higher. The algorithm pinpoints the entries with a little more accuracy, and you can trade this in a couple of different ways depending on your style. So you have a green arrow here. You're near the 20. The 20 is sloping significantly. You look to your left. There's nothing there, which means there's no overhead resistance. So you can buy in here, and again, you can add on every re-entry along the way, exit on a change of color, or you can just hold without adding to your position along the way and exit here. And certainly you can scale out at certain points. That way you're locking in profit no matter what happens. Because there's one thing that victory cannot help with, and I don't know of any system that can help with this. I've yet to find it. If there's bad news or any news event that happens and you get a big gap against you overnight, very difficult to guard against that. So that is one of the reasons why you want to start to scale out along the way, bank some profits. And that way, even if there is a gap, you're likely to walk away with a profit on that trade. All right. But again, any change in color, you want to be out of there of the full position. All right. So if you got it here, added at every spot, you're not exiting your first portion and keeping the rest. You're exiting the whole trade when you see a change in color. All right. And now, this was Apple. Again, we can look at daily, monthly. I mean, look at this trade on the monthly, just fantastic, right? And you'll find them all over the place. If you see candles that don't have a color that are grayed out like this, it's only because the algorithm needs a certain number of candles to calculate the formula. So that's why you may see that on the chart. Let's look at Bitcoin. So Bitcoin, we had this massive move here going back to 2020, right? Just after that, we locked down for the pandemic and everything went crazy. Bitcoin did as well here. Since then, it's pulled back. Now, not a lot of history on this chart. And one of the other things I will teach you is, sometimes when you look at some of these charts, you may say, hey, some of the trades, some of the biggest moves start from an area where there is no slope. In other words, it predicts that coming move a little early, but it does not match the criteria that you're asking me to look for. Well, there are a couple other little rules that you can use to take advantage of this, okay? And it's this simple. Two little things. Let me teach it to you. So right here, when you get that green arrow, if the 20 is flat or if it's sloping against you, for example, here, right? We got a nice strong green arrow, but look at the slope. It was completely in the opposite direction, all right? You can just skip it and wait for, one that has slope. But the other way to know that it may be about to make a big move is you're looking for one of two things. One, you need to overtake a prior high. So if you look at the most recent high here, pivot high, this minor one, it was right here, okay? On this bar, it did not overtake that high. So it is not time to get in yet. But when it does, which was back in here, then you can feel free to jump in, as long as it isn't too far from the 20, okay? That's one way to take advantage of a move like that. The other is to wait for a successful retest of that moving average, meaning a lot of times price crosses from below to above, okay, and then moves away and then comes back to retest that 20 and bounces off that 20, comes back and holds support at that 20 and bounces, okay? This is a good example here as where we went from we were dropping, we came back to retest that 20. But once it got to that 20, now it's getting rejected and we're actually getting a sell signal here. So this is actually a good looking short. But those are the two conditions. Aside from that, you will never trade with a flat 20, or you should never trade with a flat 20. You look at this one here, right? The 20 was in the opposite direction. Did we close above a prior high? We did not. And that's what you need. I should have said that earlier. You need a close. Did we close? We did not. Did we successfully retest the 20? We did not. And it's a good thing we didn't take this trade, right? Because it's running away from us in the opposite direction. That would have been a stop out right there, and we would have lost money. Let's see, what other symbols can I look at? The most popular ones, for example, Starbucks has been in the news lately. Let's look at Starbucks. Here it is again on the month, and I'll go to the lower time frames because I'm spending a lot of time here. But here's a good example right here. Do you really want to get in here? You can, but it's a riskier setup, okay? You don't have slope. At best, you can say it's flat, but really it was dropping here. Now, is this a prior pivot? It's hard to tell, honestly, but it's below the 20. We want it to be above the 20. So there's no prior high there until here that we could really take advantage of. There certainly wasn't a retest of the 20. This was the first retest of the 20. But at this point, look how perfect this setup is, right? You have slope, you're near the 20, and when you look to your left, you just don't see a lot of overhead resistance, and off it goes. It pulls back, and every single time, okay, every single time it has a reentry. Even if you're in the trade, and I've added to it a couple times, I want you to ask yourself, is the same criteria there again? Meaning that checklist of, is there slope on the 20? Is it near the 20? Is there little to no overhead resistance? You must answer yes to each of those before you add again, all right? If that criteria does not exist at that point, you do not add to it. You just hold till the change of color, okay? Look at this example in here. This is where traders lose money, all right? If I was going to take this sell, what would I need to see here? First of all, slope is against me. So that's one mark against me. But did it close below a prior low? It did not. Did it retest the 20 at this point? No, it did not. So there's no reason for me to take that trade. And it's a good thing. It would have been immediately stopped out, right? This one here, do I take this one, right? Do we have slope? I think we can say yes, right? Are we near the 20? Yes. Is there a lot of overhead resistance? No. This one actually meets the criteria, right? Now we exit the very next day, okay? Losses are going to happen. Losses in this business, they're a cost of doing business. You have to accept it. The key, though, is keeping them small. And I think you'll agree this would be very, very small loss. Again, now you start to flatten out, right? So do you take this one? I wouldn't, not enough slope. So we avoid that one. This one here, again, we did not close below a prior low. We did not retest the 20, etc. So you notice here that you would have been stopped out or lost money during this consolidation phase. You're better off when you see something like this. You're better off marking the highs, okay, and marking the lows of that range, and then waiting for a break one way or the other. If it breaks down here and you get a proper setup, you go short. If it breaks out here and you get a proper setup, you can take it. Now, again, if it breaks out here, do you have the criteria that we're looking for? Not really. We're further away from the 20 now. We certainly have no overhead resistance, right? We're in a trade. It looks really good. So, you know, if you were a little more of an aggressive trader, you could take this. Otherwise, you just wait. Remember I said patience and discipline. Discipline to follow that checklist. Patience to let the trade come to you. And when you're in the trade, patience to just stick with it until the change in color. That's what I need from you. So we skip this. Look at this trade. We have slope, right? We're near the 20. If we look to our left, there certainly isn't a lot of overhead resistance. And what happens next? Boom, there it goes. It is that simple. Whether you're on a daily, a weekly, a monthly, whether you're trading, you know, crude oil, gold, Forex, Bitcoin, it doesn't matter. It's technical analysis. It works all the same. Look, let me show you one of the best markets right now, and has been for a while, is the Nifty 50 in India, okay? It is one of the best trends out there. Let me just show you on the monthly time frame how well this has been doing. Look at this, bottom left to top right, okay? And again, along the way, this is the daily chart. There have been some spectacular trades you can take. Now you can say, well, I live in the US, I can't really trade the Indian market. Yes, you can. There are ETFs based on the Indian exchange, based on the Nifty. Just trade the ETF and look for the exact same things. There's a trade right now. Let me show you something. The Hang Seng market, okay, in Hong Kong. Look at that. Here's a setup right now to the short side, all right? Let's go through the criteria. You have a red arrow. Do you have slope lower on the 20? Yes. Is it a significant slope? I think so. Are we near the 20? Yes. When we look to our left, is there a lot of activity here? A lot of support below? I'd say no. We can go to the higher time frame to confirm that the higher time frames are in line. Here's the weekly time frame. Are we in a downtrend? Yes, we are, right? And just being below the 20 is all you really have to confirm on the higher time frames. Let's go to the monthly, right? Is it below the 20? Yes. And again, if you keep looking to your left, there's really nothing down there, which means there's nothing standing in its way. This is likely going much lower. This is a good looking short right here. This is all you have to do. And in a second, I'm going to show you the scanner that comes with this, where you can quickly find these kinds of setups just by running the scanner. But look, if we look back on here, look at all these trades. All you have to do is look for that slope on the 20 and these entries. And then it turns around, right? And look, here's a perfect example here, right? Do we take this one, right? Here's the prior, a prior high here. We weren't there yet. Then we retest the 20. Look at this. You come back, you bounce off it, and boom, there it is. Now, in this case, you could say, hey, that's too far from the 20. And I wouldn't blame you. That's fine. Let it go. Wait till you get another setup. Wait till you get another setup. Let the setup come to you. All right? We're all different as traders. You have to understand what kind of trader you are, meaning what's your risk for tolerance and how tight do you want the criteria or not. But if you follow it the way I'm telling you, what you will find is you will have way more winners than losers, and your winners will be much bigger than your losing trades. And that's the kind of math you want to work with. Let me see if there's any other questions.
We do have one, actually, kind of. Sure. I can jump in a little bit. Jitendra wanted us to look at Nifty 50. You just did. So thank you for that.
Yeah.
SSD Gamer wanted to look at S&P 500 in YouTube.
Sure. Let's have a look. So here we're on the daily time frame. And right now, on Friday, it gave us this arrow downwards. But we certainly don't have slope supporting that move to the downside. So we'd have to look for a close below a prior low, which we're not quite there yet, or a successful retest of the 20. We don't have that either. So this is not a short we can take. Now, we can look at this chart and say we do have lower highs, right? From this high to this high was lower, and from this high to this high was lower. So we have a series of lower highs now. What we do not have are lower lows, right? This low to this low is higher. This low to this low is higher. So we have effectively a wedge. What this means, okay? And again, you don't have to overcomplicate this. You don't have to be a technician where you have to understand all these things. It's pretty basic. Is there a clear trend upward or downward? The answer is no, because we have a mix. We have lower highs and we have higher lows. So there's no clear trend right now. This in here is an area where you do not want to trade at all, period. You want to be out of this market. There'll be other charts with proper setups like in here. But right now there's no clear trend, so you want to wait for a trend to develop. And so, if we break below this trend line and a key low, then we can say we have lower highs and lower lows. At that point, you can start looking for shorts. We're not there right now, okay? But if you look at the S&P on a much higher time frame, okay, and I'll go to the monthly, again, what do we see here, all right? We do have a lower high, and we do have a higher low. So, again, there's no clear trend right now. So the market is at an area what we can call a gray zone, and we've got to wait for some clarity. So right now, I wouldn't be trading the S&P. I'd be out of the market here right now. What this means, let's say now that you go and you say, well, Apple is flashing a buy signal, but the S&P isn't in a bull market right now. It's not trending in line with Apple. So how do I do that? How do I treat that trade? Do I take Apple long or don't I? I would say yes, you can. What I would do though is I would reduce my size. So let's say that you normally put $2,000 into a trade. Maybe you only put 1,000 into it now. Again, this is being extremely conservative. That's the kind of trader I am. That's why I'm sharing this with you. You don't have to, but the more you eliminate risk out of the equation, the more successful you're going to be longer term with your trades. Any other questions, Jeff? Actually, you know what?
How do I find my mute button?
I know.
Let's see. There's been a lot of questions that I've answered about whether it's a 20 or an SMA or an EMA that you're using, and it's an SMA.
Yeah, it is.
Native says, I'm digging how easy this is being explained. So great job. And then looks like Alan in GoToWebinar wants to look at CCJ.
Sure. Actually, CCJ was a trade we just took. So we have a membership group where we meet with our members live 3 times a week for over an hour at a time on Zoom. We open our cameras, we share trade ideas and so on. And I also send out a nightly email to all my members with trade ideas. They're not recommendations. They are examples of what I would trade. So, I mean, if you want to follow along, you can. But for legal purposes, I will say they're not recommendations. They are trade ideas. What I look for are exactly what I've taught you here. That tight criteria that I look for, that conservative entry, and we give you examples of that. So this here was the most recent trade that on CCJ that we sent out on September 7th. And it has been a great trade for our group. The reason being is, again, let's look at the criteria, right? Here's an entry. We have the dot. Do we have slope? We have significant slope higher, right? Are we close enough to the 20? Yes, we are. When we look to our left, what do we see? Blank space. So what does that tell us? Not only is there a trend, but there's a ton of momentum. There's no obstacle overhead, right? So it doesn't mean it's again going to be a guaranteed winner. And please understand that if you're going to trade with this, what we're going to teach you as well is to have a full plan, meaning you need a money management plan to go along with this. Okay, when you see this, a trade this clean, it doesn't mean you go and put half your account in there or all your account in there, because it's not a guaranteed winner. It's not 100%. All right, you gotta trade smart, but the odds of success on a trade like this are extremely high. Okay, extremely high, and you can see. And when the market overall is trending strongly like that, it's a no-brainer. 2 weeks ago, we had 10 trade ideas we sent out. 9 were winners, 1 was a loser. And I'm not saying that to brag or to tell you that that's going to happen every week. It's not. There are going to be weeks where it's 1 winner and 9 losers. That's reality in this business. But when you keep your losses small and then you let your winners run like this, imagine you forget this entry. But if you just gotten here and added and added and added, where would you be right now on this trade, right? As opposed to, you enter here on this trade and you get stopped out here. So you have this size of a loss versus this kind of win. That's what we're talking about here. Now, quickly, I know we lost some time with the technical difficulties, but I'm running out of time. Let me show you what else this indicator or this add-on can do for you. If you go to the top left of your MetaStock platform, you click View and click on Expert Commentary. It's going to bring up this text box here. And it's also going to populate a little triangle here on the most recent candle, okay? And you can move that back with these arrows on the top of this little box here, or just click above one of those bars. Okay, but this will tell you a bit about myself, a bit about trading wins, and it's going to talk about victory. It's going to give you the degree of slope, etc. But more importantly, what this box does here is it kind of holds your hand through the life of the trade. So, for example, if I go and put that arrow over one of the candles that has an entry, you can see that suddenly on this box you have some green text. And again, everything is color coded in line with what you're seeing on the chart. So if this had to do with a short entry, a sell entry, it would be, the text would be red. In this case, it's long, so it's green. But it's telling you that the victory system is currently signaling a potential long entry opportunity. And then it goes on to explain that if you trade this with options, it kind of gives you an idea of what kind of option strike expiry, the kind of delta you're looking for to kind of go along with it. But more importantly, as the trade moves forward, so the next day, it starts to move our way. It gives us here an idea of how to trail your stop. So it gives you a stop level to enter in case you can't watch this. So if this is a daily time frame, say you have a full-time job, you're going to set your order the previous evening or early in the morning before the market opens and go to work, and you can't do anything about it. You're going to have your stop level in. Now, as the trade progresses, with every bar it moves, you'll notice that this moves with it. So every day you can just move your stop to the new level and trail it that way. If you have the luxury of being in front of your terminal and watching this, well, you just wait for the changing color. So this kind of holds your hand through it. It's very, very helpful. The other thing that's helpful is if you go to the top left, click the letter P here, your power console, go to the third tab on the left here, Explore. And what you want to do is these are all the explorations you can scan for. You want to go to the bottom where mine are, the Vora ones, because it's in alphabetical order, or just set them, move them to your favorites here, like I have done. And then, so select the ones you want to search for. And the reason why it has the word filtered here is Jeff and his team set up a scan that gives us a minimum slope on that 20. So it saves us even more time. Then go down here and select what you want to search for, okay? And if I go to the index constituents here, where I'm able to choose, say, the Dow 30, okay? The NASDAQ 100, let's say. We don't have a lot of time here, so that's what I'm going to search for. And then you go here and you select your time frame. So if you're trading on a 1 minute chart, you want to click 1 minute, weekly, and so on. I'm going to click on daily, and you can confirm what you're searching for here, and then just click Start Exploration. It's going to bring up this box, and there you go. We selected 125 charts. It's already completed it. There you go, that quick. And here we are. So there were nothing that I found on the Vora Victory filtered, which is the actual arrows. The re-entry are those dots, and there were a couple here, Johnson & Johnson and Lucid. You have these columns here. If you see a number 1 in either the short or the long, that's the kind of setup it is. So it's saying that both of these are short setups. It's giving us the degree of slope. Anything over 5 is considered a significant slope. So if this was a long entry, you'd see a positive 5 or higher. Since it's a short, you're going to see a negative 5 or higher. This is 6.2 and so on. So if we highlight this, I can just click Open Chart, and to the far right, I see it here. Okay, and now I can judge quickly what the slope is like, how close it is to the 20, whether there's any support down below, etc. And here's Lucid, and it's that quickly and easy to find trade setups. Okay, it really is. And then again, we send out 2 training classes with this, where we'll teach you how to compare one to the other. I wish we had more time. There's a lot more I'd like to say, but I'm going to hand it back to Jeff so he can tell you how to grab a copy, and I'll be happy to stick around for more questions if we have time.
I wish time always goes so fast during these events, doesn't it? We have tons of questions, though. And I think you've done a good job of showing the scanning and showing the symbols and all that kind of stuff. So let's go ahead, and you did talk a little bit about Nifty 50. Greg in the YouTube chat had a question about how you would recommend managing risk. And I gave him a couple of answers that, knowing you, I thought you would give. Are you interested in my answers?
Sure, I'd like to hear it.
All right, yeah. So knowing you, I would say that the things that you would say are that you would recommend never trading more than you can afford to lose. And two, that you would always recommend using a stop loss. Those are the two recommendations that I have, or that I gave in your voice. So what do you have to say about that?
So I'm going to quickly put some more specifics around that. What I try to do is I would say never put more than 5% of your account balance in any one trade, but your real goal as a trader is to get that down to 1%. So as you grow your account, you're dropping that percentage per trade, but it's still a big dollar amount once you grow your account. So you want to, regardless of your balance, never put any more than 5% in any one trade. That way, if it completely blows up on you and you lose the full amount, you still live to trade another day. And it's easy to make back a loss like that compared to a loss of, say, 50% or more. The other thing that I do to guard against a black swan event, some unexpected major, like a 9/11, something there's no way we could predict, but could really hurt us. For that reason, what I would do is I would only ever put no more than 50% of my account balance active in the market at any one time. So if I was using that 5% per trade, maximum I could have is 10 trades on at once. Okay, so half the account is in cash. And these days, you're actually earning interest, decent interest on that. But the whole point of that is to live to trade another day. But what you'll find, again, if you stick to these rules, is that you'll just, your winners will be bigger than your losers, and you'll just consistently grow that and hopefully get to the 1% mark very, very quickly. So it's not just a matter of following the entries and exits. It's a matter of having the proper money management plan that goes with it. Okay, so hope that helps.
All right. Another question that came in was actually, this one was from Greg. The other one, I didn't write down the name right. But Greg wanted to know, so scanning is awesome and easy in MetaStock. Do you have other things that you look at when you go through a scan? Let's say you have 5 candidates that come up. What are the kind of the key things that you look, like slope, support and resistance, those type of things? Can you kind of cover that for a second?
Absolutely. So in those 2 training classes that we give, that's what we spend most of the time on. And yes, slope is number 1. So if you have 2 trades, I'm going to go with the one that has greater slope. But it's not just that. The amount of support or resistance in the way, yes, that's another thing we compare big time. But we also go as far as looking at major chart patterns that you might see at the same time. A lot of times during turning points in the market, you might see a head and shoulders top, or, after a consolidation period, you may notice there's a big cup and handle type formation, something like that. We also go as far, this is how detailed we take it. We go as far as looking at the individual candle. All right. So for example, when you look at one candle, you want to really focus on where it opened and where it closed. The high and low, not as important, but the close is important. So the closer it closes to the high of that day or that week, whatever that time frame is, the higher the likelihood it's going to follow through in that same direction. So let's say we have a perfect setup, and I'm trying to find one here. Yeah, it's hard to find an example, but let's say we had a perfect slope like this, very sharp. We're near the 20. There's no support below. It looks like a perfect trade. But on that day, that candle, it went down here, but it closed near the high of that candle. I would not get in right away. I would mark the low of that candle. And if price broke that low, then I would enter. Otherwise, I would not. That's how far we take this. But we'll cover all of that for you in the training classes.
All right. And last question, just because we're simply out of time now.
Sure.
This has come up a lot, though, too. Tammy and Jitendra and quite a few people have said, can I use this on Forex? Can I use this on Indian stocks? Can I use this on ETFs? So that's been a question that's been very, very popular. Maybe you can talk about what methods or what instruments are recommended.
Sure, it really doesn't matter. And so, for example, I'll go to the Euro USD chart here. Do I have the right format? Sorry, I'm not a big Forex trader. So
EUR equals is all you need to do.
EUR equals, thank you. So there you go. You're going to see the exact same thing. The add-on works exactly the same way, regardless of the market, the time frame, etc. You can see recently here, there's a nice trade. It closed right near the low of the day. We had slope, etc., and off it went. Another re-entry here. So it really doesn't matter. For example, crude oil, right? If you want to trade commodities, futures, again, it's the same thing. Now, here's another example. This is why I wish we had more time. The more I see them, the more it comes to mind. See all this choppiness, right? This is an easy way to remove risk from your trading. When you see a chart like this, you run in the opposite direction. You don't want to trade this, okay? Think about this. Regardless of the victory strategy, any strategy you might use, you try to enter anywhere along here. What's most likely to happen is you're going to get stopped out. Why? Because of the volatility. Look at the size of these bars from high to low and how it's just back and forth, back and forth. If you carry a stop on any strategy within here, you're getting stopped out. This is what you want to avoid. You want nice, clean, orderly charts that have a strong trend with momentum. And if you look at this on a monthly or on a weekly, you can see that this period in here was much easier to trade. You look at it now, right? And although it is moving, or it was moving in that direction, look at the bars, a lot of back and forth. When you're in a strong, clean trend, all the bars are pretty much the same size, okay? It's very easy to read. So just another tidbit I wanted to share.
All right, thank you very much. Thank you, Vince. I really appreciate that. I concur with the comment in YouTube that said, I love how easily this is explained. You do a good job. Thank you very much. All right. And let me go ahead and kind of just talk a little bit about how to get that in MetaStock. Let me go ahead and kind of make myself the presenter here. And I'll just go ahead and show my screen. Here's a copy of this. I want to talk a little bit. Vince does a really good job of showing, like, you know, how the commentary works and how to do different things in MetaStock. We did have a question about how to just kind of apply the indicator, and I promised that I'd answer it. So it's easy enough to do. I've got an open chart of Meta here. We're not MetaStock, that's Facebook, but like here's the MetaStock. But if you want to apply that as an indicator and you kind of own the methodology, you notice we have all the buy and sell signals. All you really have to do is right click, you can apply a template. And if you come to the very bottom of the list, it's going to be under the V's. Go to the bottom for a victory right here. Just apply that. That'll apply the indicators, the buy signals, the sell signals, all that kind of stuff. If you want to see the commentary, Vince showed that, just go to View, Expert Commentary, and that's going to kind of display like all of the buys, the setups, everything like that. So there's for that question. So there you go. In terms of this particular add-on, this has been one of our best-selling MetaStock add-ons. We released it in 2020, actually, and it's designed kind of to really take advantage of the more highly volatile markets that we've had. It's got the detailed commentary that's in there, the expert alerts. I love the ability, and we'll talk about this all day, the ability for us to kind of just ignore noise and find a methodology that works. And, you know, Vince ran a scan and found 2 entries. Instead of like 127, he could just look at the ones that he's interested in. I love how easy it is to go in and say, okay, here's the S&P 500, what has a signal on it? So has that the ability to do that. And you can do that either for the filtered setups, which include the higher slopes and the lower slopes, or individually as well. And of course, add system testing. So what we do with this particular one, it's normally $19.97. As a summit offer here, what we're going to do is we're going to give it to you at $9.97 as a one-time cost. So that's a one-time purchase. You own it forever. Not only that, as soon as you order it, you're going to get a boot camp class that Vince recorded. Actually, you're going to get 2 of them. And he talks a lot about goes into really, really good detail. We did this over the course of a couple Saturdays. And goes into we recorded him live, but he goes into a lot of details about how to run scans, how to look at candidates, what else to look for, where to look for support and resistance, how to do stops. A lot of the questions you guys are answered are included in the training class that he recorded and the training classes that we're doing free. So you get both of those classes as part of the thing. We back it with a 30-day money-back guarantee. So great risk reward. You can try it. If it's helpful for you, you can get it. If you don't like it, you can just get a refund on it. So $9.97 is the price for that. If you haven't heard about MetaStock before today, or if you haven't tried MetaStock before, or if you're not using MetaStock and you want to try it out, I'm going to remind you, MetaStock's been rated #1 in its price category for 30 years in a row. And we'll give you a free trial to go with this. So 800-882-3040, metastock.com/saleschat. So, and then let me go ahead and go here. We are going to be doing a summit action bag today, which includes all of the add-ons that we're going to talk about today. The Steve Bigelow's, Vince Vora's Victory, 3S Code, some training we did with Oscar Carboni called Trend Lines and Training, the setup and timing triggers with Jake Bernstein, the 3 months of the Big Trend Toolkit. Normally all of that would be $47.37. Here at the event today, though, it's $2,237. So it's it's more than 50% off. So you can do that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So I know we're running just a little bit late. I do want to say thank you to Stocks and Commodities for sponsoring the event. They do a great job. If you want to get a free issue, metastock.com/traders summit. Now, we've had a couple of questions that I wanted to kind of talk a little bit. Satish says, I'm on and off and need to be on and off between work. Are you planning on sending the recording and links to the training and subscriptions? So, yes. Just so you know, it actually also, Meet asked about the recording earlier. Obviously, it's a full day event. We're going to be broadcasting for over 8 hours today. And some of you have to work. That's okay. What we are doing right now is we're actually simulcasting this to YouTube. So if you're watching this on YouTube, just keep the URL. You can bookmark it that you're currently on, because that's going to be live forever. If you're watching us on GoTo, today we're going to send you the YouTube link. And I'll just paste it real quick in the chat right here for you. That question. Again, thank you, Vince, for a great job. We appreciate that. Really, really great job. So our next guest today is Silas Peters. Silas is a friend of mine. He's been doing events with us for a number of years now. We love having Silas on. I like his pattern. He calls it the 1-2-3 setup. And I've also seen it called the M pattern or the W pattern. It's a great little pattern that he uses. It works really, really well inside of MetaStock. So you're welcome, Satish. So Silas, let's go ahead and bring you on here. How are you doing today?
Hey, Jeff, good. How are you? Can you hear me okay?
I can hear you. You sound, I can hear you excellently. You sound great. Let me go ahead and make you the presenter.
All right.
And then I'll make sure we can see your screen. Things are going pretty well. I know we're always running a little bit late. So.
All right. Can you see the screen here?
We can see it. We can hear you. And so okay. I'm going to get out of your way.
Okay, awesome. Thank you so much, Jeff and the MetaStock team. I had the privilege of presenting to their crowd a week or two ago. Always a really wonderful opportunity. So thanks again to Mr. Gibby, incredible host. I know you guys have a great lineup today. Appreciate you tuning in on a Monday. Hope everybody's bright-eyed, bushy-tailed. Let me know in the chat if you guys can see my screen. I know Jeff said he did. I just want to make sure you can hear me and see my screen before I start talking into a black hole. So I very much appreciate that. Let me get my slides situated, and we will indeed get rolling. All right, perfect. All right, so my name is Silas Peters. I'm founder, head trader of Trades Trending. It looks like everybody can hear me and see my screen. So I know we're running a bit behind, so I'm going to hopefully try and get you back on track. So let's go ahead and get started, not waste any time here. We first must take a moment to read the risk disclaimer that our attorneys and regulatory governing bodies require us to share. We all know past performance is not necessarily indicative of future results. Only risk capital should be used to trade. There is substantial risk of loss associated with trading, whether it's securities, options, futures, forex, crypto, and more. So with that being understood, let's get right into the brass tacks. I'm very excited to be sharing a unique strategy with you today. It's what I call my 15-minute trading blueprint. I've been using it for almost 20 years now to trade the following markets, and it continues to absolutely crush it. And the best thing about it is simplicity. It's a truly mechanical, stress-free, emotion-free trading method that can be applied literally on any market or time frame, and I'll show you multiple case studies and proof. Now, I want to tell you that what I'm going to share with you today is highly accurate. It works in all markets, all time frames. It's mechanical, and most importantly, it is simple, and it is perfect for small accounts. I've used this strategy with $2,000 accounts, $20,000 accounts, even 100,000 plus accounts. I've used it in every market situation. From the 2008 financial crisis, roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it. From scalping and intraday trading to swing trading for a few days to position trading for weeks and or months. And you can do this with small or large accounts. It can take as little as 15 minutes a week if you wish. Now, before we dive into all this, let me introduce myself, who I am. You should listen to me. Again, my name is Silas Peters. I'm a husband. I'm a proud father to these beautiful blonde-haired beauties in front of my alma mater at the University of Alabama. 3 days after I graduated, I sold my car, moved to the great city of Chicago, the old Windy City, and it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug and never really looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asia, and European sessions, primarily working with large block order flow for hedge funds, banks, commodity trading advisors. What does that mean? It means our desk was placing, executing, managing trades in the size of several hundred or thousand contracts. Multi-six and figure position sizes where a single tick meant $300,000, $500,000. It was not for the faint of heart. I've also been a part of building and managing several futures and brokerage equity firms. I worked as a private family office where we managed about $2.5 billion. Hold or have held these various futures and securities licenses. And then in 2016, I launched my publishing firm. It's here where we have developed a community with thousands of traders and investors that use the education and tools that I've developed over the years to help them become consistent and profitable. Now, let's talk about my journey. It wasn't always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. First step is obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money. In fact, a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account and several others, and what I like to call revenge trading. Who here can attest to what revenge trading is like? It's no good. And these were extremely humbling experiences. I almost gave up. I almost quit. Nothing seemed to work. I was always on the wrong side. But guess what got me back in the game? I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago, and I got back on track. I started banking wins again. I had gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I first started. So I went back to my roots, worked my process to find overall consistency. Now, enough about me. Let's talk about you. Does anybody's trading desk look like this? This is actually not my desk. This is a bad joke. I found this on the internet because I feel like it's the perception of what those on the outside looking in think this is what trading is about. That we're surrounded by dozens of monitors. We got Bloomberg, we got CNBC in the background. It's really not necessary. Now, my desk did look like this in Chicago for obvious reasons, but all this is just unhealthy on the eyeballs, and it really leads to paralysis analysis. Who here is a victim or has been a victim of paralysis analysis? Anyone affected by this? I'm raising my hand. I've been there, done that, got the t-shirt. And today we're going to try and simplify the process of trading. We know trading is not easy, but we can certainly simplify the process. So that is my agenda and promise to you today. We're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point, I'm going to ask you in this workshop, have I fulfilled my promise? But I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So let's talk about what I'm going to show you. I'm going to reveal a very simple mechanical strategy and setup that will help you identify this long trade in GE, followed by a short trade in GE. How about moves like this in Barnes Group? A very mechanical short trade here, very mechanical long trade here for 21 and 63%, respectively. Bank of America, short trades here, 4-hour chart in gold futures, long trade here, followed by short trade here. Day traders, 5-minute chart of the E-mini S&P. We had a long trade, followed by a short trade, followed by a short trade, followed by a long trade. This becomes a rinse and repeat process, regardless of the market, asset class, or time frame you wish to trade. Forex traders, daily chart of the Aussie yen, short trade for 150 pips, followed by 445 pip to the upside, followed by 160 pip to the downside. Now, with all these examples I just showed you, can it really be this easy? As I said, we know trading is not easy. It is not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you. I was sifting through hundreds of different strategies, system setups, you name it. I tried all kinds of stuff. Most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on price action, following one simple pattern, that's when it all started clicking. So if you're sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we'll be discussing today is the pattern. Who here has heard of the 1, 2, 3, also referred to as the 1, 2, 3 top or bottom? Let me see the chat. Probably a lot of you seen a lot of yeses, some no's. And this is one of the most fundamental technical patterns in the textbook. We're talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. So let's talk about this setup. A setup is price action based. And guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does all of the research. They look at maps, population counts, traffic patterns, competitive analysis, on and on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store, and they open one up across the street or down the block. They get the same result, with a lot less effort. Now, when we relate this to trading, we can let all of the large traders and institutions do all the research on which markets to buy or sell. But all we have to do is look at price action, which takes into account all their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, let's talk about the setup. The pattern is comprised of a low, a higher high, a higher low, and a break of that higher high in the case that we're going long. Same rules apply, but inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point, or anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends, and swings can be an indication of a change in trend, can also be found within a trading range. I'll stress it works extremely well when the pattern sets up at significant areas of support resistance, head and shoulders, tops and bottoms, and more. So let's get right into the basic mechanics. First, going to talk about the 1, 2, 3 bottom. Now, point 1 is the lowest low, which we find at support. And as we retrace higher and pull back, we get our number 2. As the market stops printing lower or higher lows, we pull up, we get a 1, 2, 3 bottom. With 1, 2, 3 bottoms, we are bullish. We are looking for that market to go up. We're looking to go long or buy that market. So we're either looking to buy the stock, buy call options, expecting that market to go higher. And we're looking for closes or breaks above the number 2. Now, when we look for 1, 2, 3 tops, it's the same rules, but only in inverse. We are looking to go short. We are bearish, looking to short that stock, buy put options, expecting that market to go lower. And so here we have the market pushing up. We find the highest peak, and once we retrace and pull back up, we get our number 2. And as we stop printing these lower highs and pull down, we have a 1, 2, 3 top pattern. We're looking to short on breaks or closes below the number 2. And one of the great things about these setups is you don't have to really worry about these first 2 legs here. It's not like you've got to be glued to your screen unless maybe you're scalping. All you have to do to cash in on the 1, 2, 3 setups is spot when it's about to go past the number 2 point. So let's get right into some chart examples because seeing is believing. And we're going to look at a 1, 2, 3 top pattern in the Aussie dollar, the 6A futures. And what I want you to focus on are the 1, 2, 3s. Now, in this example, we have a number 1 point. That's a 52-week high. We do not have to have a 52-week high or 52-week low, but for these example purposes, we're going to be using these highs and lows. We'll talk about ways later where you can dial that in to find more opportunities. So here you see price put in a 52-week high. That's a number 1. The market retraces, pulls back up, giving us our number 2. And as we stop printing these lower highs and pull down, we get our number 3. Price could have come all the way up here as long as we didn't take out the number 1 high. We have a 1, 2, 3 top. We're looking to short on breaks or closes below the number 2. You say, okay, that's great. I pretty much know the pattern. I know the secret sauce. What about the other important parts of the recipe? Like where's my risk? Where are my targets? All great questions. All things that we need in order to place a trade. We have a 1, 2, 3 top. Our initial risk should always initially go above the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2, measured down. So we measure from here to here and then down, and you'll see that's a 1-to-1 reward versus risk right off the bat. That's okay, but we can do better. It's very important to let the market materialize in our anticipated direction. So as the market starts breaking down and taking out support, where can we quickly move our stop to? Above the number 3 high. So we have quickly cut our risk by 50, 60, 70% in this example. The market then trades lower and meets our 225 tick or $2,200 profit target. Here we have a 1, 2, 3 top in Walmart. Daily chart of Walmart, we have a red number one circle. Why? That's a 52-week high. We have a 1, 2, 3 pattern. We already know where other traders are struggling to deal with. Well, where's my stop? Where's my target? Where am I getting in? We know we're looking to get short on breaks or closes below the number 2. We know initial risk is above the number 1 high. We know our target is the distance between the high of the 1 measured to the low of the 2, measured down, which is about $5 in this example. Market breaks down, hits our $5 profit objective. Let's look at 1, 2, 3 bottoms examples. Same setup, but only in inverse. So here we are on a 1, 2, 3 bottom, 15-minute chart of the E-mini S&P. 15-minute chart of the E-mini S&P. On an intraday chart, whether it's a 1-minute, 5-minute, 10-minute, does it make sense to look for 52-week highs or 52-week lows? No. So on an intraday chart, we're looking for what we call session highs and session lows. So if you're not familiar with futures, Forex, they trade virtually around the clock. So we're looking for new session highs and new session lows. So here we have a 1, 2, 3 bottom. This is a session low. Let's talk about a couple of entry methods. Couple of different entry methods are an aggressive entry working a buy stop, a tick or two above the number 2 high. We're trading to the trade. An alternative entry method that I prefer is either to wait for the market to come back and retest that breakout, or wait for what I call a second pass or a hook back above. So we break above the number 2, we come back down, we hook back up, and we're able to get long on that second confirmation entry. So a couple things are going to happen here. If you wait for that second pass, sometimes the market will bust up and out, go reach profit objective, and leave you at the train station. No worries. There's plenty of other opportunities. But sometimes the market will come up, will come back down, and then end up drifting lower, stopping you out. So this second pass confirmation can help prevent us from false entries. Let's look at another example here. This is a weekly chart of Apple. This is a hell way to catch some longer term position type moves. We have a 1, 2, 3 bottom. We have a double bottom, multi-week lows. The price comes and breaks above the number 2 on this large bullish candle, trades sideways for a few weeks, comes back and retests, hooks back above. That's our confirmation to get long. How? We buy Apple stock. We buy call options, call debit spreads, bull put credit spreads, whatever your flavor or style of trading may be. Now, I'm not going to promise you everything here. We're the Holy Grail. We're all big boys and girls. They don't all work. This is an example of a failed trade, probably one I took in my live account. We market traded higher, put in a new session high, 1, 2, 3 top. Aggressive traders could have shorted this initial breakdown here, or if you wait for the hook up and then the second pass back down, you're entering on the second move down. You're up by a couple points. If you sat on your hands and didn't do anything, you're stopped out above the number 1 high, or if you managed your risk, you're stopped out above the number 3 high as the market retraced higher. Guess what? We get a new trade signal. This high is greater than this high, so we get a new count. 1, 2, 3 top. The market trades lower and ends up being a profitable trade. Now, this is what I call a no trigger or voided trade. It's neither good, bad, nor ugly. It is what it is, and I'll tell you why I actually like these. So here we have price making lower lows, low, lower low, lower low. But I bet if we had an oscillator, an RSI, stochastics, MACD, likely making higher lows. That's what we call divergence. And that is something that we can help put odds on our side on an already profitable and high probability signal. So we take a look now. Let's talk about the trade management. Again, the confirmation of entry is on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies. I would say if you're trading one contract, whether it's one futures, whether it's one option, one share of stock, go for the distance between the 1 and 2 because it's uncanny how more often than not, price will often go tag that to a tick and then often reverse. Now, if you're trading multiple shares, multiple contracts, that's when I would say, hey, go take a third, 2/3, half of your position off at that distance between the 1 and 2, and then trail your stop, trail your position with whatever works for you. They come a dime a dozen, figure out what works best for you. Parsar, trend lines, trailing by 2-3 bar candles, figure out what works best for you until you get stopped out of the position. Now, up to this point, I've shown you this setup works on any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. I've also showed you that this works on any time frame, whether you trade on tick, 5, 10, hourly, daily, weekly, monthly charts, and more, and on any trading style. So let me know here in the chat, what is everybody's trading style? Are you a position trader? Are you a scalper, day swing, tick trader? What is everybody's trading style? Scalper, swing, day and swing, weekly options, position, swing, day, not sure. That's perfect. And the reason I always ask that, is because you have ultimately have to figure out what your bread and butter is. I'm not going to sit here and tell you this only works on a 5-minute chart of the NASDAQ or a weekly chart of Baidu, because it's not the case. It works on all time frames and asset classes. You figure out what works best for you, your situation, your schedule, your risk tolerance. These are some of the time frames that I like. Intraday basis, I like the 1 and 2. I like the 5 and 10. I love the hourly and 4 hour that can last anywhere from a day up to a few days. And of course, I love the daily and swing, the daily and weekly charts for swing trading. Now, up to this point, you've seen the proof. Now, let's talk about some real trade examples. Not that what I shared with you were fake examples. Those were real examples by all means. But let's look at some real examples we've utilized in some of our services. So let's take a look at this chart of crude oil. This is a daily chart of crude oil. And you guys and gals can read this over to the right. I'm going to look at the chart and work myself from left to right. So here we have a daily chart. We have a new red number 1 circle. Why? It's a 52-week high. We have a 1, 2, 3. So we've identified a 1, 2, 3 top pattern. And not only did we identify that, we've also identified, or we know what before we entered the trade. We know where our risk is. We know where our targets is. We know where we're getting in. We're looking to short on closes below the number 2, our risk above the swing high, and our target, the distance between the high of the 1 measured to the low of the 2 measured down. That quickly sells off, meets our $3 or $3,000 per contract price objective, and then we go sideways. I often get asked, Silas, does this work in sideways or consolidating markets? The answer is yes. You can see we have a 1, 2, 3 here, moves to the upside. That's great. That's good. I'm primarily looking for new weekly highs, new weekly lows, and we get that right here. This high is greater than this high. We start the count over. 1, 2, 3. We have 1, 2, 3, 5 days of retest. So if you are an end-of-day trader, you want to look at end-of-day charts, that's great. You have 4 or 5 days of opportunity to short this market. Not only did we see a high probability pattern in the 1, 2, 3 top that we've been discussing, but we're now here at a time of the year from a seasonal perspective where energy and crude oil in particular tend to trade to the downside. So that is what I call a perfect bearish in trading. We have a high probability technical pattern in the 1, 2, 3 top. We have a trend line break with bearish seasonality, and we reach our $4 or $4,000 per contract price objective. We end up trading down another $20 a barrel or $20,000 a contract. And all we're doing is trailing the market until we either get stopped out or we have a potential reversal. Here we have a potential 1, 2, 3 bottom here. We never take out the number 2. We actually take out the 1 low. We start the count over. 1, 2, 3 bottom. We break above the number 2. We reach our $5 per contract price objective. So I want you to remember this chart and the subsequent charts because I'll show you something really special here near the end. What about recent examples? Using the MetaStock platform, we have software that identifies the 1, 2, 3 pattern for us, giving our entry, risk, target 1 and target 2, trade 1, trade 2. Here we are in gold. 1, 2, 3 top pattern. We break below the number 2, reach our $4 profit objective. Here we have a new low. 1, 2, 3. We break above the number 2. We reach our $2 profit objective. Here's that sideways action. Here's a 1, 2, 3. Here's a 1, 2, 3. Trade them all day long if you want the activity. I'm looking for new highs, looking for new lows. We get just that. Here we have new lows. This is a potential 1, 2, 3. We break below that number 1, so we start to count over. 1, 2, 3. We break above the number 2. This is gold, by the way. This is actually GLD, the ETF. That's why it's so spotty. But gold futures, GLD, ETF, it doesn't matter. 1, 2, 3. We gap up. Boom, boom. We come back. We hook back above on the retest. That's our confirmation to get long gold. How? We buy gold futures, micros, minis, call options, sell bull put credit spreads, buy GLD ETF, or a myriad of other gold-related ETFs, okay? Recent examples. How about a $10,600 move to the downside, being able to identify these on autopilot? Incredible. Delta Airlines. This is becoming redundant by now. I'm just trying to hit the fact of how frequent these are. Here we are. 1, 2, 3 bottom, $4 move. 1, 2, 3 top. We gap down below the number 2. I personally don't trade those. I like to see a retest, but you could have aggressively bought put options, sold the stock, sold bear call spreads. We get another opportunity. 1, 2, 3, sell off below the number 2, get a small retest. We move $8 to the downside. 1, 2, 3 bottom. We break above, trade higher, come back, retest, and then we traded the upside. These happen all of the time on multiple markets in multiple time frames. Delta Airlines, check out MetaStock, giving us a long signal, giving us a long signal, giving us a long signal, giving us a short signal. It's happened over and over again, virtually takes the guesswork out of the trade. Canadian dollar versus Swiss franc, 4-hour chart. Multi-session low, 1, 2, 3, double bottom as well. Aggressive traders get long on the initial break, or you wait for the retest or hook back up. We reach our 70-pip profit objective. Oh, what do we do now? Well, we don't do anything. We sit here and we wait for a next signal. Potential 1, 2, nope. Potential 1, 2, nope. Potential 1, 2, nope. 1, 2, 3 top. We break down. We hook back up. We come back down. 40-pip profit objective. Canadian dollar versus Swiss franc. 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. They're printing over and over again. Day traders. See some of you asking about day trading, of course. It's a 5-minute chart of the NASDAQ. Session low, 1, 2, 3 bottom. We break above, we come down, we hook back up. There's your confirmation. We reach your 13-point profit objective. New session high, 1, 2, 3. We break down, go sideways, maybe have to pop some tums. We reach our 20-point profit objective. New session low, 1, 2, 3 bottom. We break above the number 2. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective in about 2 bars. 5-minute chart of the NASDAQ. Those asking if it works on tick charts, absolutely. So why are you here? Why are you here? You're here to learn a simple mechanical done-for-you strategy. This is the part where I ask you, Have I shown you enough proof? I don't know how to make it any simpler, easier, more mechanical. If there's 100 people in a room, we should have at least 99 people seeing the exact same thing. But wait, there's more. Remember the examples I just showed you, those case studies, gold, crude, Delta, NASDAQ. What if the strategy was automated? What if the strategy is plotted onto your chart for you? What if the trigger entries and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a bidding setup? I don't know about you, but I'd say that'd be pretty freaking amazing. Well, if you recall from those case studies we just went through, take a look at what we're able to do with this pattern. Crude oil example, 1, 2, 3 top, 1, 2, 3 top, 1, 2, 3 bottom, as I showed you on MetaStock earlier. What are all these arrows and these colors? Well, you're smart boys and girls. I'm sure you've already figured out. The green is our number 1, the red is our number 2, the blue is our number 3, 1, 2, 3. When we get a break below the number 2 or a break above the number 2, we get a chevron print. That's waving at us saying, hey, we've broken below the number 2, we've broken above the number 2, we have a potential signal. Once that happens, we get a blue line, which is our entry or breakout level. Our red line is our risk. Our green line, lime green line is TP1. Our dark green line is TP2. And then we start getting number 1s because the market, or green arrows, because the market is making new lows. New lows, new lows, new lows, new lows, new lows. We never take out the number 2, never take out the number 2. Finally take out the number 2. These are all non-repainting. So you apply this on your favorite chart of choice, your time frame of choice, and get as many signals as you wish. Delta Airlines, long, 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 or short, long, does not matter what market or what time frame. 5-minute chart of the NASDAQ. Here we have a 1, 2, 3 top, hit TP1, hit TP2 to the tick. TP2 happens to be a new session low. We start to count over. 1, 2, 3 bottom. Market trades up, comes down, hooks back above. We hit TP1. Almost hit TP2. It's close enough for government work. You shouldn't lost any money. We make a new session low. This low, lower than that low. We have a 1, 2, 3. Market just nips its little head there above the number 2. We come down, we hook back up. We hit TP1. Notice as we're working to hit TP2, we start to get new session highs. That clues us in that we may need to get ready to reverse and short the market. We actually hit TP2. We have a 1, 2, 3 top. We break down. We come up. We hook back down. We hit TP1, hit TP2, and we start a new 1, 2, 3 bottom count. So is this trading for you? Only you and you only can answer that. If you're new to trading, new to the markets, and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, just want to simplify your process. Maybe you're already a successful trader. That's awesome. This can be another strategy to help you with confirmations, or a specific step-by-step plan and want to avoid learning this on your own. This is something that you can do, even part-time. Even part-time, when I first started my trading journey, I didn't have the luxury, if you want to call it that, to look at charts intraday. I looked at charts at the end of the day. I looked at daily charts. I looked at weekly charts. I looked at charts in the evening. I looked at charts in the morning. Placed my trades, let it do its thing because I trusted the process. Now, these are some recent case studies that you'll have access to. You'll have the ability like this. Who can identify these using software? Letting the software do the work. Plot the market for you. Plot your entry, plot your target, plot your risk. Who can come in here and buy Cardinal Health? Who can sell bull put credit spreads? Who can buy call options? How about Google, identifying shorts here in Google? Another short in Google, buying puts, selling bear call spreads. Canadian dollar, if you trade Forex futures, currency futures, or even the Forex markets. 233 tick chart on the E-mini S&P if you want many opportunities a day. Now, why do all the work when we can let technology do the work for us? These are scanners we had developed to locate 1, 2, 3 tops, 1, 2, 3 bottoms in your watch list of choice. What would take days, hours, maybe weeks scan through multiple assets can be done now with the click of a button. MetaTrader 8, Wealth Charts, Trading View, and even MetaTrader 4. We've had indicators, the 3S code indicator and scanner built for these following platforms. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me a process. I'm letting technology scan the markets for me, locating the setup, going to my platform for entry, and then I'm managing that trade through the exit. You can start doing so today with the 3S code. So here is the offer you simply cannot refuse. Starting today for the first 25 of this workshop special, you're going to get access to the 3S code. 3S code indicator, 3S code scanner, 3S code optimizer, and access to my weekly strategy and scan sessions, plus access to my private Telegram room. You're also going to get my 25 top option strategy guide, my chart pattern principle trading guide, and access to all of the quick start guides so you can get started immediately. We're offering this today, first 25, a one-time lifetime fee of $397. Go to metastock.com/code. I just put that into the chat window for you. You can also call 1-800-882-3040 if you'd like assistance ordering over the phone or if you have additional questions. Now, I want to make sure it's crystal clear. You're getting access through the following platforms. You're getting access to the indicator and scanner for MetaStock, Thinkorswim, TradeStation, NinjaTrader 8, MetaTrader 4 Wealth Charts, and the indicator for TradingView. We do not require any type of licenses or restrictions. You're going to get access to the indicator for all platforms inside of your members area. You're also going to get access to my weekly strategy and scan sessions. These are held on every Thursday at 11 a.m. Eastern. They're all recorded, archived, put into the member area for your viewing convenience. This is where we talk about setups, scans, day trading, swing trading, using options, and looking at real opportunities each and every week. Now, I do want to make sure it's crystal clear what you're getting here. With the indicator and scanner, you're getting a visual plot of the 1, 2, 3 top and bottom reversal areas that include entry, exit, stop, targets. Settings are customizable. If you don't like red, you want hot pink. If you don't want arrows, you want squares. You can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both. You can scan for intraday setups, swing setups, or position setups, or all of the above if you wish to do so. Now, you're also going to get access to the 3S code optimizer. This is where you can take the mechanical 1, 2, 3 top and bottom strategy to create and run multiple back tests across different inputs and settings to find the best optimization parameters that fit your trading style. So here's what the optimizer looks in Thinkorswim. See, I'm doing this here on crude oil. It is on TradingView, a 4-hour chart of the British pound, TradeStation, as well as NinjaTrader. And I'm working with Jeff and the team at MetaStock to build this out over on MetaStock. Now, with the 3S code package, I'm also throwing in additional bonuses to make this an absolute no-brainer. This Chart Pattern Principle Trading Manual and Guide will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. We're including bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern, and much, much more. You're also going to get access to my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using the 3S code strategy. You're also going to get access to my private Telegram room channel. Every day, every week, I'm sharing ideas, analysis across stocks, ETFs, indices, futures, currency markets, intraday setups, daily, weekly, and much more. We have opportunity after opportunity after opportunity each and every day. Here are some unsolicited testimonials. These come in all the time. I don't ask for them, but I'm extremely humbled and pleased in the way that these folks and students are having success is because they're taking action. You're not going to see results if you do not take action. So who's here is ready to get started? Who is ready to get started? I'm going to share the offer once again, guys, and then I'm going to take a moment and answer everybody's questions. So you're going to get the 3S code indicator and scanner suite for all the platforms I listed, access to our weekly strategy and scan sessions, access to our private Telegram room, and all of the bonuses I just mentioned. So I'm going to take a swig here and start answering some questions. Is this an auto renew? This is not an auto renew. This is a one-time payment. You get access for life, including any other enhancements, other features we may add, and more. Can you use it to trade options? Yes, you can. So the way that I'll do it, when I showed you the examples, if we're looking for a 1, 2, 3 top, I'm looking to sell bear call spreads and or buy put options. I like to sell credit spreads personally. On futures contracts, I would just sell the futures. As far as long positions, you can obviously buy call options or sell bull put credit spreads, depending on what you like to do. How do you get access to MetaStock once you purchase? So you'll get a notification from our side as well as MetaStock sides, and you'll be granted access. You can also reach out to MetaStock's team at 1-800-882-3040. How many setups per day? That's an impossible question to answer. It depends on what market you're looking at and what time frame. If you're looking at a tick chart versus somebody looking at a 15-minute chart, obviously you're going to get a different number of signals. Can I explain what the line? Yeah, so the entry is on a break below the number 2 point for a short or a break above the number 2 point for a long. So we're waiting for the pattern to form, and depending on how aggressive you are, you can take that initial break, wait for the market to kind of confirm via a retest or a hook back above or below that number 2. We have training manuals, guides inside the member area to help you get started using additional confluences and much more. Yeah, it is a reversal pattern. How long did it? Yeah, go ahead.
I did have a question coming in from YouTube.
Okay.
If that's okay. Can I break in?
Yeah.
Okay. SSD Gamer wants to know which is the best markets to trade.
That's really a difficult question to ask because there are people out there that are trading stocks, people trading futures, currencies. It works on any market because price is price at the end of the day, right? It doesn't really matter if we were trading, tulips or tea leaves. Now, with that being said, I would focus on liquid markets. I personally don't trade penny stocks. I don't trade other thin markets. So if you trade futures, I stick to really the majors on an intraday basis. The four indices, bonds, gold, crude oil. But I will look at daily charts on about 30, 35 futures markets and about 30 plus currency markets. And then I use this to swing trade any stock or ETF that comes up on my scanner watch list. I don't really care what it is. Is this system mainly for day trading? No, absolutely not. As I said earlier, in the beginning, I was working a corporate job. I didn't have the time to sit here and look at a tick chart or a 5-minute chart. And it was probably the best thing that could have ever happened to me. I only could look at end-of-day charts in the evening. And I would find these patterns. And remember, I was doing all this by hand. I was saying, oh, that's a 1, that's a 2, that's a 3. Let me measure from here to here. I think that's going to be $4.38. Let me subtract that. There's my target. Here's my risk. I would place that trade, and I might be in that trade for a couple of days, might be in that trade for a couple of weeks. I was trading off of daily and weekly charts. So the question is, no, it's not just for day trading. Does it work on an intraday chart? Absolutely, and it's very accurate. Does it work on daily and weekly charts for swing trading, hourly charts, 4-hour charts? Yes, it does. It's very accurate. What time frame was it in the graphs? I was looking at different time frames. Seen it's probably the daily chart, but it really doesn't matter. It doesn't matter. We could have been looking at a 1-minute chart or a monthly chart. The pattern is the same, and that is what is the beauty of this pattern or this system, is because we're trading price action at the end of the day, and price action is universal. So that is what is so great about this, as well as all the other price action systems that I trade. Jeff, I think I got you caught up, man. Appreciate the opportunity to come in and everybody. I want to thank the new students and the new members. A lot of you joined. Everybody else, enjoy the rest of the summit. It's going to be a good one.
All right. Jay wanted a couple questions. Jay wanted to see a demo. I'm going to show it real quick because it's really easy to use in MetaStock. So I'll show that real quick. Silas, before we let you go, thanks for coming in. I really appreciate it. HLAC says he just signed up. So thank you for signing up, HLAC. We'll see you right now. So, all right.
Thanks, Jeff.
Cool. Go ahead and do this. Okay. And let me just spend a couple minutes on actually showing this because I've got it ready to go in MetaStock. And it's, like I said, it's super easy to use. So right here, we were looking at Meta earlier. I just applied the template for Meta. And to do that, you just basically, if you just right click. Ooh, I just got a full screen image of myself. Will you guys confirm that you can see my screen? And if you can't, just let me know. Greg, you can chime in if you can't see my screen. But I've just applied the template. So if I go right here, okay, thank you. And apply template, it's going to be called 3S code. And that's all you do. I've just added this template to the chart. And you can see by doing that, it's going to label all the patterns for you. So you've got your one position here. This happened a little bit earlier. Going into this year, Meta had an incredible upward move. A little bit earlier, you had your one position here. You set up a top, set up your position 2 and your position 3. These are automatically labeled. A few days later, that penetrated, getting you into that short position. And right here, you've got your stop loss on the chart. You've got your initial target clearly identified automatically on the chart for you. And then you've got your second target, and both of those, all of those hit. So both of those targets have actually kind of confirmed and shown up. If I wanted to take a look at the commentary and show you how that worked during the trade, I could just go to the View Expert Commentary. And it's basically going to, when I initially load it in here, it's going to give you this green arrow at the very end. What I'm going to do is I'm actually going to kind of go back to the setup bar. So I can show you exactly what happened on the setup bar if I just move that triangle over. And let's go ahead and make this a little bit bigger just so you can kind of read along with me. Okay, a little bigger, a little bigger. So again, we're looking at this day. Okay, so 1 has happened, 2 has happened, 3 has happened, and today we're penetrating that low. And this is kind of what it would tell us on this particular day. And I'm looking at a daily chart, but you can apply this to any template or any time frame that you want. So right now here, initially, we're going to say the new prices has closed below the break line, triggering an entry signal. Here's your initial target, 293.66. Your second target is 277.39. And it's that easy. It just kind of tells you everything. You can look at the chart and see where those levels are. You can look at the thing. Goes into some detail in terms of exactly how that happened. And I love the commentary because it does allow you to really keep track of what's going on a chart. And it's like going to tell you as we go in through time where the stop losses are and kind of like what you're looking for, how active the trade is. So the other thing I want to show you really, really quickly, because I do think it's one of the most valuable ways MetaStock works with 3S code, is how to scan. So if I come in here to our Power Console and I just go into the scanner, I've got it ready to show you. I've got the Explorer. I've got, there are a couple of scans. There's long position management. If I run that scan, it's going to tell you everything that's in a long trade right now, okay? There's long setup, so that'll look for triggers to the long side that have set up but haven't triggered, okay? And then the long signal, and those are the ones that have set up and are currently on the current bar signaling. So I've got all 3 of those selected. I may not let it run all the way through just for time, but I can come in here now that I've got those selected, and I can go down in here and say, well, okay, let me run that against the Dow Industrials right here, okay? Let me look at that against the S&P 500, okay? And just very, very easily, I can scan just about any market that I want. But I'll go ahead and leave it there for now. I'll go ahead and start the scan. As I kind of talk about it, we've had a lot of people asking, can I use this in India? Or can I use this in ETFs? Can I use this in the futures market? Can I use this? We get all of our data from Refinitiv. We cover just about 300 global exchanges. The amount of information you can scan and have access to with our platform is just incredible. There's hundreds of thousands of issues that are available. So you're probably, if you're here in the US and you're looking at US stocks and options like me, you probably just want the US stocks and optionable list. And there is a list of just optionable stocks. But if you're joining us from India, like you were, Praveet, I think it was earlier, and you want to use this, you'd be able to use this in any market that you want. London, Australia, India, Singapore, Malaysia, you name it, any market that you're really interested in, you're going to be able to do this. So I did run through that whole thing. If I was looking for signals today, I don't have any. So if that was kind of I could expand out my scan, but if I'm looking for things that have just triggered today, there's no long setups, okay? And so that would be the extent of the work. And I don't have to look at 500, 600 charts to look at that. Long setups, we also had none today. So if I'm looking at stocks that have a position today, and I think I might, this is a shared machine, so I actually set up the scan a little bit wrong. I needed to use all of the same selected instruments for all scans. But I love the ability to scan because it allows me to focus on just those stocks that have an opportunity, just those instruments that have an opportunity, allows me to ignore everything else. So Jay, that's probably what I can show you today just because of time. But hopefully that's helpful. We do have more full demos. If you have any questions, feel free to get in touch with us. What I also like about 3S Code is everything's really, really clear in terms of what is actually identified. When you get it on a chart, you're going to have the 1, 2, 3. So there's no question about where he's pointing out that they're drawn for you. You're going to have your stop loss level. You're going to have your entry level and your 2 targets. Those are also drawn out. The other thing I really like, you'll have that expert commentary, the scanning, is what he actually includes with it. So not only do you just get it for MetaStock, if you're using other platforms, he includes all of the access to the other platforms for free. if we improve it, and he's always working on it, we're working on the change now, the newer versions are going to be available to you at no additional cost as well. He includes his Telegram room, which includes the weekly setups. He includes the 2 courses, the option strategy guide. He does really, really good support, and so do we. So if you ever have any questions about how to run it, you can contact either his support. Our support desk will be more than happy to help you. And it also includes his monthly strategy scan session. And that is a one-time cost. So you pay for it one time and you own it forever. So normally it's $497. Here, the Labor Day special. I actually didn't update this. We actually did a webinar, as he said, just a couple of weeks ago during Labor Day. But the special is the same. So it's $397. It's going to give you the access to the platform, all of the training, everything else as a one-time cost. 30-day money-back guarantee. You can do that at metastock.com/code. You can do it at metastock.com/saleschat, or you can give us a call at 800-882-3040. AgeLock, thank you for signing up. Sad Tech Gamer. Oh, SSD Gamer. I read that as Sad Gamer, and it makes me remember when I'm playing online with people. Yes, it does work in Africa, though. Thank you for that. So there you go. It is included, again, with our Summit Action Bag. That includes Steve Bigelow's Candle Profit System, Vince Vora's Victory Program, Silas Peters' 3S Code, some training we did a few years ago on trend lines and breakouts. Jake Bernstein's going to be coming in a minute. He's going to talk about the JBXC. But we have a really cool package with him called Setup and Timing Triggers. You'll also get Price Headley's Big Trend Toolkit, all as part of that. So, and 3 months of a premium learning service called LearnMetaStock.com. The total price for everything that we're talking about today is normally $47.37. Here at the event, it's going to be $22.37, and most of it's available as a money-back guarantee. So, metastock.com/summit deal, 800-882-3040, or if you want more questions, or if you have questions, you want to talk to somebody about it, metastock.com/saleschat. So it's a great package. The people that are presenting today are some really, really good speakers. And these are some of our most popular products. So $22.37, a savings of more than 50%, 800-882-3040, metastock.com/summit deal, or metastock.com/saleschat. So Tim says, can I use that on TradingView? Yes, you can. And MetaTrader, yes. And it's included. So if you buy it for MetaStock, you're buying it for every platform. You're buying all the updates, all of that kind of stuff. So get in touch with us, Tim. We can definitely hook you up with it. So I do want to say thank you to Stocks and Commodities Magazine. Now, if you're watching us on YouTube, thanks. Good to see you. If you haven't registered for the event, go to metastock.com/traders-summit. When you go up there, what you can do is you can subscribe to, or you can register for today's events. All of the presenters are giving away pretty cool bonuses, and you can also get a free issue of Stocks and Commodities Magazine. I want to say thank you to Stocks and Commodities Magazine for sponsoring the event. They've been a long-term supporter of our events. They've done them ever since we started them like 10 years ago. And so thank you again, Stocks and Commodities, for supporting the events today. So our next speaker is Marina. Marina has spoken a number of times. What I like about Marina, she likes to talk about day trading. She's pretty fun, and her in her bio, it says she likes to help people day trade with confidence and ease. And I think that's a great way to actually talk about it. She'll come in, she'll talk, she'll make things approachable. She's very, very, it's great to listen to her. I really, really like having her on here. So Marina, welcome to the summit.
Hi, how are you? Can you hear me?
I can hear you, yeah. I'm gonna make you presenter here, and then I'm gonna tell you when I can see your screen. And then I'm gonna get out of your way.
Hi. Okay, let me just share my screen here. There we go. And I think you guys are able to see my video as well. I just wanted to say hello and show you that there's a person here. And thank you so much, Jeffrey, for having me. I love coming to these MetaStock trade events. I remember, I think when you first began them, like a couple of years back, right? Or is it 4 years now? I can't believe how fast time is flying.
10 years.
Oh, 10 years. So me and you have been probably, I think, hanging out. Well, virtually.
Yeah, no, I think
4 years.
Yeah, we love having you on too. You always do such a great job. So.
Well, thank you so much. And I just wanted to say hello. And I am going to turn the video off because I know that could be a little bit distracting, so that we have my screen. And it looks like my screen is up and running. And I do really love questions. So you guys, please send me all the questions that you guys have, because it's all about that, right? I know that you guys have taken your time out to be here today. And a lot of times it's usually because, you know, you want to learn something new or you're struggling with something. So I'm here to be able to totally help you get past that as well. So let's dive in. I am Marina, the Trader Chick, and this is me. How are you all today? I'm really, really grateful that you guys are all here, because today what I want to talk about is I want to get into the foundation and the stuff that a lot of times is overlooked. A good analogy that I like to use is that to put in windows, you need to have a wall built in. And a lot of times, especially in the financial markets where there's zero barrier to entry, we just start to put in those windows and there's no walls supporting it and they just keep on crashing, right? And it's mainly because we're just not focusing on that foundation. So today I want to build those bricks for you, a foundation, so that when you are putting in your windows, basically when you are taking your trades, they're not going to be collapsing. You're going to have a really solid foundation and understanding of what you are looking at, what you are understanding. All right, so before we jump in, there's always a real human behind each chart. Remember that, guys. I know that sometimes it's easy to just sit there and look at only at the technical analysis, but you have to remember that we are all bringing in our own filters, our own humanity, right? And that is super important. So just remember, you are a person, and that's the whole point. Like, that's the joy of it all. So I am actually Marina. I am an expat. I've been actually an expat for over 20 years. We've been living in Central America, first Costa Rica, then we lived in Guatemala for almost 15 years, and we just recently moved to Barcelona, Spain, which, by the way, is absolutely phenomenal. And I get a lot of people who are really interested in becoming expats. Since I've done it so many times, I'm happy to help you. You could just go to my website, thetraderchick.com, and contact me there. And I'm happy to talk to you guys about how to become an expat in different countries. And it does not matter for trading whatsoever. I know a lot of people have tax concerns. So I'm happy to just give you some pointers on that. Completely free. It's all fun, because I think everyone could really benefit from living in another country. But that's a whole other thing, right? And the other thing I really want to focus on is that before I became a day trader, excuse me, I was a fitness instructor and a travel writer. Why is that important? Because a lot of times people believe that or think that you have to have like a math background, an economic background, a financial background, or even an engineering background. And you don't. You don't need any of that stuff. That's the beauty of day trading. Anyone can do it. And I am trilingual. The main reason why I bring this up is because when we are looking at the financial markets, they are speaking to us a certain language. And when I recognized that, it completely changed my entire way of looking. And I've started to become successful just from that alone. And just seeing that and if any of you have learned a second or third language later in your life, like I was born in the Soviet Union, so Russian is my mother tongue, but I moved to the US when I was quite young. So I never actually learned English as much as I just learned to speak, continuing speaking. However, Spanish, I learned when I was in my 20s, and that's a whole other process, right? And I was struggling for years with my trading. But when I finally realized, wait, let me look at the markets the way I learned Spanish, boom, everything changed, right? You cannot walk into a room with all native speaking Spanish people and who don't speak a word of your personal language and think that you're going to be able to communicate with them. It's not possible. Yet people love to just jump into the markets and they don't even have the basics of hola, mi nombre es Marina kind of a thing, right? And then they're wondering, why am I losing so much money? So when you recognize that you have to learn the basic language, the basic understanding, I can guarantee you it will completely change everything. And the coolest thing of all about trading is that we could do it from anywhere in the world. And before COVID, I used to do quite a lot of in-person summits as well. I don't know if any of you guys have met me. I've met quite a few people doing them. But since COVID, I obviously now prefer the summits that are virtual simply because there's so many people from all over the world that could join in. Now, before I hop in, I have the entire presentation here for you for free so that you can follow along, because I know that it could be quite a lot in the next 45 minutes. So please go here, makingofadaytrader.com, makingofadaytrader.com. Go here and you guys can get the entire presentation so you can follow along. All right, so let's get to the fun stuff. What in the world is day trading and why is it not investing? First and foremost, this is so important to understand that I get a lot of time whenever I say, oh, I'm a day trader, people are like, oh, I really want to learn how to invest. And I always say, you know, we day trade to invest because it's quite different. Because unlike investing, when you have a robust portfolio, day trading, you really do not want to diversify. Why is that? Imagine your child came to you and they're like, hey, mama, hey, papa, I want to learn how to play a musical instrument. And you're like, super, what do you want to play? And they're like, I want to learn how to play the piano, the flute, the drums, and the violin. And you're looking at them and you're like, you know, those are super different. Why don't you focus on the one, master that, and then you can move on to the next, right? Because if you don't master that one, you won't master any. And it's interesting, first of all, I don't know if any you guys know that, but financial markets, when you are focusing on things to trade or, you know, look at specifically, they're actually called instruments. So that's why I use this musical analogy. And interestingly enough, I get a lot of students that come to me and they're like, oh, I want to learn how to trade this, this, and this. And then I'm like, let's do this. Let's focus on just learning how to trade this one thing. In my particular case, I love the E-minis, which is the commodity, the futures market. And I'm like, let's just focus on that one. And once you really learn and you are making money, then we'll move on to the next. And I have to say, over 90% of the people, once they learn how to do one specific instrument and are consistently profitable, they don't even bother moving on to the others. So this is something that's really, really important. And if you could get that one thing out of today, focus on that one, master that one, and then you can move on. The other thing about investing and day trading is day traders, we don't really care if the market's going up or down, right? We don't really care that much about the company neither. For instance, if I'm investing in Apple, I really care about their smart cars, their smart TVs, their next smartphones, right? But if I'm day trading, I don't care what's going to happen in 3 months. I need to know what's going on with my technical analysis right this minute. And that's the thing, is that we can make as much money when the markets are tanking as much as when they are going up. That's the beauty of day trading, that we can do both markets, okay? Now, the thing is with day trading is that there are a lot of myths around day trading, and myths are literally limiting beliefs. Right? So what is a limiting belief? A lot of times it's just an obstacle that's keeping you from really doing what you got to do. And I want to bust some of these, because once you bust through these obstacles, you'll be able to flourish and kind of take it to the next level. First and foremost, we all heard that it's too risky. Day trading is gambling. Okay, let's do this. I want you guys to imagine this. Imagine you want to become a pilot. Are you going to go into your living room with your entire family in your living room and be like, hey, I want to be a pilot. Let's go, guys. Hop in my plane and we're going to take off. Sounds crazy, right? It's like a kamikaze mission, right? Because chances are you might not even be able to turn that plane on and take off, but let's pretend that you do take off. Imagine the landing if you have never had any training. Now, it's completely understandable that when somebody wants to be a pilot, they go to pilot school, they put in simulation hours. There's all this training. Yet, like I mentioned before, there is zero barrier to entry when it comes to the financial markets. Imagine the same thing, right? Your money is the money that takes care of your family. Do you want to just be putting it in the market without even understanding anything that's going on? Once you learn a strategy, once you learn what the market is telling you, the risk becomes quite minimal. And even more so, you will let the market know how much you want to risk. So basically, there's no gamble. Okay? Really important to understand that it's a myth. Okay? And that's why 95% of the people, quote unquote, who say they're traders quit and say it's risky, because they don't ever take the time to actually learn what is going on. The other big myth is that you need $25,000 to get started. Totally untrue. Okay, $25,000 you need if you're doing equities, if you want a margin account. You do not need a margin account. And I'm going to really go into margin accounts in just a little bit when I talk about brokers, because this is such a huge myth. Look, the beauty of today is that we can start with any size account. You can start with 100, 500, 1,000. You do not need a lot of money to get started day trading today. Okay, that is important. And like I mentioned earlier, you don't need to have a math background or a financial background. I don't ever look at math. I don't ever look at the numbers. The only time I would ever maybe think of numbers is when I'm doing on a calculator, you know, to do my profits and my losses. There's absolutely no reason for it, because technical analysis with that, there's no reason for that. Okay, so you don't need to worry about that. And that's anybody could become a day trader. The other thing is that it's stressful and chaotic. Well, if you've got this going on, here's the reality, guys. This all looks romantic and fancy and blah, 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 but it's completely unsustainable for a human eye to look at this many things going on at once. It's completely impossible. You might be able to sustain it for several months. I don't even think anybody could do more than that, right? We're just not programmed that way. So whenever you see people telling you that they have this going on, I can guarantee you they are not successful at that at all. It's not possible to keep up with this. Okay. The other thing is about buying all these softwares and indicators and algorithms. Look, when you have a really good, strong platform, and let me tell you, MetaStock right now, I know for a fact, is an incredible platform. It gives you all that you need right there. And that's the beauty of it. That's why it's really important to be able to get a good platform. And then they have the indicators and all these other things that are already part of it. You do not need to go chasing the most fancy, schmancy, bright lights thing. Okay, focus on what you have and you will be able to do amazing. The other thing is with this research and news, I cannot tell you the amount of times I hear, especially equities traders, they're up at 4:30 in the morning doing all this research. Then they're sitting for 8 hours in front of their charts. Then they're sitting in afterwards and doing all this other research. They're completely burning themselves out. There's very little research that's really happening, because the majority of the people that are telling you these research, they're all, they all have an agenda going on. Again, if you understand technical analysis, you don't need to focus on anything else. You don't need to worry about doing all this market research. You'll just be looking at the chart, and the chart will be speaking to you directly. Another thing that I would say pretty much every beginner trader, and I was 100% part of this bucket, I guess you could say, that we all do over trading. It's actually called trigger happy, and it truly is a thing. I remember there were times when I was trading for like 1.5 to 2 hour sessions and had like 40 to 50 trades. It was absolutely insane. It didn't matter if I was winning. I was just getting wiped out on the commissions alone. Guys, just think of big game hunters, okay? I don't condone big game hunting at all, but here's the reality. When a big game hunter goes out for the day, are they gonna shoot a prairie mouse or a prairie dog or whatever they're called, those little things? No, they are patiently waiting for that big game. Pro traders take between 1 to 3 really solid, profitable trades. And that comes with having a strategy. So stop this over trading. I have this thing that with my students after they've already learned a strategy is a challenge to only take 1 trade per day. It's amazing the amount of bad trades you could filter out when you're only focusing on that one trade that you could take per day. Because the most radical way to trade is truly conservatively, and small profits daily will bring you those high profits yearly, because aggressive trading never works. We hear about those big aggressive moves, but we never hear about the other side of the coin, which is the big aggressive losses as well. Okay, and I coined this term myself, FOMAT, fear of missing a trade. This is such a thing, guys. Fear of missing a trade. Can I tell you the amount of times I see people that see a thing, they're like, oh my goodness, I just missed a trade, and they start to chase the trade. And of course, when you're chasing the trade, you become emotional, your ego starts to win out, and it just becomes a disaster. Here's the thing. Here's the secret to all of this. There is always another trade coming. All right, repeat that again. There is always another trade coming. So don't chase trades. Don't fear out that you're missing a trade. You're not. All right, let's talk about what to trade. Like I mentioned earlier, if you can focus on that one thing, you'll master and you will be amazing. But what is it that we could trade? Well, for one thing, Forex, right? We all know about Forex, the foreign exchange market. And that means really is two currencies, right? A pair, kind of. It's a pair. One country against the other. And again, you don't want to go into too many coins or too many couples, right? Pairs, because then you're going to have to learn too much. It's going to start to get out of control. At most, I recommend maybe 2 pairs. But the more you focus on even the one, that could bring you the bigger profits. Equities. I love it when I ask people, so what are you trading? And they're like, oh, I trade stocks or equities. And I'm like, really? There's 5,000 stocks in the US market alone. That is terrible, right? So again, who is successful in trading equities? Some people love to trade sectors like pharmaceuticals or entertainment or tech. How about focusing on just the big caps or the small caps, right? So again, and there are so many incredibly successful traders that are just focusing on, let's say, Amazon or Meta, I guess, Facebook, right? I keep on correcting myself. It's now Meta, Tesla. The Apple. These are also really volatile, highly moving stocks that you can truly, truly do well with. So you got to pick that one thing that you really love. Futures market. Look, the futures market is a big market. So when I ask people, what do you trade? And they're like, futures. I'm like, so you're trading soy, sugar, E-minis, the NASDAQ. It's literally like getting into 4 different cars and being on 4 different terrains and thinking that you're going to be able to drive all at the same time on that. No, it's impossible. Which one are you going to focus on? Like I said earlier, I personally love the E-minis, which is the S&P 500 on the futures market. It's an incredibly volatile, high volume market to watch, and it's fun. But if you want to just do crude, then do crude. If you want to do wheat, do wheat. These are really, really all important. And I also know about options, right? Again, if you're going to do options, do options. Don't do all these other things alongside with options. Like really give it your time to really learn and truly hone that understanding of what options are. And then we have the crypto markets. You can't ignore the crypto. Yes, they do get bad names and all that other stuff. But again, there are a lot of people that are successfully trading crypto. But crypto is not Bitcoin. Bitcoin is one out of 6,000 altcoins and projects. So again, you need to find what works best for you, what you want to trade within the crypto market. All right. Once you understand that, so many things just start to become much more clear, right? They say clarity is king. And that's literally what happens here. And that also brings us to the brokers. So I get a lot of people that contact me and they're like, okay, I have a broker and now I'm ready. And I'm like, what do you have a broker in? Because if you want to trade equities, you're with a broker that only does futures. Or if you want to do futures, your broker only specializes in equities. So you need to back it up and first figure out what is it that you really want to focus on which market you want to learn, and then you could search the best broker for you because they're the ones that are going to give you the best commissions. Now, what's important to understand about brokers is this. Broker's job is nothing to do with your knowledge of the market. On the contrary, they prefer you not to know anything. They're not going to tell you that, obviously. Imagine a broker like this, right? Imagine you walk into a store of clothes, a clothing store, and you want to buy a dress or pants, right? And there's a salesperson there working, and they see that you're taking the dresses, they're working on commission, and they're like, oh, isn't that a pretty dress? And the dress might not even be for you, but they don't care. They only want to make the sale. Brokers are those people selling you the dresses. They don't care. And that's why they're going to be pushing on you the margin accounts, right? What is a margin account? Personally, I like to call it loan sharking. Why? What is a margin account? Okay, the reason why you need to have $25,000 or more, as they say, is because that's when you're able to open up a margin account for equities. That means if you have $25,000, they will give you a $25,000 margin account. That means you can borrow $25,000. And it doesn't matter if you win or if you lose, because once you borrowed it, guess what? You need to pay it back with interest. This is not obligatory. This is not mandatory. You guys could tell your broker, I do not want a margin account. Then you never have to worry that you're going to go into even more debt. Okay? Super important to understand that. Remember, brokers, once you decide what you want to trade, then you will be able to find a specialized broker that could give you the best commissions and also to give you the best live feed. Live feed is like putting gasoline into your car. If you want to be a professional trader, you cannot be on delayed feed, right? It's crazy. You cannot be on delayed time. You have to be in the moment, and that really depends on the live feed. And each instrument has a different live feed. So you need to be able to understand that, and you need to be able to work with that once you decide what you want to do. And like I said, guys, you cannot drive a minivan in a Formula One race. You cannot be on one of these little rinky-dink apps and think that you're a day trader. You need to have a good, solid platform. This is truly the one that you need to invest in the most, okay? Now, like I mentioned earlier, you cannot enter a room with all native-speaking Spanish speakers when you don't speak a word of Spanish and pretend that you're going to be able to completely understand what's going on, right? That goes for trading. As a matter of fact, that is for any field in the world. Any field has its own lingo, right? If you want to be a car racer, you're going to hear a lot of stuff there that you'll never understand unless you're part of that world and truly learning and understanding it, right? You're also not going to be able, you're not going to just hop in and go on in a race if you don't even understand the basic lingo. Again, no barrier to entry with financial markets. People think just because they have some money, they're going to be able to make millions in a day. No, you need to understand what is happening in front of you, and that begins with the lingo. So let's talk about the lingo. Intraday trading. Guys, that's literally what it is. It's literally you're in and out of your positions within the same day. However, why is this important? Because if you understand that you're intraday trading, you're not going to look at a chart that has a 1 week time frame. How is that going to help you, right? You want to be in either a 1 minute, a 3 minute, a 5 minute, a 15 minute, but you want to be within the day, right? Because that is what's happening in front of you. If you want to be a swing trader, you're not going to look at the 1 minute chart. So you have to also understand that, because that can make all the difference. And I have so many students that come to me and they're like, oh my goodness, I've been day trading, but I've been looking at the weekly chart when I needed to be looking at this chart. Just that little switch in your head can make all the difference. All right, these are just basic terms, right? Bull market, it's the market going up. It's the market trending up. Bear market, market going down, market trending down. A lot of times people don't understand that there are 3 incredibly powerful trends in the market. The upward trend, the downward trend, and then we have the sideways trend. The sideways trend is the most important because this is usually where the majority of our money gets lost. And what do we call the sideways market? It could be called the exhaustion pattern, the indecision zone, the consolidation, the channel, the transition, the chop. However you want to call it, you need to understand that it is existing, and you need to understand how to work with it properly to make it part of your strategy. Now, everybody here has heard about risk management, right? So risk management is not that mental stop that you pretend that you're putting in. A mental stop is literally the same as putting on a pretend seatbelt on your child, saying that you're going to be able to save them during a hardcore crash. It's ridiculous, right? But the amount of people that put in their mental stops is absolutely ridiculous. And that's why they end up losing so much money. And if they have a margin account, guess what? Now they're in debt as well. You need to have a risk management. Basically, it's telling the market what you are willing to risk. It's putting in a stop. Interestingly enough, you need to have a profit target just the same. Why? Because now the ego works in a greed sense, right? Oh my goodness, the market's continuing in that direction. I'm going to remove my profit target. And guess what? It hits that area where you had your profit and turns, and boom, it stops you out because you have a mental stop. For being a professional day trader, you need to have both of these in there because the market will understand that you are an amateur and it will penalize you. Back to the charts. Cannot say it enough. All right. Now, like I was mentioning earlier, strong charting platforms, they have indicators. Indicators are fantastic, but just don't go crazy with them. When I first began trading, I had over 10 indicators. I had 3 monitors going on. I was in constant analysis paralysis. The thing is that we're hearing all these gurus and all these people saying that this indicator is great and that indicator is great, so on and so forth. And yet, a lot of times they don't seem to work for us. So when I had 10 indicators, I was losing all the time until I just stopped. I couldn't take it anymore. And when I came back, I decided to just completely go bare naked charts. And then I started to put in single indicators. And that's when I started to recognize that I actually only need 2 indicators. Particularly for me, only 2 indicators work great. Like I mentioned before, you have 3 trends, guys: upward, downward, and the sideways trend. All right, let's talk about the basic lingo. When you are going in for a buy, when you're going long, it literally just means you are entering at a low price point, exiting at a high price point. That's it. And you're taking your profit in between. So when you're saying, I am buying, I am going long, that's what it means. It means you're entering low, exiting high. Now, when you are selling, when you are shorting the market, when you are going short, it's literally the opposite. Your technical analysis is telling you the market is now going to start to go down. You need to short it. That means super basic, entering high, exiting low, taking the profit in between. If you start to say to yourself, oh, well, this person is going to be losing money, that means somebody's losing money, or blah, blah. Who is this somebody's? They don't care about you. You don't need to worry about them. Your one job is to trade properly, and that's your technical analysis. And if it's telling you to short that market, enter high, exit low, you do that and you come out the winner. Now, a lot of times, especially beginner amateur traders, and the market knows this and loves this, they enter as a market entry. That means they're seeing the market, like, oh my goodness, the market is going up, it's going up. I think I'm going to go here. And guess what? They enter because they have no idea where they're going. First and foremost, when you enter a market entry, there's such a thing called slippage. You will never get filled where you want to get filled. You automatically lose between 20 to 25%. Okay, that's why you need to tell the market exactly where you want it to enter. Okay, that is called a limit order or an order waiting, however you want to call it. But you put in that order, you tell the market, this is the price that I want to be filled at. And if it doesn't fill me there, I'm okay with it because that's where I wanted to enter. You are telling the market that you know exactly what you want to do. And that goes the exact same way with the stop. Once you put in that mental stop, there is no stop. That means you're going to be desperately, pathetically running after when the market is going in the wrong direction and putting in those market entry stops. Again, you're going to lose money, first of all. Secondly, you're going to lose even more because you're not telling the market where you want to be filled. A stop limit shows the market that you are the pro. All right, guys, you need to have that. So technical analysis. Guys, this is the most important and the coolest thing of all. It's pretty basic stuff. Okay, areas. The market has really specific areas. It has a resistance area, which is literally the ceiling of the market. That's when the market is hitting an area over and over again when it was trending up and it's hitting that area. Support area. It is the floor of the market. Again, it is when a downtrend is happening and it's hitting that area over and over and over again. That is the floor of the market. Now, you probably have heard of reversal patterns. To me, they are my favorite patterns out there. That is the triple top, the double top, the triple bottom, the double bottom, and the head and shoulders. Is it saying that the market is going to be reversing? No. What it is saying is that the market is losing its steam and it is losing its, and it's becoming weaker. That is what the market is telling you. And when you spot these, you are able to stay out until the market gives you much more confirmation. Divergence. This is my absolute favorite. I live for divergence. It's my holy grail. I use the MACDs with my with my price action. The MACDs to me are the least lagging indicator out there. It's the least lagging indicator. So what does that mean? When I am seeing my price action going up and my MACDs are going down, what is it telling me? Is it going to reverse? No. It's telling me the market is totally losing its steam and weakness, and I need to sit out until that market is strong. Okay, until that market has given me the same direction and steam. All right, like I mentioned earlier, I have all of this in makingofadaytrader.com. Go here right now so that you guys could get this presentation. Now, I want to be able to just do a really quick put it together kind of a thing. We all know that breakout is probably the most powerful trade setup out there, right? However, if we don't know how to spot it, if we're not using the technical analysis, if we're not recognizing when it is breaking out and continuing the upward trend, or when it is sideways trend, or when it is going the other way, we're going to miss this particular trade, right? So when you have your areas drawn in, when you're noticing those reversal patterns, when you're understanding all of that, you're able to recognize that. And that's when you can get in as fast as possible to enter. Like I said before, I use the MACDs and my price action to really recognize when there is strength, when there is divergence, and all of that. And that's how I enter the market. And I use the EMA lines. Those are the 3 lines you're seeing there for my entry points. All right, guys. Here's the thing, right? We have absolutely everything we need to take action. We have everything we need to take action, right? We have these amazing summits. We have tons of YouTube gurus. We have books. We have podcasts. But at the end of the day, when you are sitting in front of your chart, how do you know that you are doing it right? How do you know that you are doing it right? Because all of this is great. And the real question really is, how do I truly get started? And it's not for beginners only. A lot of seasoned traders ask me this all the time. They're like, how can I turn this around? How can I be more profitable? How can I be consistent profitably? How? What do I do? And honestly, I have to say, whenever I speak to people, I would have to say 99.9% of the people do not have the brick foundation to hold up the windows that they are putting in, to hold up, to really secure and give you that strategy, that foundation for those trade setups. Because a lot of times it's just the basics. And once you learn those basics, I can guarantee everything will shift for you. I can guarantee it because I know that that's really what it boils down to a lot of the time, right? For instance, my oldest son just recently learned how to drive a car. So he hopped in the first time with me and my husband, he hopped into the car and we're like, all right, let's put the gear into first, make sure that the clutch is down, make sure that your other foot is on the brake, hands on the steering wheel, now start to release the clutch. He's like, what are you talking about? Clutch, brake, gear? he did not know what it was, right? Today, he hops in, boom, he's in first, he releases the clutch, he knows where the steering wheel is, but these are all basics, right? You cannot hop into a car and immediately take it on the Autobahn or on the highway when you don't even know how to take it out of park and put it into drive, correct? Now, imagine this. I just want you guys to really open your mind and imagine this. Imagine you are in the car and somebody enters the car and they have never seen a car in their lives. Yes, people still like that exist. And you're like, all right, buckle up. That seatbelt is going to save your life. And they're like, buckle up, seatbelt. Where is this? What is this thing that's going to save my life? Right? If you're not taught the basics, if you're not taught the fundamentals, how are you going to know? You're not born with that. And this was my own sad truth for years. I spent over $20,000 on my own trainings, and yet I was struggling all the time because whenever I was asking these basic questions, what is a reversal pattern? Can you please show me how to draw the resistance area? I don't understand. What do you mean by reversals? When I wasn't explained that, because people were treating me as if I was born with this information, or even worse, a lot of times I was just ignored. I was completely struggling and I was losing it. And basically, I ended up losing almost $4,000 in 5 minutes. This was like at the end of 2 years of already struggling. I just felt so defeated and completely pathetic. To be honest with you, I felt super pathetic. I was like, this is just ridiculous. I cannot be losing this kind of money all the time. And you know what I did? I quit. I did. I walked away entirely. I quit. But the reality is this. Every single person in here and me, number one, I was bit by the trading bug and it never stops itching. And do you know why that is? Because deep down inside, we know that we could do this. I was looking at other traders and I was like, if they could do it, I know that I could do it. I'm smart enough to do it. What is it that is different? And that's when I decided to come back and I just studied the basics. That's when I literally removed all of my indicators. Like I mentioned earlier, I had 3 charts, 3 monitors going on. I removed 2 of them. I actually donated them to the garbage bin pretty much because they were brand new, high definition monitors. And I just went down to just the bare naked chart until I added in my 2 indicators. And I just started to focus on the basics. And I did this for months. Actually, it was 18 months specifically that I just studied the market and really started to work with my strategies because my wounds were really, really raw. And that's funny because what happened was after I started to get a strategy and I was sharing my strategy with people, and I started to get a lot of people like, oh, can you teach me? And students. And then one of my students said to me, you know, your teaching philosophy is very similar to Coach John Wooden. And I was like, who is this guy, Coach John Wooden? I've never heard of him before. So I went and I checked him out. And if any of you guys have ever heard of him, he is to this day the most legendary basketball coach out there. He has passed away now. But I mean, this man is beyond, you know, any accolade that the majority of basketball coaches even come close to, or any coach actually. But his entire teaching philosophy was, when in doubt, get back to the basics. And I mean, this guy had 88 national championships, 10 NCAAs. He trained the biggest superstars of basketball. But every single year when they began the season, he would start with the basics. How to tie your shoe, how to roll up your sock, how to dribble. Why? Because it doesn't matter how big your ego is. If you're on that court and you didn't tie your shoe correctly and you're running and it falls off and you sprain your ankle, doesn't matter all that you've done before. You're sitting on that sideline. So you need to have your foundation in place. And that's why today, only for the participants who are here live today, I have a very special offer. Only for you guys, because I really, really appreciate that you guys taking that time to sit here and truly listen to what I have to say. This is my introductory course. It is boot camp for day trading. And you could take this course anywhere on your laptop, desktop, tablets, phones, you name it. You could do it anywhere. And all of this, all of this is going to be a one-time fee of $97. Now, I want you guys to go right here, right now, bootcampfordaytrading.com. Go into your navigator, into your browser, and put in bootcampfordaytrading.com so that you can follow along to see all that you are going to get in this course. First and foremost, let's talk about the price, right? What can you actually get for $97 today that will give you the same return on investment? Do you guys like to play golf? Me and my husband, when we first moved to Guatemala, we love playing golf. We used to go, and I remember it was $29 per person. 14 years later, right before we moved here, we went, and it was $119 per person on the course. Okay? You guys like to take your friends out to lunch or your family? I mean, come on. For $97, maybe 2 people, at most 3 people could enjoy a meal today. That's the reality of it. $97 does not get you a lot, but this course will almost 10x your return on your investment. So let me break this down for you. First and foremost, you'll get the Simplifying Day Trading package. Then I have a 30-minute platform tutorial. I know that sometimes setting up a platform can feel a little bit intimidating. I have seen all these different platforms, and MetaStock is a great platform. If you go on others, because I heard that Jeffrey was saying you could use a lot of MetaStock information on others, they're all very similar. And I help you get past all of that so that you get into the fun stuff of actually trading. Then we get into the market anatomy process, right? Dissecting those markets. Like I was mentioning earlier, we know that there's the upward and the downward trend, but understanding those sideways trends, which really take the majority of our money, that is what we really dive deep into. Truly understanding reversals and divergences and how to be able to apply it all. Because once you can see it, once you spot it, you will be able to truly take your trading to the next level. Okay? How do you spot the areas, the support, the resistance? And again, divergence for me, guys, is my holy grail. And I have a whole unit just on that so that you can really spot it. And the coolest thing about it, you don't need to buy super duper indicators for it. It comes with the platforms. All right. And the breakouts. All right. How to spot those breakouts. And importantly enough, to avoid the fake out breakouts. All right. These are super, super important because you can avoid those fake out breakouts. They are avoidable. You just have to learn how to spot it. All right. Once you figure that out, you can take these amazing breakout trades and you'll have unlimited access to the curriculum. All this is valued at $1,600 and you get all of this and a lot more. So first and foremost, I want to just do a really quick testimonials of all my students because I have students from all over the world. Like I said, you could trade anywhere in the world today. Michelle, best money I ever spent. Derek, you are the only mentor that truly checks the work. Adrian, I am truly enjoying the bootcamp and I am learning so much. But like I mentioned earlier, let's get to the really important thing. How do you know that you are doing it right? How do you know who is there to help you? Who is there to support you? So for me, accountability was the most important thing. And I am offering in that one-time $97 price, one-on-one coaching and mentorship with me, unlimited 1 month of coaching and mentorship, because that could take you to that apex, to that truly winner state. And I have the best for last. I also run a live trade chat room where we are sitting live with the live market, implementing, taking live trades, and you will get that included in the price for 30 days as well, so that you will be able to be there with us taking the trades. There's a whole community of traders. I have a special price only for you guys of $97. Now, like I said, go here right now, bootcampfordaytrading.com. All right. So again, what do you get for $97? Everything in this course, 30 days one-on-one mentorship, 30 days live chat room membership. And here's the real reality. All of this is worth less than one trade. My trades are usually $200 to $400. That is the average trade. Here you're paying a quarter of that amount for the education that will bring you 10x your return on your investment so that you can go out and take your friends to 100 of these dinners. But the reality is, the thing is, because of my mentorship, I could only take 25 students. Okay, so I want you guys to go right now into your navigator. Okay, go here into your browser and put in bootcampfordaytrading.com, and you will come to this order form. All right, bootcampfordaytrading.com. You'll see one-time payment, $97. If you need to do a payment plan, I have one for $59 2 times. But again, you get absolutely everything included right away, and you have access to everything. So go to bootcampfordaytrading.com, and you'll be able to access everything right away. All right, so let me know if you guys have any questions at all. Yeah, any
we have some
questions at all?
questions from YouTube.
Yeah.
Or at least a couple.
Great.
Okay. Nat was hoping that you could clarify a bit more about divergence and convergence.
So with divergence, when your price action is going in one direction, and I personally use the MACDs. I know that a lot of people use RSI or other indicators that also can help. It's usually the opposite direction. For me, I have found that MACDs are the least lagging, right? I know that some indicators can be a little bit lagging. So that's why I decided, well, I put in many, many, many years of practice as well and back testing with the MACDs. So that's basically what it is. And the cool thing is it's really easy to spot. And once you can spot it, basically what it's telling you is that the market is slowing down, right? There's massive weakness in the market. And you just think for yourselves, like, do you want to be putting money into where there is weakness, when there is uncertainty? No, we prefer to put money when there's strength, right? And that's what we're looking for, because then you could have a break in divergence, and then you could recognize when it's going back in strength again. Hopefully that makes sense.
That makes sense. Gregory and Donna wanted to know what trading platform you use, or who do you use? I
personally use Ninja Trader simply because I have been doing this for over 11 years now, and Ninja Trader, and I trade E-minis. I have found that one to be the most interactive, with the interface pretty simple. However, there's so many great platforms out there. I would not focus on which platform I use, because you can literally use any one to discover which instrument you really want to work with. That's probably the most important thing.
We recommend MetaStock.
Yes, obviously. And it is really, really great. I have absolutely done MetaStock.
Rick wants to know, do you do spreads?
No, I don't do any spreads.
Okay.
That's not my thing.
Primarily, primarily you talked a lot about the S&P minis, I think. What other markets, if any, do you cover?
So my bootcamp covers pretty much every kind of instrument, because it's about the charts. It's about understanding what the charts mean. So basically the way I like to say it is that I teach you how to drive a car. Which car you're going to drive won't matter, because every car pretty much is very similar, right? And that's what I teach you, because a lot of people don't even understand what they're looking at when they're looking at the charts. And they are completely missing the lingo, the understanding of what is happening. And that is literally the reason why they are losing all the time. I get so many people that are like, why am I losing? Why am I losing? And they are taking a short when they want to take a long. So something that basic, and I was like, and I'm telling them, no, you need to stop. Let's first really understand what's going on. And just that little shift changes everything, right? All of a sudden they're making winner trades because they were actually entering correctly in their mind, but they weren't putting it in correctly. Those little things, you know what I mean?
Here's I think last question. Clark wants to know, how does your day trading bootcamp compare to your day trader mastery roadmap?
So the bootcamp, it talks about all of the charting. We go through each individual thing. You work with me one-on-one. The mastery is literally just looking at a couple of setups. You do not work with me one-on-one. That's why it's $27. And you just look at those and they're just short videos, but the bootcamp really dives deep into it. And it's $97 for all that you get, and you get 1 month with me. And it's only a special here. I normally charge $297 for that bootcamp. I never charge $97, only because it's for the live presentation right now.
What's your favorite time frame for trading, Marina?
So I personally use tick charts. I love tick charts. And the reason why tick charts is because it's kind of like in real time volume, right? There's the volume indicator, and that to me is one of the most lagging indicators. But ticks so I use the 610 tick chart, and it shows you the amount of transactions that are happening per candlestick. And I love that because it's right there live for me to see, and it's all about volatility. However, if you can't use the tick chart, I would recommend between 1 to 3 minutes, because I personally am into scalping. I love scalping. I do not have the stress level to sit for a very long time. So that's why I like to use shorter time frames.
Here's the last question.
Okay.
Should you start to buy in during, should you buy in during market weakness to benefit from lower costs?
Well, it's not about that, right? It's about the setup. Is it weakness that is about to continue and become stronger, or are you entering in the middle of the weakness and it's just going to continue becoming weaker and transition? So that's literally what I show in my course, how to spot that, how to be able to recognize when the weakness is ending so that you could enter in the beginning of a new, either a breakout or a new trend. That's when you really get the most amount of benefit from entering at those moments, if
Perfect.
that makes sense. Yeah.
All right, that's the last question, Marina. Thank you for joining us. Thanks for spending an hour.
Well, thank you.
All right.
Thank you so much.
Thank you. All right.
Bye, everybody.
ForDayTrading.com. Thanks again, Marina. Cool. Let's go ahead and do this. And kind of just go ahead and switch gears for a second. Okay. All right. Oh, I'll turn on my speaker for I'll do this too. All right. Mr. Humphrey, I missed that answer. So sorry about that. You guys should be able to see my screen. All I'm seeing is me and Oscar, though. Let me kind of try and change this. And if I only could see one thing, if it's just Oscar, that's fine with me. Oscar, before we turn it over to you, I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. Really very much appreciated. Been supporting the summit. Oscar, I think you spoke at our very first summit. Do you want to guess how long ago that was? Oh, I can't hear you. But if you guessed, I show your microphone's off too. If you guessed 10 years.
How about now?
Perfect.
So I started with MetaStock in 1985, literally customer number 11. I don't think we were capable of webinars back then. There was no internet. I think I used to fax my webinars to them at the time.
For sure. Well, I want you guys, I'm not going to belabor this at all. If you don't have one already, grab a notepad and a piece of paper, and you're going to want to take notes. One of the things I love about Oscar is that all he does is show charts. He talks about charts. He talks about charts. He talks about more charts, and he's very, very entertaining. It's always great advice, and he does such a good job. And
Get ready for some thoughts, Jeff.
All right, let me make you the presenter. I'm going to get out of the way as soon as I can, but I'm going to make sure I can see your screen before we do that.
Let's see. Show my screen. Stop broadcast.
And I see 800-pound gorilla in the room.
Good. Now I see a lot of cameras on top of this. Can I move them? Yes, I can. All right, that goes away.
And I'm going to get rid of mine right now. It's yours. Go for it.
All right. So are we ready? Well, let me start with this. Good morning, good afternoon, and good evening, traders from across the globe, and of course, MetaStock fans. Thank you for tuning in. I was supposed to present at 6 p.m. this evening, but Mr. Steve Bigelow, he fell ill, and we all wish him a speedy recovery. Steve, speedy recovery, sir. So I thought I would take his slot for him at 1 p.m. Traders, thank you for tuning in. Again, Steve, good luck to you. MetaStock, thank you so much for having us, and a fantastic day it's been so far. I am going to do a little something with you slightly different from what you may have seen all day long. I am literally just going to go over a series of charts with you, but if you are a MetaStock fan and you've been to these other webinars, you will see I'm going to use the exact same charts that we used in our last webinar, which had some tips, tricks, and techniques moving forward that you can use immediately following that webinar. Well, we're several months past that webinar, and we are going to go back and revisit every one of those charts and see what is on there now. So we're going to go on a little ride together, kids. I think you're really going to appreciate what I have to show you. So let me start with this. If you don't know me, my name is Oscar Carboni. I have been started on the exchange, working with charts, MetaStock since before there were electricity, before we had telephones and electricity. I've been doing this for so long. I don't think there was FM when I started with MetaStock. I don't know. Anyway, I've been with them my whole life. I've used many other types of software out there, but I kid you not, and I am a master with this software and with these charts. I have been using MetaStock my whole entire 42-year career. So once again, I'm going to applaud you guys. MetaStock, I've tried everything else out there. I love you guys. So what's going on in the markets? I will tell you this right now. There is an 800-pound gorilla in the room if you are an analyst, a technical analyst. What is that gorilla? It is a big head and shoulders on the Russell 2000 daily bar chart. Are we topping out? I've had so many people call and go, Oscar, you're the master of head and shoulders formations, right? What's going to happen? And of course, I've been monitoring this for quite some time. So during our last webinar, we went over a series of charts. We had some tips, tricks, techniques on those charts to use moving forward. We will revisit each of those charts and see what we can derive to use this quarter for the next 3 months. And remember this, kids, no matter what is going on out there fundamentally, you can hear it, you can think you understand it, but what you need to look at is the chart, because a chart is merely a visual look at all the reports, government and or corporate, all of the news that's coming out, the news that's been out already, and all of traders' reaction to that. It's all built into a very clean, easy to read chart. And that, my friends, is how you figure out where the markets are going next. I promise you, I've been doing this my whole life. And that is what I'm about to show you. So let's go on this little ride. First thing is this. I did a video the other day. I did a video on Saturday. And in that video, I explained to many of my fans why I have not called the head and shoulders formation and called the top in the market. Let me start with this. It's a clip from a video I did just 2 days ago on Saturday, which is going to get us ready for this webinar. So let's watch this clip and lead right into the webinar from there. Oh,
check out the Russell 2000. Now, for quite some time, people have been writing to me and saying, Oscar, don't you see the big head and shoulders in the Russell? There's one in the Dow, there's one in the S&P. And I've been kind of kidding around with them. And my reply would be, shh, let's pretend we don't see it.
Excuse me, kids, I don't know what happened just now.
And there's a reason for that.
Excuse me a moment, let me just pull that back up for you. So my computer went into HD mode, guys. I am sorry. It does this from time to time, and it rearranges all my windows. So I have to go back and find that window for you. And it is Gandhi. So my apologies here. This wasn't supposed to stop playing until we got to the end of that video. So instead of showing it to you on a video, I'll show it to you straight up on this machine. So let me just actually do the analysis for you instead of telling you about it. And we'll be set just a second to get that done. All right, so what was going to be in that video was basically, not right now. What was going to be in that video was this. I was going to show you what I recorded for my Omniacs over the weekend. And what that recording was this. And check this out. I think you'll appreciate it. People are asking, Oscar, you see this big head and shoulders here. Why have you not called it for us? And almost adamant, like mad at me, writing to me. And I'm saying, listen, guys, I've seen it. I've seen it, I promise. But I'm not going to call it yet. There's a reason. And this was in the video over the weekend. The reason why I will not call it yet is because we had a massive head and shoulders in the Russell 2000. And what happened is it put in a flat and went up. It did not go down. Okay. Now we have a second one. And until this one calls itself and gives itself a name and actually drops lower than where it is now and allows me to project, I am not going to make a projection. I am not going to call the top in the market. That is that. If you look at the S&P, look at this. The S&P has the exact same thing going on. It had a left shoulder, a head, a right shoulder, clearly defined head and shoulders. Market went up. We're in another head, shoulder, right shoulder. Market's going up overall on the weeklies and dailies, not down. So I cannot do what you guys asked me to do, which was, Oscar, would you please give us the projection? Not a chance. Not until it projects, or at least it reaches a spot where then I can start calling downside. And here's why. When this market began this year, at the beginning of the year, we were trading down here at 3,800, and it was the beginning of the year right here, and the Omni gave us over 5,000 projection for this year, 2023. Now, if you remember, we were trading down at 3,800. The world was coming to an end. The Fed was raising rates. Every fund manager was flipping out of the market, getting into bonds, and I come out with, you're wrong, fund managers. Please listen to me. We're going all the way over 5,000 this year. Now, look at how far we've gotten. We've already got up to 4,800 in December. I say we are correct for continuing to call the upside, and now we're going to go over a series of charts, and we're going to find out if we should be still calling upside. If you've got questions when this is done, I'll be more than happy to answer them. I'm not going to offer anything to you except for this. Using my Omni method, I give out trading recommendations to traders all over the world. They go out 24 hours a day. They tell you where to buy, where to sell, where to place your stops, where to take profits. I will give you a free month of those recommendations so that you can see my style. The only thing that I really have planned is this. October, the middle of October, October 12th through the 16th, I'm inviting 5 people only to my home office for a 4-day seminar where I will teach them the Omni methods, but I get lots and lots of applications. I only accept 5 out of the ones I receive. If you like what you're about to see and you want to come join me in the middle of October here in Las Vegas, you come back to me and you let me know. Let's take a look at what's going on. Big head and shoulders, I just showed you in the Russell, and everybody's worried that the top is in. Now, I have shown you this chart. This is the exact same chart that I started with in the last webinar, and that chart shows us something. What it shows us is how to read a chart correctly. How do you read a chart correctly? If you want to know if it's going down, it has a series of lower highs and lower lows, and that confirms a bear market. Simple, right? So you have a high, and it drops to this low. Then it rallies back up and hits a lower high. And it drops back down. And what does it do? It hits a lower low. Rallies back up, hits a lower high. That is absolute a bear market, right? Then it drops back down and goes to an even lower low than the one before. And then everything stops. Do you know where it stops? When AI gets released. Welcome to the AI revolution is what I told you in my last webinar. That was right here. Came out right, let's see, November, December, October, AI came out right here where I'm spinning in a circle. And guess what? Bottom of the stock market came in. Now, we were already starting to call for bottom in our charts, and then the fundamental reason came in, which was AI. Now, watch this. How do you confirm a bull market? Everybody's so worried that we're in the middle of a crash right now, and the market is so difficult. Now, I get fundamentally crude is way too expensive for the market to be going up. And if you kind of look at where inflation is, you would worry that that's going to stop the market too. And all those fundamentals, the stuff the president's doing or not doing, that should all stop the market from going up, right? Well, that's human thought. The chart tells you the truth. So even though when I was saying crude's getting too expensive, it should knock the market down, it did, but temporarily. It only came from here to here. And now the market's moving higher. So let's go back. If lower highs and lower lows is a bear market, wouldn't higher highs and higher lows confirm a bull market? So let's look. We have a low and then a high, and then a higher low, and then a higher high. Then this low comes in, believe it or not, this one was here. You can see the crosshairs. This one's higher. A higher low, bull flag, races to a higher high.
We just put in a higher low. Kids, what's to say that this isn't going to go make a new high right now? Why is everyone so damn bearish? I don't really see it. I get that crude's expensive. I get it. But I'm an analyst, and the chart is not telling me to run for the hills yet. So if we are in a confirmed bull market, and there's really no reason technically for us to smash down except for a big head and shoulders in the Russell and maybe in the Dow. Let's see what else we have out there. So that was your S&P chart. The next one we're going to open is NASDAQ. Now, in the last webinar, which was, I think in July, we did a webinar in July. And on this chart, I told you that the NASDAQ is in a strong bullish channel. And please use the 18-bar moving average to time your buys and sells in NASDAQ. So if you have no other method, if you don't know the Omni and how to get in or out, you can use the 18-bar moving average to time NASDAQ. Well, I'm here to tell you, as of a couple of weeks back, it has morphed from the 18-bar moving average to the 21-bar moving average. So if you want to time NASDAQ right now, just time it off the 21-bar moving average. It's a very small average, but that's what Wall Street's using right now. And I don't care what they use as long as I can identify it and figure out how to tell you what's going to happen next. That's all that matters to me. They have flipped from what used to be a 150-bar moving average. As you can see, the blue average, and these right here, it would stop at the blue average, and here it stopped at the blue average. Well, that has changed from down here. The blue average is no longer in vogue. It went to the 18 in our last webinar, and now it is the 21. And as you can see, let me blow it up for you. Look at how well that average works on this chart. I mean, it's like a master. So use that to time your NASDAQ right now if you don't know what to do. And that's the tip I wanted to give you for trading NASDAQ, the 21-bar simple moving average. Write that down. It is working right now. Will it change? Yes, it will. It'll morph to something different, but you've got a clean run for the last 3 months, 2.5 months using the 21-bar moving average on NASDAQ, giving you some pretty good signals. So there's the tip for NASDAQ. Let's go to another chart. We used this very same chart in our last video. Now here's your transportation average on the daily bar. And what I want you to notice about this chart is this. You see this big red line right here? This big red line? Well, that comes all the way back from the highs. That's major, major resistance, that big red line. Okay. Well, you got above the red line here in a channel. Okay, that makes sense. And why? Because what you're putting in is a low, a high, a higher low, a higher high. Probably a higher low comes in next, and we just keep working our way back up. That's what the transportation average is showing us. And here is what else is interesting. This red, what used to be resistance, that stops the market from going up. Hey, let me grab this little tool. Stops the market from going up, right? Well, once we got above it, it becomes support. So I made the line go from red to green. That's a green support line now. All right, so what did the market do? It came back to the support, and it's testing it right now. We are literally just testing support. Now check this out. I think this chart is telling us exactly where it's going to go next. You want to see something cool? Watch this. I think this chart is projecting for us right now. Here's where I think it's going. Look, I think it'll just follow that channel right to this spot where it always finds support. Kind of makes sense, and it would do that, right? Being that we're in a downward segment. Now, the 100-bar moving average has been a key, and we're at it. We tested it and got back above the support resistance. But you are in a channel, and there's a good shot that we'll end up working our way down here in the next month. And then what would that mean? That would mean nothing more than continued a low, a high, a higher low, a higher high, a higher low, and we will just continue to move upwards this year if that comes down, hits the support, and takes off. But that's the channel we're in. First thing is you got to get underneath this. You might not ever even get underneath that. If you get underneath that, we're going here. Not a big deal, kids. This is not a crash coming. We're not in bad shape. Now, I went out looking for reasons to tell you in today's webinar that the Head and Shoulders is pointing towards a big crash, but I can't find those reasons for you. What I found instead was to think it may pull back a little and move much higher. Let's go look at another chart that we looked at in our last webinar together, the Russell 2000. Now, the Russell 2000 in our last webinar, I said that you can use the 200-bar moving average
on the Russell. And as long as it holds, you can get long. If it gets under, you can get short. Well, when it holds, it works really well. When it gets below, it also works really well. Gets below and then stays below and then stays below. Check this out. I mean, these charts are just, they tell you what's going to happen next if you know how to read them. Stays below. Finally, it gets above. And then what happens? It starts holding it as support instead. So what I'm here to tell you is this. Yes, we know there's a head and shoulders, right? But we are not going to use it at this moment in time. We are going to keep an eye on it. And instead, I would rather see what happens at the 200 bar moving average. And better than that, I want to see what happens here. Because if we just hit here and go back up, well, it's a series of lows and higher highs and higher lows and higher highs. And that's fine with me if that's all that's going to happen. Before you even get there, you're using the 200 bar moving average to time your Russell 2000 on the daily bar. And this is, by the way, it's no longer set. We're looking at December. So let me change that to Dec. And that is correct. All right, so save the chart, on to the next one. So does everyone see how well the 200 bar has been helping the fund managers figure out what to do in the Russell? Or you got to remember, kids, I am from Wall Street. I grew up there, started at 18, spent my whole life there until it went from trading in a pit to the electronic on the internet, and there was no more pit trading. So, you know, I got this stuff. Just listen to me. I promise I'll show you what's going on. So what's next? In the Russell 2000, as we mentioned, we're going to let that percolate. And after Russ, we looked at a crude chart in our last webinar. And in the last webinar, I had things to tell you. Crude below 77 will help buoy the stock market. Why? Because in our last webinar, we were below 77. And I also told you in our last webinar that the tip was staying below the 100 bar moving average is your key. And if you look at this 100 bar moving average, it was absolutely key all the way through this move. Key, gets a lot over it for just a stint, key. Then once it gets above, it stays above. All right, so crude finally gets above this big resistance, which was holding it under 77. It gets above the 100 bar moving average and starts to move higher. Now crude is in a channel working its way up, and here is the only tip I have for you. Staying above 93.50 is key. If we get above that red circle, well, let me move the red circle. If we get above this spot, the funds are going to come in and take this thing to the moon. You gotta kind of hope that crude runs into some resistance up here, stays around 93 and a half, and then starts to work its way back down. There's no way crude can continue higher without something happening to the stock market. Every product practically in that stock market relies on energy to build that product and get it out to market. 4% of this world is on EV. The rest is on gas. I promise you, crude is the big gorilla in this room, besides the head and shoulders in Russell, but that's for technical analysis. Fundamental analysis, crude is the big gorilla. It is really bad for us right now. But the market seems to be absorbing it, and I'm going to use the chart. I don't care what I think. I don't care what you guys think. I don't care what the President of the United States thinks. I do care what the chart tells me, because that's where the truth is. Chart says market somehow is dealing with crude. Let's hope it stays under resistance at 93.50. So it's above that 100, right? You can't use that as your trigger anymore, kids. That's why I put the strikeouts through these. That's about the only info I can give you on crude for now moving forward. Unless you're long, enjoy yourselves. If you're long, have a great time, kids. Crude's a good market. Next is, there's really nothing on this, but we'll look at it anyway. We looked at a Bitcoin chart last. Bitcoin is just not in vogue at the moment. Crypto is not in vogue at the moment. You can see in the chart there's nothing going on. But the one thing that we did have was it's been riding the 200 bar moving average, and it's still doing the same. I have zero opinion for the short term of Bitcoin. I've got a different opinion. I've got 85,000 for Bitcoin, and it should get there in 2 years, 10 months. That's what we should get there. 2 years, 10 months, we should hit 85,000. We shall see. It's been my projection for quite some time dated for 2 years and 10 months from now. But there's really nothing on this chart, so let's move forward. Key bonds, okay. When I showed you this last, I was telling you your tip was use the 150 bar moving average to decide your crude direction, and it worked like a charm. Look at the black average and how many opportunities it had, but it's morphed since. It broke through the must-hold green line support, started creating a new channel on the way down, telling us interest rates will continue to go higher. And here is the new thing. I'm going to lower this guy for you. Watch this. Let's make this one thinner. And let's pull this one out to light. Here's your new trigger. If you want to write this down, it's your new trigger to use average-wise on bonds. Boom. Check that out. It's a very, very small average. And let's go check the average for you so you can see it yourselves. It is a 31 bar moving average. That's what's working now. The 150 is not in vogue at the moment. This one right here is working perfectly, just perfectly. That's the one that they seem to have logged onto and seem to be liking lately for the last few weeks on Wall Street. So I noticed it and thought I would let you know about it, because if you hit it again, it's a short. And every time you hit it lately, it is a short. So keep that one in mind. You're looking at your 31 bar simple moving average, and we'll put it here for you. The new tip. So use, I think I wrote that in the wrong place. Let me just move that to another spot. There we go. Use a 31 ball. All right, for you guys, use the 31 bar SMA to time bonds for now. If that changes, come to my website, livewithoscar.com, and I'll tell you what bonds are using next. So that's your trigger in bonds. It seems to be working very well. It was the 150. That's old news, right? The new news, 31 bar moving average. And we're in a red channel. Let's go see what else there is to look at out there. Last time together, we looked at the dollar. Okay, we had a dollar chart. So I'm pulling the same dollar chart. What we did on this chart last was we talked about the 70 bar moving average was the ticket. And it was, and it worked really, really well here, 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 here. It worked well all the way through the dollar move. And in a bull market, how do you know? Remember, a high, a low, a higher high, a higher low, a higher high, a higher low. When you see that, you're in a bull market, right? Well, we switched to a bear market. The 70 bar moving average becomes in vogue. It's out of vogue, if you will, right now. So we'll make that one lighter. Goodbye. There's a new one in vogue at the moment, and I think you'll appreciate this new one. Check this out. The new average is a 19 bar simple moving average. Why? I don't know, but that's what the street logged on to. How about that, huh? Now, just more proof how well analysis works. This bear flag was put on the chart when we did our last webinar. Look at how well it produced. Inside this was something I put on the chart for the last webinar. Look at how well that produced, huh? Analysis really works well. In the right hands, a chart is about the best tool on the planet. And I can teach any of you how to read a chart. I promise. That is the easiest thing to do. You just got to get your mind out of it and use your eyes. So simple SMA 19 bar moving average is your trigger on the dollar index lately, which kind of makes you think it's probably the trigger in euro, right? So dollar index was in the bull market, bull channel, goes into a bear channel. How do you know? A high, a low, lower high. Didn't quite get to the lower low yet, but just, it did. Lower low, lower high, lower low. We knew that's bear. Now you broke out of the bear channel and you are in a bullish channel. Things are changing. Now, bull channel. So now we're back in a bull channel. We've switched averages. And if you want to write something down, that's what you would write down if you wanted to time US dollars. 19 bar moving average, and use that channel to let you know when you should be getting out of longs or back into longs. So that's what I've noticed. And it says here, the dollar dropped below the 70 bar moving average. Channels were pointing lower. That was what we spoke about last time. Here's the new tip as of 9/23 this month. Use the 19 bar MA to time your dollars. Channels are now pointing higher, opposite of what we had last time we looked. So things are changing. Dollar is moving along. Open. Now, if the dollar is moving up, what do you think the euro currency is doing? Same thing on the downside, right? In a serious channel. And of course, one would expect that because that's what's going to happen if the dollar's been spending a lot of time going up. Other currencies that are priced in dollars will be going down. The average that has been in play was the 70-bar moving average. It has morphed. It is now the 100-bar moving average, and even that's kind of far from the action at the moment. So all you really have in the euro is this channel, and I would play that channel because look at how well it's been working with the exception of one little breakthrough to go touch the 200-bar moving average, and that was it. It went right back down. I mean, the 100-bar moving average. And as soon as it touched it, it went right back into the channel and respects this channel. And kids, I just showed you one on the other chart. See this bull flag? And it worked. The market went up. Well, you've got a bear flag sitting right here in the euro. Right? Can you see it? So let me make that a little thicker for you. Boom, and obviously you'll recognize this in just a snap as soon as I put one on and create a parallel of it. Boom, so you have a flag right there, and what did the market do? Went right down based on that bear flag. So this analysis works really well if you know how to use it. Bear flag at the top of a channel, perfect spot to sell, right? And down it goes. So this would be an example of a bull flag. If you don't know what that is, this is a bull flag. That would be this one right here. Let me just move that flagpole where it belongs. And, well, actually, what needs to happen is that needs to be pulled up a little bit. So there's your bull flag, and it worked. And here is your bear flag, which is exact opposite, and that worked as well. So you've got a bear flag, which would be this formation inside of a downward channel below the 100-bar moving average. All right, so we're still bearish euro, that's for sure. The only tip I have for you is to ride that channel because there's really no averages that are around it right now. What do we have? What did we look at last? So there's another Bitcoin chart, being that it was in our routine last time. We'll put it on our routine this time. And what did this chart say? It said Bitcoin basically trades in these channels, and the 50-bar moving average has been our trigger. So Wall Street's algos watch the 50-bar moving average in Bitcoin as aptly in stocks as they do in Bitcoin. They watch the 50-bar moving average in just about every market. And as you can see, that's worked perfectly, right? So Bitcoin's in this channel right now. Again, it's not in vogue at the moment, so not a whole lot going on. The volume isn't there. The street's not there. So you're not getting a lot of movement. I say once you get above that 50-bar moving average, the street will get very happy, like here, and start buying again. So really nothing, as I said earlier, really nothing much in Bitcoin. It was in a bear market for quite some time, right? Long, long time in a bear market. Down, 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 down. Then it went into a pennant and broke out of the pennant right here. Right, you have your breakout right here, pennant breakout. And since then, well, the pennant breakout, of course, is at the pennant. And since then, you've had a bull market, mostly, with some downward movement. So right now, it's just not in vogue. I mean, kind of wait for Bitcoin. It will be good. It's just not good at the moment. So what else was out there? NVIDIA, traders, it's still working. Last time we looked at this chart, I told you it's part of the AI revolution. Welcome to the AI revolution. Why? Because NVIDIA was doing nothing until about here. And that's when AI came out, right about here. Boom, AI comes out, and this is what happens next. And it immediately goes into a 21-bar simple moving average and starts to work like magic. And it is still working. Now, we just got under the average, and what's going to happen is this. Check this out. Get ready for this to happen and let's make it solid, in NVIDIA. You see this chart, this trend line that we've been riding? Well, basically it shows you where the market is going to find support. Now, it's been making higher highs, higher lows, higher highs, higher lows all the way through. And if it gets here, it's simply just another series of higher highs and higher lows, because overall, NVIDIA looks pretty darn good, right? So the tip on here, 21-bar moving average is your trigger if you want to go short. And this channel down here, which comes in at about 421.80, 422, is your support test.
So in the 420s or up here at the average in the 465 area. Those are your two spots that you have to watch out for in NVIDIA. That's where your analysis is running into extremes on both sides. So keep those levels in mind and certainly use that 21 bar average when you get to it. It's been working like magic. Let's see what else we have out there. All right, so now let's talk about this bear market that people are talking about on television, and so many nuts are writing on my YouTube videos, getting angry with me for not calling a bear market. And I have to ask you, traders, if I said to you, there's nothing, I'm not going to give you an opinion at all. I want you to tell me, is this a bull market or a bear market? I have to think that any of you with a pair of eyes that work, or if your eyes aren't that good with your glasses on, that you'd call that bullish, wouldn't you? Wouldn't you call that a bull market? Well, that's the market we are in. That's our Dow. So when you hear these people on TV and you hear this stuff on the internet and your friends telling you that this is the middle of a crash, point to this chart and say, do you know what? This is all-time highs. The Dow's never been higher than this in its whole life. Right here, look. The Dow has never been higher than this in its whole damn life. And we are right here. How could that be a bear market? You know what I'm saying? How could we be bearish yet? It may turn to a bear market. It might turn to one, but it is not one now. And I hope that's what you're getting from this webinar. Now, tomorrow we could have a drop that takes us down so far that it flips all the analysis. But that would be something that might happen. We trade what we see, not what we hope for, not what we think will happen. So let's look at this chart. Dow Jones, if it breaks above the pennant, you can get long. I told you that on this day. It was our last webinar. It did get above the pennant, and getting long was a good move. That was the old news. Now, new news. The 60-bar moving average has become unbelievably useful. The 60-bar simple moving average, look at all the spots where you can find a great trade off the 60-bar moving average. So Wall Street loves it. That means I love it. As long as they like it, I don't care why. I never, ever ask how to reinvent the wheel. I just want to buy a good wheel, a fast wheel, put it on my car and drive down the block as quickly as I can with it. Well, the same thing with analysis. There's no reason to ask why. Just do what you see. The 60-bar moving average is working really well. We are at it right now. See, we are at it right now as I speak to you. In fact, the market is up at the moment. So if you want to see Monday's bar, we're heading up away from this average right now. So don't listen to the noise on the street. Use your eyes and listen to what use your eyes to tell you what's going on and listen to the chart. Listen to the chart. I promise it works better than anyone's opinion. So this chart is showing us that there's massive support and the 60-bar moving average right there. Unless you get under that, this is nothing more than a low, a high, a higher low, a higher high, a higher low. Next thing should be a higher high. Do you see we're not in a bear market? I could not find reasons to come out and tell you we're bearish. So I can't. I've got to tell you we're not. Some questioning, yeah, all right, the head and shoulders is a little bit scary. But for now, as day traders, we are going to stay bullish-minded and trade the Omni, whatever arrow it gives us day by day. Let's see what else we have. We just did knock, right? Oh, we did the Dow Jones. Okay. Once again, these charts have a lot on them because we've been using them for 3 webinars in a row, by the way. This is our 3rd webinar using the exact same charts. Way back when this started, when I was using the webinars, I pointed to the top being in and said, we got a massive head and shoulders, and down we go. And that was one that validated itself. All right. So that happened, and down we went, and blah, 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 and all that crap happened. And then I put this note in for you, an inverted head and shoulders, this one. We're above the 200-bar moving average. It looks good. You should be able to buy this, right? And it has gone up ever since our last webinar. And I granted you've got the head and shoulders right there, right? But remember, we are going to remove these right now, and we're going to pretend, even though we know it exists, it hasn't given itself a name yet. And until it gives itself a name, I am not calling it a breakdown head and shoulders. When it tells me it's one, I promise the day it says it, I'll do videos, I'll put it out, you guys will know, and we'll look at it as what it is.
But for now, I've been watching this go up more than down. That's not the biggest Head and Shoulders in the world. If you ask me, you need one to take over the whole front of my screen to be a topping Head and Shoulders, I would think. So this one took from, let's see if we can find some dates, 10, 12, 21 to 6 to 22. 10, 11, 12, 1, 2, 3. You got 6 months there. This one is from 6/15 to 9/15. You only have 3 months. It's half the size. It's very small. And what I've learned over the years is a smaller Head and Shoulders formation is a continuation pattern, not a topping pattern. So I'm going to call that continuation pattern for now, unless something changes. Now, once again, this has been nothing more than a series of higher highs and higher lows, right? From down here, a high, a low, a high, a lower, a higher low than the one back here. It starts messing around, makes a higher high, a higher low. I mean, that's all it's done. The whole up move has made higher highs and higher lows. So we are not calling the top, not yet. We'll let this thing call itself. And in fact, I mentioned 1, 2 days from now, we could be screaming the top's in, but not yet, because that's not what I'm seeing. What's next? I think we just did DJI, right? Let's go look at this one. So the NASDAQ on a weekly. You know what? Let's get back to this puppy. Let's go look at other ones first. We'll come back to the NASDAQ. NASDAQ on the weekly. Let's go to this guy instead. In fact, even better, there should be 3 weeklies. I want to go see all 3 of them. We looked at all 3. Let's go see all 3. All right. Now we're gonna come out to the weeklies, kids. Now, here's where all of this is going to start to make sense. Remember, you've heard all the chatter, crude's too high, that comes from me. You've heard the chatter on TV, inflation's too high, and everybody else, and the bear market's coming. Get all that noise, right? Lots of noise. But the charts have no noise in it at all. Now, this chart does not tell me we're in a bear market, not even this much. It looks like a bull flag to me is what I told you on 7/23, our last webinar together. And 7/23, by the way, is right there at the end. Boom. It gets above the flag, somewhere right around here. Gets above the flag, and better than that now, it's in this fantastic channel. Look. Fantastic channel. And the all-time forever highs in this chart is here. The all-time forever high that we've ever traded in the Dow is here at this blue line and that circle. All right, we'll make the blue line red so that you can really see it. That's the highest we've ever been. Well, we're right here, kids. We're right here. Where the hell is that a bear market? On what planet would you call that a bear market? Not on planet Oscar or not on planet Omni, that's for sure. So the tip in this was you could buy to break out above the flag. That happened. The new tip, you can buy dips down to the 50-bar moving average. Well, really, it's down to the bottom of the channel now. Look how far back this channel line goes. Kids, it's a weekly chart. This channel goes all the way from 10/14/22. 10/14/22 all the way to 9/23. It's a big, long line. It's a weekly chart, don't forget. That shows support. We are very near the highs. We are not in a crashing bear market yet. Please note this. Please realize that what you're hearing on the street is not what the charts are telling us. So that's your Dow on the weekly, and it does not look scary at all. Let's go to the next weekly chart. Transportation average weekly chart. Now look at this. In the last webinar, I told you this is doing nothing more than stepping higher. Steps up, steps down. Stair steps up, stair steps down. Stair steps up. Now, in this stair step going up, this is the one everyone's calling the bear market in right now, right? Well, I look at it like this. You have a low, and you put in a high. And we put in a higher low, and we put in a higher high. And if we come down and hit this line, all we're going to do is put in a higher low than the one from back here, right? And that would be nothing more than a market working its way higher. It is just simply stair-stepping higher. Am I getting my point across? Do you see that we're not in a crashing market yet? All the fundamentals are ugly. I get it. but we're not in a market that's crashing right now. It is pulling back a little bit, making room for the high price of crude and for a bunch of people jumping out of the stock market and locking in some money in bonds. But I don't think they're going to raise rates anymore, at least not this year. If they don't raise rates anymore, there's really no reason to plow out of stocks and into bonds anymore. If you didn't do it already, why bother? So that's going to plateau, that whole movement out of stocks into bonds. Let me DND that for you, please, so people don't bother me. I forgot to do that earlier. Can you DND those phones over there, please? Okay, so if you don't mind, just go in there and DND the other phones in the office. Hit the DND buttons. Thank you. All right, so if it came down here and put in a series of another higher low, well, so what? That's what it's supposed to do. And the whole thing's above the 200 ball moving average. We are not in a crashing market at this point in time. Now I'm going to go to another chart. The NASDAQ. Now this one, kids, this is our indicator. Anyone who's been following my webinars since the beginning of this year, since the beginning of the year, I have been calling for massive upside to come our way. One of the things I've told you about is the NASDAQ is the one pointing our way. What does that mean? Let's take a look at something. This is your weekly bar, NASDAQ, and I say the NASDAQ is our indicator. First of all, right now, top day, it's in a wonderful bull channel. Moving higher, looking fantastic, bouncing off the support. There is nothing on that chart that tells me the market's about to crash. Nothing, nothing, nothing. Okay, it also got above the 200 ball moving average. In one of the webinars I did, I came out and said, this is big. Oh my God, we're above the 200. This is great. The 200 ball moving average is this teal one, right? Now we're going to go look at the 200 ball moving average. Follow this green average with me as I go back in history. By the way, you're looking at the COVID crash right here. What did it hold? The 200 ball moving average. Keep that in mind. Watch this. We're going to go back in history. We get near it. But what happens when we get near it? Big rally ensues. What happens when we hit it? Big rally ensues. Okay, keep that in mind. What happened when we hit it here? A big rally ensued. Okay, let's go back now. Let's go all the way back. Do you know when you finally broke the 200 ball moving average? You didn't break it in 2004. You didn't break it in 2005, 6. You didn't break it in 2007. We broke it temporarily for the crash of 2008, 9. Boom, boom. That was it. That was it. Watch this. From 2009, it gets above the 200 ball moving average on your NASDAQ weekly and never, ever gets below it again. But watch. Watch the average. What happened? We got above the average and a big rally ensues, right? Beautiful. Continues. Massive rally ensues. You get near the average. Big rally ensues. Comes back down again, gets near the average. Big rally ensues. Then COVID forces us to hit the average, right? Boom. During COVID, we actually hit the average. And what happens? A big rally ensues. They start raising interest rates right here, and we go down. What happens? We hit the 200 ball moving average. We get above it. A big rally ensues. That's what we're getting, not a crash. That is our indicator. That's how this works. We called for 5,400 this year in the S&P. Omni did when the S&P was 3,800. We're now pressing the 4,800 area, 46, 48. We have a whole quarter to go up a few hundred more points. That's where we're probably going to go based on everything you just seen. So if we go back and we take a look at these crazy head and shoulders here, I believe that was on chart 18. I cannot make the call, kids. I'm sorry. I cannot make the call for the downside with all that evidence I just showed you. So that is what I have been looking at. I don't know what you guys have been looking at, but I wanted to make sure that everybody was aware of that. We are not in a crash right now. It is not what's happening. It could change, but I've just shown you unequivocal proof that that's not what's happening. So cover your ears and just use your eyes when you look at the charts and don't listen to the crazies out there that don't know how to read a chart. Jeff, any questions?
Tons of them. Tons of them. So we had a question earlier, and these tend to tie hand in hand. So I'm going to ask them both at the same time.
Okay.
Somebody asked, and I didn't write down the name, why do you use EMAs instead of, or SMAs instead of EMAs? And Greg wanted to know how you zero in on the best SMA.
So I find that Wall Street seems to be, a larger crowd of Wall Street seems to use the SMA. And how do I know that? Because it seems to work better than the EMA. It seems to stop at the right spots. Now, there is no way that myself, everybody watching this, and all the Omniacs I know on the planet could stop a market with us getting in or out, right? But Wall Street's big enough. Wall Street's big enough to say, okay, boys, plow in at the 200 bar moving average, and it works. So you have to find what they use, and I found that the MA seems to be better than the EMA, which means this, simply more of the minions on Wall Street, wherever you want to call Wall Street today. It's not quite at Wall Street anymore. It's all over the planet, all over the country. But the concentration of Wall Street seems to be using SMA over EMA. I used to use EMA back in the day when I was more of a scientist. Now that I'm more of a purist, SMA works better. How do you find the proper average? For me, I find trial and error. Usually there's averages already snapped on my charts, and then time starts to pass, and those averages suddenly start to not work anymore. And that's when I realized Wall Street's moved on to a new average, and I start trying to find what Wall Street's using next. So the averages do morph, and every single tip that I've given you today, if it involves an average, that's temporary. It's now. It might last for 3 weeks, 3 months, 3 years, 3 days. They tend to morph when markets move into when markets change direction dramatically. You'll find that new averages are going to be used by Wall Street. In fact, when you have a really quick up run, they go to the really small averages, 21, 31. And when the market starts dropping down, they go to larger averages. Why? It's the way the world works. I don't know why. I don't care why, as long as the tire works for me. Anything else I can help you with?
Bill was hoping you could look at Tesla real quick.
Sure. Tesla. Now let's.
I think that's the wrong.
That's not Tesla.
Let's try again.
If that was Tesla, Elon be broke by now.
Soon as that, anyway.
Is it .o?
There you go. Yeah, you got it.
Let's drop some kind of template on here so we can see what's going on. All right, so lovely, lovely, lovely Tesla. Let's label this so that we know what we're looking at. So we've got Tesla, and this is a daily bar, right? Yes, all right, so Tesla daily. So just looking at, without having anything on this chart at all, I recognize something that you guys who have been hanging around me long enough would recognize, called the F flag, right? Simple, 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 but let me show you what that is. So we've got an F flag, if you will, sitting right here. And the F flag is this interesting phenomenon because it's the opposite of what you would expect. So I don't know that I want to get into a huge lesson on flags here, but a traditional flag, and let's just make this a little darker for you, and you'll see why I'm getting at this. So a traditional flag is something that has a flag pole like this. And then if it's a bull flag, the flag goes this way. All right, so that's what you would normally call a bull flag. But what is that? It's completely bastardized, right? That's not a bull flag. Well, I kid you not, many years ago, 10 years ago, I stumbled onto this new formation, and I qualified it for 5 straight years before I brought it to my Omniacs. Then I knew what it was. That, my friends, is called the F flag. It is bullish, and you can ride the F flag as long as you stay inside of the channels of that F flag. You can ride it as long as you want. But at the end of that flag's life, it likely will go down, not up. It's opposite for some reason. The breakdown will be opposite of what you would expect. But you can stay in that flag for weeks on end. So that's the first thing I've noticed, is that it's in a nice bull flag for now. Now let's get rid of that. And of course, if you want to do simple trend lines, you can just go, well, are we moving up or down with Tesla right now? And clearly we're moving up with Tesla right now, right? Simple, simple. And there's a better channel than that building right here. So let's go create that channel for you. And you'll see what you should be doing in Tesla right now.
And that's a parallel channel. I'm assuming it looks pretty parallel to me. And there is what you need to do in Tesla for the moment. Stay inside of the confines of this channel, and it seems to be working quite well. And that channel is pointing up, which means you can be a buyer of dips. So fundamentals, you go out and look at all the fundamentals you want, and China just banned Teslas from their government employees and all that stuff should make it bearish, right? It's going up. That's why you're not supposed to use your head. You're supposed to use the charts and your eyes, not what you think, because we're humans and what we think, it's almost never right when it comes to trading. So you've got that happening. Now you've also got some downside projection or downside resistance that you will see get tested. Boom. This should be getting tested very shortly. And once this gets tested, you get above that. Wall Street's not blind. They're not going to draw trend lines. They believe me, they use trend lines. They will see us get above what I'll term red, because for now it's resistance. And we'll extend it out there. We get above that, they'll come in like gangbusters. As you can see, that's been holding us down lately. But overall, you're in a very nice, solid trend. You're certainly above whatever average was sitting on here. I got to assume it's the 50. And that is the 50. Let's go look at something a little thinner than that. 50. Let's see if, I don't know. The last one we looked at was a 31, right? They were using a 31 on NVIDIA, right? I wouldn't say the 31 on this chart, so we'll get rid of that. So they're not using that. I would use that channel in Tesla. I like Tesla to buy dips. Nothing wrong with the look of that chart to me.
All right, I think we have time for one more, maybe. Steve wants to know, yields have been inverted for a while. Do you have a prediction for rates mid next year?
So I think rates, the Fed's not going to just continue raising rates like crazy anymore, because basically supply chains are back to normal and inflation would be lower if it wasn't for crude. So let's say the Fed doesn't do too many more raises. I would think that we're going to stay basically where we're at. And if the Fed stays quiet, the market explodes. Now, the chart is what's supposed to tell us what's going on, right? So let's go look at that instead. According to this chart, we are going to have higher rates. The bonds should make their way down to 109. That's going to probably equate to a 10%, 10% rate. So it's going higher unless that chart turns around. I only have the chart to use, right? I don't run the Fed, so I couldn't possibly give you an exact answer. That chart tells me we're going to 110, 109 in bonds. That puts us at about 10% rate.
All right. Let's see. Here's another one. I guess we did have a question, time for another. And Bam Bam wants to know, in your opinion, what market has the biggest potential for movement for the rest of the year?
NASDAQ.
Okay.
NASDAQ's got the biggest potential to make the most move. And I think you will find S&P is going to make a very surprising move before the end of the year as well. You get a single word that the price of crude is somehow going to be relieved, and the stock market will you'll see rallies that you've never seen before, because it's dying to go up. You got crude at $91. You got interest rates rallying higher. You got all sorts of reasons fundamentally to think lower, and this market is solid as a rock. Just imagine if they can get the price of crude to come down just a little bit, what would happen? You got a lot more bullishness here than bearishness.
All right. Should I go and sign up at livewithoscar.com?
Yes, if you would like. Let me just show you a couple of things very quickly. I've got livewithoscar.com, where you can find me any day, literally 24 hours a day. I am here. Let me just pull it for you. Should be sitting in one of my windows. So one of the things I don't do, and you could ask Jeff, is I don't do a lot of advertising when I do these webinars. So he helps me out. Thank you, Jeff. So
you bet. Here to help.
Come to livewithoscar.com. Literally come here. If you're not a member, in just a moment, you'll hit register. No credit cards are required, nothing like that. You use a username, password, then you're going to get an email. That email is likely going to go to spam. Click that email, and you can pop right into livewithoscar.com. And in one click, you can be in a live trading room with me. That live trading room is something like this, where I am always on camera live. I am right now. The other camera you're using, otherwise there'd be two cameras in this room. You can see me at all times.
and there's no charge for this. As I mentioned, I am going to give all of you watching today a 1-month free trial of my trading recommendations. I put out recommendations 24 hours a day. These trades go out to people all over the planet. When they see the recommendation, they react to it, and I get them in and out of the markets. It tells you where to buy, where to sell, where to place your stops, the whole 9 yards. And you guys are on me. When I give you that trade, I'm running the trade. You guys are fine. So I send those out 24 hours a day. You can easily get them by grabbing the Daily Omni. But what I want you to do is come into my chat room. So you'll just click that, come into my chat room, and boom. So what happens is it opens up another window. It looks just like that. You click one more, and you are in the live chat room. So there, it's my hangout. I spent most of my life in a trading pit standing around with a bunch of people. And instead of doing that now, I don't have a trading pit. I've got a trading room where you guys hang out. So that's where we are. The next thing I'll tell you is you can go to Omni Bootcamp. And if you want to come meet me and hang out in Vegas for 5 nights, 4 days in my home office and learn a 4-day trading course, you go to Omni Bootcamp. Just simply fill out a questionnaire. You click here, start your application, and I will contact you. I am only letting the maximum 5 people in. It is here in my home office. Listen, I'll tell you one thing. There's a lot of software out there you could buy. One of the things I've noticed in my life is if you can buy the software on the shelf, if it's packaged up and ready-made and 1,000 people can buy it, why would you want it? I would never dream of selling my Omni. I've got an Omni much more intricate than the analysis you've just seen here. I would never box it up. If you don't come to Vegas and spend 5 days with me in my home office, you'll never learn the Omni. So for whatever's out there, maybe it works for you, maybe it doesn't. I would never dream of selling my Omni to anybody. Because when you have something that works, you keep it close. You don't sell it to people. Anyway, if you want to come hang out with me and let me teach 5 people, you'll go to Omni Bootcamp and fill out your applications. Then I will call you and qualify you and see if I want you to come to my home office where my wife and children live. So it's as real as it gets, kids. If you want to come out and hang out with me, I promise I will show you how to time these markets. What you're seeing here is my technical analysis 101 kindergarten analysis. I promise you, I could do this drinking milk and cookies laying on a cot in kindergarten. That's what I'm showing because it's effective and you see what's happening with the charts. What I would show you at OmniCamp is exactly how to pinpoint where to get in and out of these markets, that the markets can't go anywhere without you knowing where they're going to go next. But that's only going to be a handful of you and not many get approved. Anybody who wants the free trial, you can have that. Jeff, did I advertise this time finally?
You did great. Yeah. You did a couple, we have questions that we just won't get to, and I apologize for that just due to time. There's a couple comments I wanted to say. Native Gamer said, "Oscar's the man!" Exclamation point.
Well, thank you.
And in addition to that, Pauline called you a goat.
Ooh, well,
Oscar is the greatest of all time.
I can tell you this, the charts are the greatest thing in the world, and I can read them really well. Whatever that means, I don't know, but thank you.
All right. Very cool. I want to say thank you again, Oscar, for coming in, spending about an hour with us. We love having you.
As always, love doing these. If anybody needs anything, please come see me. I don't charge for any of this. Just come hang out with me, okay? I'll set you guys straight. Thank you. I will see you all at livewithoscar.com. One last thing I'll do for my Omniacs. You want to say this with me, guys? I know some of you will do it. Are you ready? 1, 2, 3. Stop or in. Emotions are rock and roll, kids. That is the truth. Put your stops in, keep your emotions out. I'll see you all at livewithoscar.com.
All right. Thanks a lot, Oscar. We love you. Thanks for coming in, man.
Bye-bye.
Bye. All right. Very cool. I didn't know how the chant was going to go. Otherwise, I would have joined in. So in any case, we love having Oscar in. You can find out, you can join Oscar, livewithoscar.com. You should do it. He does a great job. So we go ahead and we're going to transition straight into this. I do want to talk a little bit. A couple years ago, we sat down and did a masterclass with, every time I put my camera on, that's all I can see. We went and did a masterclass with Oscar a couple years ago. I think it was 2021, 2022, on technical trend lines and formations. And in it, he talks about how to properly draw up a chart, how to do trend lines, how to find support and resistance levels. About a 3-hour class that he did, and it was great. He did such a good job, and it is something that we do have available. Normally it's $4.99. Here at the summit is $3.49. It's a one-time cost, and you own it, instantly available. You can watch it right on the MetaStock.com website. To take advantage of that, you can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. We are also including that technical training on technical formations and trend lines as part of our Summit Action Pack. With it, you're going to get Steve Bigelow's Candle Profit Systems 2, Vince Vora's Vora Victory, the 3S Code, Trend Lines of Training, Jake Bernstein, he's coming right up, love Jake, setups and timing triggers. You'll get 30 months of Learn MetaStock and Unleash the Power of MetaStock video and a workbook. All of this would normally cost $47.37 for all of these add-ons. Here at the event today, it's going to be $22.37. You can do that by going to metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. Cool. I'm just looking to see if I have any questions. Thank you, Olga, for coming. Again, there's a lot of questions that came in that I didn't have the chance just because of time. Go to livewithoscar.com and sign up for the room and get in there. He's given a free month of it away. You should take a look at it. So a couple of things I wanted to point out. Actually, let's do this first. I want to say thank you to Stocks and Commodities Magazine for sponsoring our event, every time we've done it for the last 10 years. We absolutely love Stocks and Commodities. Great magazine, great people to work with. One of the things that you probably realize because you're here today is it's always important to kind of get better at what you're doing. And I think getting a magazine every month that talks about different trading techniques, something you can read, is very, very helpful in kind of doing that. And so if you want to get a free issue of Stocks and Commodities Magazine and you're watching us on YouTube, you need to do this today. So if you're watching 6 months in the future, hi. Yeah, we won't be able to do that, but you can go to metastock.com/traders-summit. You can register for today's event. And when you do so, all of the speakers, Oscar's giving away a free month of his room, but you can also get a free month of Stocks and Commodities Magazine. So go to metastock.com/traders-summit to sign up for that. So there you go. Couple things, schedule change today. I forgot to mention it before Oscar went. Obviously, we had Steve Bigelow on the calendar to go for Oscar. Steve was not able to make it due to health issues. I've been working with Steve for decades now, and he's never missed an event. So I'm really a bit worried about him, but I do appreciate Oscar for stepping in and kind of moving his schedule around to kind of accommodate that. And we hope Steve is feeling better real quick. He's somebody that we definitely queried about. A lot of questions about the recording. As you probably know, we're simulcasting this to YouTube. And so for YouTube, basically, if you're watching this on YouTube now, hit bookmark and you can just save the address. If you're watching on GoToWebinar, here is the actual link you can use. And don't worry about saving the address now. What's going to happen is after the event, this address will be sent to you in about an hour. So there you go. All right. And I think that's it. Oh, yeah. Lastly, if you're watching this on YouTube, welcome. I'm Jeff. Hit like and subscribe. It helps a great deal. We appreciate it. And we're always doing really cool events with really cool speakers like Oscar, like Jake, like everybody here. So if you want to be in the know, if you want to be suggested to great content, I think today's going really well. I hope you agree. But if you want to find out more about sessions like this and be notified, hit subscribe. And like, it helps a good deal. We appreciate it. So our next presenter is Jake Bernstein and Brian Latta. Jake I used to live right by Jake, and I remember we would go and do a lot of classes with an options group in California. There was a lot of fun times had there. Jake is a great technician. I remember his story about how he started trading futures. He saw an advertisement about eggs going to the moon or something like that. And yeah, I met Jake. Hey,
That is correct, Jeff. That is correct.
Yeah. Jake has a great setup, trigger, follow through kind of mechanism that he has used for a number of years. And I really like kind of the way that he wants to be able to measure something and have a very specific process. Brian actually has helped Jake build some really cool indicators, and they're going to show those today. But Jake, I can hear you. Let's go ahead and get you and Brian on. And which of you are going to be sharing your screen today?
I'm going to share my screen, and later on, if Brian wants to share his, he can do that too.
Okay. Let me make you the presenter then.
Okay, very good.
And then Brian's been on all day, but I'm going to go ahead and send him a little bit of a note to put like a little bit of a mic request to him. Brian, if you can hear us, let's have you kind of go ahead and log in as well. Or not log in, but turn your mic on at least. Jake, I can see your spreadsheet.
Okay.
Or PowerPoint. Brian, I just heard you.
Can you see full screen?
All right.
Okay.
Very cool.
Full screen.
I can see you. I can hear both of you. Well, I can't see you, but I can hear both of you, and I can see your screen. So
Cool.
you guys are all good. I'm going to go ahead and get out of the way.
Ready to go.
All right. It's all you, Jake.
Thank you very much, Jeff. Appreciate the opportunity to present for MetaStock, and appreciate the opportunity to be joined by my friend and associate, Brian Latta. We will not be using the live camera today. We didn't want to distract you with our gorgeous looks. We want you to go strictly to the charts and the indicators that we're going to show. As Jeff said, he used to live close by to me. I'm in the Santa Cruz Mountains right now. It's been my pleasure to be associated with MetaStock in one form or another for many years. I think, Jeff, the last time I saw you, were we in Singapore?
No, I think we were actually the last time we were actually back in San Francisco, but we that was just right before I think the pandemic.
Correct.
And,
okay.
then Singapore before that.
Right. So let me get going here. Okay, ready to go. So I'm going to introduce myself briefly, then I'm going to let Brian introduce himself. Jeff, how much time do we have? An hour or what?
Yeah. Go. Yeah, absolutely.
Okay, hang on one second. So the usual disclaimer, and just a little bit about myself. Been trading since 1967 and probably beginning to look like it and sound like it. Written over 43 books. I don't have to read you chapter and verse from what I've got here, but let's just say that I've been around the block a few times and I'm a real trader. I really trade. I trade practically every day. I'm not a day trader by intent, but many times my trades get closed out by the end of the day because they're profitable and have reached their profit target, or because they're losing trades that I don't want to carry overnight. I'm not going to tell you too much more about myself right now. I'm going to turn it over to Brian for a moment. He can introduce himself, and then I'll take it back from Brian.
Thanks for that, Jake. Well, I don't have 55 years, but I do have 23 years in the market, as I started a little bit later, but did use some of my background in statistical process control that I learned on the job to start programming trading systems after realizing I was a terrible discretionary trader. So for that, I've constantly been coaching since 2002 and created 4 trading systems that have been consistently profitable for quite some time. And I really enjoy working with Jake at this point. He's my original mentor and got me into systems, and I surely appreciate that. Thanks, Jake.
Thank you, Brian, as do I appreciate you. So let me just say a couple of things about my trading. I am a numbers guy. Everything I do is by the numbers. Everything I do is based on specific rules, specific strategies, specific numbers. And I'm a minimalist, which means I don't like to complicate things. I like to use the least amount of information to make a decision, as opposed to the most amount of information. When people look at a brilliant piece of trading software like MetaStock, they are sometimes overwhelmed with so many choices, so many indicators. How do you use them? How do you combine them? How do you understand what they mean? How do you get signals? How do you trade them? These can be very overwhelming things to most traders who come into the market and have no experience. And that is probably one of the biggest reasons why people lose money, is because they can't focus on what is really right for them to do. So in order to use an indicator, you have to understand it, Where does it come from? What does it mean? Most indicators come from price, which is why they track price very closely. We want to look at indicators that are not closely related to price, but correlate or lead. I'll talk more about that momentarily. So in this webinar, and again, I appreciate the opportunity that Jeff has given me to present my work to you and to be joined by Brian. In my work, as you will see today, we are very specific. It's completely clear. If I teach you something and you do it independent of me and you do it correctly, you will get the same result as I do in terms of signals, entry and exit, no interpretation. So for me, if I have to look at something like the 50 and the 200-day moving average cross, that doesn't mean anything to me because of the track record. If I go back and I test it and say, if the 50 goes below the 200, how often is that a profitable trade? If the 50 goes above the 200, the so-called golden cross, how often is that a profitable trade? The statistics are pretty bad. In fact, it's wrong most of the time. And by the time it does start to work and make big moves, you've run out of money, or you've run out of patience, or you've run out of discipline. So it's not my intent to criticize what anybody else does. I can only tell you what has worked for me and what doesn't work for me. Let's also say this. The vast majority of people who subscribe to my services are actual traders. Some of the biggest hedge funds in the world buy research from me. Why? Because they know it's objective and clear and not hyped and not exaggerated. And by the way, in my spare time, I wrote a few books. Here's a few of them on day trading, which again, I say is not my profession in terms of the markets. I'm not primarily a day trader. I am a short-term trader and I'm an investor. So we're not going to talk about day trading today. So important. Nothing that you can learn here from me, nothing that you can get from MetaStock in the way of indicators or strategies or from Brian, nothing is going to work for you if you don't have discipline. You've probably heard it a million times. Discipline, discipline, discipline. Joe, you wouldn't lose money if you had discipline. Joe says, you're right. I have no discipline. Where am I going to get discipline? Is it going to come from a book? Is it going to come from the book, The Disciplined Trader, written by Mark Douglas? Rest in peace. No, Mark was my first mentoring student about 30 years ago. Discipline will not come from a book. It will not come from laying on the analyst's couch. It will not come from the analyst or the psychoanalyst or the psychologist telling you that you lack discipline because you had improper potty training. Discipline will come from confidence. Where's confidence going to come from? It's going to come from knowing that you're doing what you're doing works. Where's that going to come from? It's going to come from understanding the precise methodology. It's going to come from understanding the exact rules, and it's going to come from the back test. Does it work? Has it worked? And so forth. So you must be in complete awareness of what you're doing. You can't just look at a chart and say, well, today we're going to use the 3 and the 10-day moving average, but next week we're going to use something else. You need to know, did it work? Now look, some people are very intuitive. They understand a chart by looking at it. They understand what they're supposed to do. Maybe they're clairvoyant. Maybe they're psychic. I'm not one of those people. I started in the market in 1967 with money I borrowed from somebody else. I was raised in a very poor family, grew up in one room in someone else's house. I was a refugee to Canada from Europe. And so I've had to do it the hard way. It took me 15 years to learn how to trade. And it was a very important 15 years. And I am very, very, very careful not to repeat the same mistakes that I made for 15 years. And unfortunately, many traders all over the world, especially new traders, are making the same mistakes right now and continue to. So my goal is to end those mistakes, to bring you confidence by bringing you discipline. And the discipline will create more confidence because using the discipline, you will make money, which will say, hey, I'm doing something right. More about that later. Let's go to the next slide. Patterns. Everything I do is based on patterns. If you understand the patterns of the markets as I hope you will understand more of that today by the time we're done. If you understand the patterns of the market, you understand everything you need to understand. The speaker before me, before us, Oscar, did a lot of talk about patterns. So everything in the market is a pattern. Example, trend lines, moving averages, flags, pennants, support, resistance, breakouts, divergence. These are all patterns. Even though some patterns look good on the surface, when you put them to the test, they don't work. So people talk about a reversal, a key reversal. These are algorithmic. You can take a rule and say, if the low of yesterday, if the low of today is lower than the low of yesterday, and if the high of today is higher than the high of yesterday, and the close of today is higher than the close yesterday, you have a key reversal. Easy to identify, easy to spot by the computer, especially with artificial intelligence. And then you ask the question, does it have predictive validity? Does it go forward in real time and make money? If so, how do you do it? What do you do with it? How do you maximize the profit? These are all the things that have to be answered before you can get confidence. You can't just take somebody's word for it who says, look at this really interesting Fibonacci pattern. Oh, it's a Fibonacci pattern? Oh yeah, that's great. Yes, Fibonacci patterns are so beautiful because they occur in nature. So what? Do they predict market validity? Do they predict market direction? Do they have a specific entry and exit points? That's what I need for my trading to be profitable. So for example, I had one trade today. It was a day trade. I bought the S&P early in the day, and within 30 minutes, I was out of my profit target. I'm done for the day because I don't see any other signals right now. And that was all based on specific numbers. Didn't have to ask anybody what to do. Didn't have to look at any indicators. Didn't have to consult any rules because I've done the rules so many times I know exactly what to do. That's what it's all about. It's all about knowing the rules and not interpreting. So if I have to show a chart to 10 people and independently ask them, what's your conclusion? And they come to 7 different answers, which is the case for many indicators, that's not for me. I need people to agree on 10 different people to agree on the same answer to the same question, independent of each other. So unless that person has a learning disability, or unless I taught it to them the wrong way, there's a problem. I can't use that. So there are many different kinds of patterns, but most of all, here's what I want to tell you. Do not interpret anything. The 2 dirtiest words in the language, the English language, is looks like. What does that mean? It means this looks like a bull market to me. No, it looks like a bear market to me. No, it looks like a mini bull market to me. What's a mini bull market? I don't know. Well, it looks like support, looks like resistance. There is no looks like. There is only is, isn't, and that's it. So having an opinion will cost you money. Don't have opinions, have facts. Always trade based on what you know, not what you don't know. And I respectfully submit to you, there are many things we don't know about the markets. There's only a handful of things that we know. Let's use the things we know. Let's use AI, actual intelligence, as opposed to AS, actual stupidity. Don't use what you don't know. And don't go talking about your opinion. My opinion is this. Who cares about your opinion? If someone pays me for my opinion, that's different. But if someone wants an opinion, you can get opinions listening to CNBC all day long, and it will drive you crazy. So I never say, here's what I see. Here is what is. We talked about the Golden Cross. We've talked about the Death Cross and all the blah, blah, blah. You can find it on TV, internet, all day long. So you've got to make choices. Choices are very important. So you always want to know exactly how your strategy works. And you always want to deal with 1 or 2 of these kinds of indicators. You have leading indicators, lagging indicators, and concurrent indicators. What do I mean by that? Leading indicators are indicators that change direction before the markets do. They will let you know that something's going to happen. You take that leading indicator that something is going to happen, and you combine it with a trigger. So a leading indicator is what I call a setup. It tells you that something's going to happen. that something has to be triggered by a timing indicator, and then that indicator has to be managed in that position so that you will minimize your loss and maximize your profit. So examples. Moving average crossovers are lagging indicators. They turn after the fact. Divergence is a leading indicator. It tells you ahead of time that something's going to happen, but you need to describe the divergence in actual algorithms so that the computer can test them. Cycles, leading indicators. Seasonals, leading indicators. I will show you some seasonal work today that's very accurate, and it has statistics. I can tell you the numbers for those statistics going back 100 years. That's what you need. So what's your choice? Do you have a choice? I say yes. I will show you, and Brian will show you what choices you have. So leading indicators, lagging indicators, and concurrent indicators. Do yourself a favor and do me a favor. Stop using lagging indicators, because if you're using lagging indicators, by the time the market is zigging, you'll be zagging. Lagging indicators will turn late on a bottom, they will turn late on a top, and you will give up a lot of money in between. In addition to that, lagging indicators have very predictably low reliability. They are wrong a good 60 to 70% of the time. You want to tilt the odds the other way. You want to be right 60 to 70% of the time, not wrong 60 or 77% of the time. So we will use the leading indicators and concurrent indicators. So right now, for example, I'm going to show you a trade that you can make in Alcoa later this year that's been right over 80% of the time for the last half a century. That's what I mean by specific leading indicators with odds of success. We also have current indicators. These turn very close to the turn in the markets. They are very, very accurate, but sometimes they're so fast you miss them. So it depends on your time span. How much time do you have to devote to the markets? Do you want to sit there and watch every tick, or do you want to take the nice laid-back approach and look at it from a distance? So let's go ahead and forward and think a little bit about this. So let's talk about why so many traders lose money. It never ceases to amaze me that I've been in this business for such a long time, 52 years to be exact, and I still see people making the same stupid mistakes, unnecessary mistakes that they made so many years ago and that people have still been doing for so many years. What are the mistakes that cause people to lose money? And by knowing the mistakes, you can avoid those mistakes and replace them with winning behaviors. Yes, we will talk about technical indicators, but first a little bit about psychology. After all, I did graduate with a clinical psychology degree and worked in an institution as a clinical psychologist for a long time. So I need to have my education be worth something. So many traders lose money because they lack rules. They can't take the necessary risk. They say they want to day trade the full S&P contract, but they don't have the money to do it. So they get scared. They use mythical or magical misguided beliefs disseminated by the internet. They listen to deceptive claims promoted by charlatans. They listen to false glorification of trading perpetuated by brokerage firms. So you see in the ad, the man is sitting at his computer looking at a chart. All around him, the world is collapsing. His kids are throwing stuff at each other. They're throwing garbage on the floor. The man's got his headphones on. He's focused on the chart and he's happy. He's making money, or at least you think he is. Traders lose because they have too much trading activity. They make too many trades. They have ignorant day trading methods. They have common thinking. Example, common thinking. Let's buy it here and put our stop in one tick below the low, one tick above the high. Yes, do that because everybody's doing that and you get stopped out. A lot of people don't understand orders. What kind of order should you use and when should you use it? Most people are emotionally attached to the markets. Their mood, their attitude, the kind of day they had varies with how well they did in the market. In order to trade effectively, you have to have emotional detachment. You have to not care. I know that sounds like contradictory, counterintuitive, but in order to be a good trader, you have to not care. It has to be nothing more than a job to you. And you will begin to care as soon as you begin to risk too much money. You know you're risking too much money as soon as you start to care. So, what about this? How winning traders win? Easy. They use rules-defined strategies. If this, then that. If you find yourself in a position where you're not sure what to do, you're treading on dangerous territory, you must always know exactly what to do by the rules. Winning traders have discipline because they trade by the numbers. So I'm a trading by the numbers guy. I'll show you what I mean. You also have to remember what I call the 80-20 rule. And you're going to believe me now, or you're going to believe me later, or you already believe me. 80% of your money is going to be made on 20% of your trades. Which means what? Which means that even if you're right 8 times out of 10, if you're not making more money on your winning trades than you're losing on your losing trades, you're still losing money. You could have a system that's right 90% of the time. You're making money 9 times out of 10. You're feeling good about it. But the one time you lose money, you lose more money than you made on the previous 9 trades. Have you ever been there? So winning traders have confidence because they use a trading model and they're clinically dispassionate. So enough of my little sermon. Let's get into some of the real stuff here. Let's look at a seasonal pattern. Here is a seasonal composite chart. We've taken every year of the Dow Jones all the way back to 1901. That's right, 1901. More history than anybody wants to look at. And we've made one chart that shows the behavior of the Dow Jones the average year. We did that mathematically by taking the high of each year and making it 100, taking the low of each year and making it 0. So this is a pure trend chart. It tells us when percentage-wise prices go up and when percentage-wise prices go down. Example, look at the month of September. See all these 51, 51, 51, 51? It means that since 1901, it's been a 50-50 proposition in September. Half the time the Dow will go up, half the time it will go down, but it has a bias to the downside shown here. So what does that mean in actual behavior? In actual behavior, it means September is going to be a great month, or has been a great month, or usually will be a good month for swing trading, short term, back and forth, back and forth. So you have to use a swing trading method to capture this behavior. But let's look at the first 3 weeks of April. 3 arrows up, percentage of time up 60 to 62%, trend up. This is a great month for being long the market. And if you go back and you check and see how often have you been on the right side of the market, how often have you made money in April, you'll see the percentages have been very good. Now let's look at this. Clearly, the most predictably bullish time of the entire year has been October, November, December. And if we want to, all we need to do is make one click and go down to a daily chart and see what the daily charts look like. Very, very simple. But we can do more than that. By using the computer and using history, we can go back and ask the question, since 1920, what has been the absolute highest probability trade we could make? It's right over here. Buying the Dow Jones, end of day, October 26th, or the next business day if the market is closed, getting out to January the 10th, risking 15% close-only stop has been right 83% of the time. So that's why I'm a numbers guy. I love numbers. I can see the entire history of this trade every year. Does that mean that every year is going to be exactly the same? No. Does it mean that it's going to make money every year? No. But it does mean this. 83% of the time it will, 15% of the time it won't, or 17% or whatever that comes out to be. But I know what my risk, my entry, my exit, and everything else, including my average profit per trade, 297 Dow points. Very, very simple. Or percent average profit, 5.93%. So I can do many things with this information and clearly and predictably know what I'm going to do. But because I use a trading model, setup, trigger, and follow through This is only the first part of the process. And as you can see, it's scientific and mathematical. But I want you to appreciate one thing before I drone on. Since 1901, have there been several world wars, Korean War, Vietnam War, Desert Storm, inflation, recession, the Great Depression, Democrats, Republicans, idiots, you name it, we've had it. And yet, the percent probability continues to be favorable. Can you imagine statistically 83% probability over so many years, given through all of these different economic environments? Truly amazing. But let's go forward. We can take our model, set up, trigger, and follow through. The pattern, the trigger, which is timing, follow through, consists of three parts. Where am I wrong? Where am I right? And how do I maximize the profit when I'm right? I'll show you some of that soon. Let's look at another pattern, an insider pattern. Now, I'm not sure if you can get this yet still on MetaStock, but it's available. We're looking at a chart with the Commitment of Traders report. The Commitment of Traders report divides market participants into three basic groups: large speculators, small speculators, and commercials. Commercials being the most important group, the individuals or organizations or enterprises that actually use this stuff. So here, looking at a chart of copper, we can see in red, commercials are hedged the market. They're selling all the way up. In green, they're buying all the way down. Look at what precedes one of the biggest bull markets in history, right over here. Big commercial buying activity. Who are these commercials? Copper mining companies, end users, copper processors, large hedge funds. These are all individuals or organizations that easily predict the biggest moves in history. So within the context of what I've shown you, setup, trigger, and follow through, this is a setup waiting for a trigger. Here is a trigger. Or I should say, let me put it another way. Here's a confirmation of the trigger. We have a trade coming up in copper, November 21st through January the 9th or January the 5th. 72% probability, average profit 10.93 points in copper, which is 10.93 times $250, which is a good amount of money over a relatively short period of time. And we have the entire history of that trade. We can also put it on a chart like this and see when this happens. Notice on the previous page, it starts November the 21st. This is what the chart looks like. Right about here is where we go. And this is the move that we're trying to lock in right over here. So it's a very specific process that we use that takes into consideration all of these different elements. There's a similar pattern happening right now in corn. If you're a futures trader, look what's happening. For the first time in a long time, commercials are buying corn. Some commercials are selling corn that they take in from the farmer, but the majority of commercials are long the market. Notice what happened the last time they were long the market. Right over here, leading indicator, concurrent indicator, prior to one of the biggest moves in the history of corn over the shortest period of time. So within the context of what I do, this is a setup waiting for a trigger. So we can also use the expansion contraction indicator. It's a pattern that's so easy, so clear, so objective, and so specific and rule-based. I'm going to show it to you right now. And thank you to Brian for figuring this out. And thank you to Jeff at MetaStock for putting this on the screen with the great code that you wrote that shows it. So Brian, I'm going to turn it over to you for a minute. You can explain what this chart means.
Thank you, Jake. The bottom indicator, which is expansion and contraction, is really just measuring price movement through Jake's moving average channel, which are the blue and the gold lines over price. So clearly it's given us two indications. There's a cone or a cloud. The green shaded area in the background is a long-term trend, and the green line and the red line are the short-term swing. So this indicator, which does change on every bar and just requires the current bar for data, is concurrent and will change rapidly. Although it's not perfect and doesn't hit every swing reversal, it's really clear in the strong moves up and the strong moves down, being a concurrent indicator. There are also lines in it which identify when it's strong or weak as far as trends or swings. Horizontal lines in that give us the normal range. And also way at the top, there's also a line up there that's a solid gray line that will show us technically when we might be overbought or at a price extreme. So in the strongest part of a move up, the short turn line and the cloud or cone of the background will be rising. So that's a strong uptrend where Jake's just pointed to over into the end of August, and we've remained strong up since then. So in that particular pattern, we can use also divergence in either the short-term lines or the long-term trend. So there's a concurrent indicator, which also can give you some leading indications also.
Let me add to this, Brian, if you don't mind. Everything is written down in specific rules. So for every indicator that's shown on the screen, we know what it is. We know when it turns bullish. We know when it turns bearish. We know what support is. We know what resistance is. We know we have a specific definition of overbought. We have a specific definition of oversold. And that's what's crystal clear, which is why we trade by the numbers. So 100 people looking at this chart who are familiar with the methodology will reach the same conclusion, and it won't be a matter of opinion. It'll be a matter of a fact. Now, that doesn't mean that the trades are always how to get that. Thank you, Brian. We'll come back to you shortly, okay?
Thank you.
This would be the moving average channel by itself. And I want to show you this chart as well, because the last time we had this configuration in corn, right over here, it was reflected in the earnings of the commercials who run the corn market. And who would those commercials be? Archer Daniels Midland, Bungie Grain, the Andersons, ANDE, or Bungie Grain BG. These are the commercials that make a ton of money because they were smart enough to know their business and start buying before all of this happened. And all the way up, as this is happening, they're unloading, taking profits on the positions that they've accumulated during this period of time. Very smart to follow these individuals or these enterprises. But remember, they can do things that normal people can't do. For example, continue to average down all the way down. We can't do that, so we need to go to more precise timing. Let me go forward. So this is what the behavior of those stocks did during that period of time. So we are now at a similar juncture in copper, as I showed you before, and we have a copper trade that's coming up in November. And as I said previously, because I'm a buy the numbers trader, I want facts. I want exact entry, exact exit. I don't want opinions. They don't work for me. I'm a numbers guy and always will be. So let me show you something else. Look at this chart. Wheat. Look what's happening in wheat. Commercials have been accumulating long positions in wheat since last July, all the way down. Do you think they're doing it for their health? No, they're doing it because they expect the price of wheat to go crazy on the upside. Why? I could cite you at least half a dozen fundamentals, but I'm not interested in fundamentals. I could tell you there's a war in Ukraine, in case you didn't know that, and that's going to disrupt wheat supplies. I could tell you that the small trader, which is shown down here, small trader sentiment, is very negative. This is a winning combination. Commercial trader buying like crazy, small trader negative, bullish setup, wait for a trigger. So it's all about setup, trigger, and follow through. What about this one here? Palladium. Be very careful if you trade the palladium market. If you're wrong, it will take your head off in futures before you know it. But there's a great palladium ETF, PALL. And look what's happening. For the first time in ages, commercials are buying palladium all the way down. Look at this chart. All the way back to the left, commercials were hedging palladium, hedging palladium. The market goes up, they're selling. They're taking the product in from the producer and paying the producer a lower price than they could get on the futures. They then hedge on the futures and give the producer their money. Everybody's happy. But here, commercials changed their tune. They said, we can't get enough palladium from the producer. We want to make sure we have palladium for our end users. We're concerned about what's going on in Russia, given the fact that Russia is 80 to 90% producer of the biggest producer in the entire world. We want to be long this market. They have been buying all the way down, but you and me, we have to wait for a trigger. So let's talk about something else. Another leading indicator, the pre-holiday seasonal trade. I'm going to review this for you very quickly. One of the greatest books, and by the way, Jeff Gibby, would you let me know how much time we have left?
Oh yeah, you bet. It's right now it's about 12:46. We started about 12 minutes late, so I'm the next presenter. We should start to wrap up, but you can go as long as you need to, Jake.
Oh, thank you so much. Appreciate that. So one of the best books ever written about the stock market is called The Behavior of Prices on Wall Street. The Behavior of Prices on Wall Street by Art Merrill. Art did a beautiful study. Back to the 1800s, he studied the behavior of the Dow Jones ahead of major U.S. holidays, legal holidays. And he found out that prior to legal U.S. holidays, the market went up on the day prior to that over 70% of the time, which could only happen by chance once in 10,000 times. So we can turn this into a specific trading rule. And the rule is as follows. Let me show it to you. The pre-holiday Labor Day trade, which I talked about in one of the groups that I run, educational groups that I run, talked about this before the Labor Day holiday. You want to buy on the day before. In other words, Labor Day in the United States this year was the 4th of September, which was a Monday. So the rule was to buy market on close Thursday, exit market on close Friday. Piece of cake. Very simple. You can do it in the S&P, the Dow, the YM futures, the Spiders, the Russell, the OEX, or in a call option. But it's really simple. In and out, end of day. That's all there is to it. We knew this trade before it happened in terms of the statistics. And then we put it on a calendar, made it very easy. This was Monday, Labor Day. Buy, close the trading Thursday, August 31st. Get out Friday the next day, the 1st of September. And here's what happened right over here. This was the Dow Jones. This was the YM futures. This was the S&P mini futures. This was the UPRO stock, which is a proxy for the S&P. So people say, hey, Jake, that was really cool. It worked. Of course it worked. It won't work all the time, but we know all the facts. So people say, when's the next one? Easy. It's USA Thanksgiving Day, Thursday, the 23rd of November this year. So what do? Put it on a calendar and put the rules on here. USA Thanksgiving Day is the 23rd, Thursday, November. We buy the close of trading Tuesday, get out of close of trading Wednesday. And ladies and gentlemen, no matter how simple this is, people will always find a way to screw it up. I would say that maybe 20% of the people that I've taught this to for many years, maybe 20% can stick to the rules and do it correctly. So there's the rules. And here it is on a calendar right over here. Thursday the 23rd, buy, close the trading the 21st, get out, close the trading the 22nd, and people will find a way to screw it up. And they'll call me on Tuesday morning and they'll say, maybe I should buy it now. And I say, no, the rule is to buy at the end of the day. But by the end of the day, since everybody in the world knows about this, isn't it going to be higher? Not necessarily. And even if it is, that doesn't matter. That doesn't change anything. Then on the 22nd, they will say, wow, the market's closing in half an hour. I can't believe I did so well. I am now the greatest trader in the world and I'm going to keep it until Friday. The answer is no, that's not the rule. You need to be out at the end of the day, the 22nd. Very simple. So before we run out of time, I want to show you what happened last year. This was the trade last year in S&P futures. And again, before we run out of time, we can ask another question. Can we enter before the 21st? Can we enter before the market turns? Easy. go to seasonaltrader.com and ask the question. In the S&P 500 for the month of November, have there been any trades which require a stop of 5% or less that have lasted 25 days or less? Computer comes back and gives me this trade. It says buying S&P futures end of day, November the 20th, or as early as November the 10th, has been right 82% of the time for an average profit of 23 full S&P points. Pretty amazing. And this is what it looks like on the chart. So I want you to compare what you're doing now and what so many people are teaching you now to what I'm teaching you here. And this is just the beginning, just scratching the surface. It's completely objective and 100% rule-based, and it's by the numbers. And isn't it amazing that last year, after all of these years, this trade turns in its best performance ever, almost by twice the amount. Now you're going to say, it looks too good. It can't happen this year because there's a war in Ukraine. It can't happen this year because Biden's incompetent. It can't happen this year because Trump's a threat. It can't happen this year because the economy is too overheated. Blah, blah, blah. All we have is the numbers. If you're okay with the risk, which is 5%, you're okay with the trade. So what I'm going to do now is I'm going to go to I'm going to skip a bunch of charts, and I'm going to go to the expansion contraction charts and turn it over to Brian, who's going to go through the expansion contraction indicator with you. Now, let me say this one more thing. Expansion contraction is really very easy. It's either red light, green light. It's either stop or it's go. It's crystal clear. If you find the chart and you see that the expansion contraction is back and forth, buy, sell, buy, sell, buy, sell, you don't need to use that chart. You don't need to trade that stock. You don't need to trade that futures market. The best performance in my experience has been the largest trading volume. The biggest stocks give the best performance. So I asked Jeff to run some charts for us, showing expansion contraction, how it's done on a number of charts. Remember, of course, you can use any time frame you want. The smaller the time frame, the smaller the profit. So let's go to the first chart, and Brian will comment, and so will I. This is a chart of U.S. Treasury bond, the 30-year bond, showing what, Brian?
This has been a downtrend, the entire chart, due to the red cone or cloud in the background. We've been either strong down or weak down for the entire period.
And bear in mind, ladies and gentlemen, one important thing. The big money is made in the big move. If you're not getting the big move, you're never going to be successful unless you're clairvoyant or extremely accurate in your work. Note also, this blue line, which is a 10-day simple moving average of the high, stands in the way of the market going higher as resistance. Even though we might close entirely above the top of the channel and get 2 bars above the top of the channel, which would ordinarily be a buy setup that needs a trigger, Williams above its moving average, there is no trigger. So this is the kind of a move that you're looking for. Most people, present company excluded, I hope, most people will not be able to participate in this because they're going to be sitting in front of this stupid machine all day, living and dying with every tick. Just set it and forget it. That's the beauty of the indicators that we use, whether they're seasonal or whether they're expansion, contraction, whatever they are. Just have the nerve and the guts to make your position before you get in, determine what you want to lose, and then just let the damn thing go. Excuse my language. Let's go to the next one, Brian. And this is a very long-term chart of the bonds. We've already looked at that. Let's go to this one here, the euro currency.
The euro currency is currently strong down. If you hadn't gotten into the sell setup, there you go, back earlier in the year, then obviously you'd still be looking to be a seller at or near resistance at the blue line.
Exactly. And you'll notice when the market turns bullish right over here, you can wait for a reaction back down to support, which by definition is the 8-period simple moving average of the low, and put your position on there. Very, very simple. Let's go to another chart. One moment, please. Here's another one. And this is crude oil. So take a look at this big bull market we're in crude oil. Was it triggered by expansion contraction? Absolutely. It triggered a buy right over here. It's been bullish ever since. And even through these little declines, it's never wavered and changed its bullish direction. The moving average channel method separately is 2 bars above the top of the channel, Williams above its moving average. So you can see that both methods turn bullish at the same time. Brian, your comment on this chart?
Yes, actually still, as you're showing there, strong up. And of course, we see the bulb pattern that traded significantly higher. And when the moving average channel did drop over towards the end of August, that was just a weak correction in an uptrend. So you're still a buyer when price is dropping. Expansion, contraction, and Williams accumulation will help us with when to buy on the dip for a trend continuation setup.
And that's all specifically rules-based. One more thing I want to say, very important. You can use this in any time frame you want, but the least amount of effort and the greatest return is to use it in daily charts. Weeklies look even better. We're not even showing you those because you're going to be blown away how accurate they are. The question is entirely up to you. And one of the reasons we don't guarantee anything is because once you start using what we teach you, we have no control over what you do with it. And we will find that many people will use the best trading methods, the fabulous software offered here by MetaStock, to find a way to lose money, not because they want to lose money, but because they don't know any better and they haven't been taught any better. Trading is a numbers game. So Brian, here's another chart of crude, a blow up of that same chart. And here is the euro, which we've seen before. Let's go to the chart of Microsoft. What do you say?
Microsoft has just recently turned bullish with the green cone of the cloud is back at the end of August. The previous downtrend has been short term here recently bullish.
Right, and you'll notice it caught the majority of the bearish move right over here. And as always, resistance at the top of the channel in a downtrend, support at the bottom of the channel in an uptrend. One more thing. Let me see. Well, Jake must be a really old guy because, and he really is, Jake must be a really old guy because he's not using candlesticks. Why is he not using candlesticks? Again, I am a minimalist trader. I want to use the least amount of information to make my decision because using candles just confuses the daylights out of me. I understand what they're supposed to mean, but it's too much for me, too many colors. I find after all the trading I've done, and believe me, I've made thousands and thousands of trades, the most simple trades are the most effective for me. And the good thing about it is you've got your choice. You've got many choices here at MetaStock. Just make choices that work for you, choices that you can deal with, choices that you understand most of all. Let's go to the next chart. Microsoft again, close-up view. And now we're going to look at NVIDIA, the stock that everybody loves to hate and hates to love.
Short term here on the daily chart, NVIDIA has recently just turned bearish in the last few weeks.
And you can see that right over here. And of course, on MetaStock, you can increase the size of this lower panel so you can see this better. And let's go to a close-up version of NVIDIA. And there we are. You see the chart turning bearish right over here. And let's go to the next one, which is the S&P. Let's take a close-up of the S&P, showing a downturn right over here. Right, Brian?
Oh, this looks like a chart of gold.
Oh, I'm sorry.
That's okay. And it's bearish, right? Again, the red cone or cloud in the background is just suggesting long-term, short-term bearish in here, and will give us clear setups. Right. And using Jake's moving average channel rules, we've actually also tested rules to get in, rules to get out of loss, rules for taking profit that have been consistently profitable trading in strong trending stocks over the last 5 years.
Yes, that's the gold ETF. And here's the Forex, the Bitcoin. And you can see that it's effective on Bitcoin as well, turning bearish on Bitcoin right over here, turning briefly bullish here, and then bearish again. So when it's wrong, it doesn't stay too long, and it does get the big moves. Let me see what else we got for you, ladies and gentlemen. I think that's about it for me. This is where you can reach Brian. This is where you can reach me. I have nothing to sell you today, just to give you information and wish you good returns on what we're doing. And Jeff, if you want to give us any questions, we're here to take them.
We got them. We got some. So as soon as I said that, I hit him. Let's see. Servinus wanted to know if you could explain the setup and trigger point again. Is the trigger after 2 periods above or below the SME or the support level?
Oh, you mean for the expansion contraction?
Mm-hmm.
Okay, for expansion contraction, let me go to a bigger chart. For Brian, and please correct me if I misquote Brian, this would be a sell for Brian right over here. Would that be right?
That's correct. On the first bar, the long-term expansion contraction turned bearish would be a sell of the market on close.
For me, I require 2 complete consecutive bars in the red. So my sell would be on the opening of this day right over here. Either way, it comes out pretty much the same. So my sell would be over here. Brian's sell would be over here. This would be Brian's buy right over here. This would be my buy right over here. I need to see 2 green in a row. Next question, please.
Yeah, well, here's kind of an interesting one. Jake's birthday is coming up. Can you please wish him a happy birthday? And it looks like, Jake, that you share a birthday with my mother. I didn't know that until just now.
Jeff, that could
Happy
be
birthday.
good. Thank you. It could be good or it could be bad. Which one is it?
That's good for me. Let's see.
Thank you.
Yeah, you bet. Happy birthday. Let's see. Have you been trading 0-day to expiration options?
I'm not an options trader. I understand options really well. I can use options very effectively for extremely short-term trades, but no, I do not trade options. Brian is the options maven.
Yes, I do and will trade 0-day options as well as multi-week options on these clear setups. So I'm an options specialist as well as currency trader. So Jake and I kind of cover several markets together.
This one is a big question, so I'm going to do my best to read it clearly. In one of your strategies, you suggest Williams AD against its moving average for trend, and in another, you suggest momentum 28 versus its average. I wonder if you have any comments on one versus the other and why one would use it versus the other.
Good question. Some quote services and charting services do not carry the Williams accumulation distribution. So in substitute for that, we use 28-28, momentum 28 with its moving average. I prefer Williams accumulation distribution developed by my good friend and business associate Larry Williams many years ago. But if that's not available, then you can use 28-28. That's the difference between the two.
This question came in with its own answer. So I'm going to ask the question and then I'll give you the answer when you're ready.
Okay.
This question is, how are Jake and Brian like Coca-Cola?
Let's see. Brian's handsome and young. Jake is old and crotchety.
Okay. Well, his answer was they are the real thing, exclamation point. They're genuine, responsive to students, and of outstanding character.
Very sweet. I really appreciate that. Thank you so much. And I hope I speak for Brian as well, that I'm sure I speak for Brian as well, that we really want to see people succeed. It's very difficult to be in a business for so many years and see so many people fail when the answers are so simple and they're right there in front of them. All they have to do is use them. Okay, next.
That's it. We're happy birthday. A couple more happy birthdays coming in.
Happy mama birthday to you.
Yeah. All right, very good. I do want to just kind of say a little bit here. We do have a version of expansion contraction that is available absolutely free of charge. You're welcome to download it. It does require that you use MetaStock 18 or higher. And there's the link for that. So I do also want to add, Jake, thank you for coming in. Brian, it was good to kind of have you in here. It was great to talk to you the other days. Jack wants to know how you can find the indicators. So for expansion contraction, you actually get that for free right here, Jack. And then we do have some paid indicators that are available. I'm going to talk a little bit more about that as soon as we kind of transition back to me. Brian, Jake, thanks for coming in today.
Jeff, hope you and the family are doing well. Give regards. Thank you for having us. We really appreciate the opportunity.
Oh, we love having you all the time. We need to invite you more, Jake. Thank you for coming in.
Take care.
All right, thanks.
Thanks, Brian.
Very cool. Okay, let's go ahead and kind of move a little bit here. Oops. Okay. And Ras says, thank you for making the XE indicator available for free for MetaStock. Yeah, you bet. And just to show you where that is, a lot of happy birthdays coming in. I'm going to go ahead and make me the presenter here. Go ahead and share my screen. And what I'm going to do real quick is let's just go ahead and go right here. I just want to show you where these packages are. So if you use MetaStock 18 or higher, you can get those indicators exactly the way Jake just showed them on the screen. What you'll do, navigate to our website. This is the link I just put in, metastock.com/customer/support/download/update some patches, or you can click right there on the link. And there's a bunch of really cool free stuff up here. There's some Ichimoku stuff that I put together, some performance system stuff. Here's commitment of traders. I actually wrote this just a few years ago, and it just kind of shows all the commitment of trader information and kind of collates it. That's available right here. But if you come down here a little bit on this page, you'll see this Jake Bernstein complimentary. Go ahead and download that. Basically, it'll walk you through kind of using it and all that kind of stuff. So lots of happy birthdays for Jake. Very nice. Okay. We did also, and I want to kind of talk a little bit about this now. Let me go ahead and kind of minimize that. We did actually put together what we called the Jake Bernstein setup and timing triggers. In it, there's 33 commitment of trader systems and 6 technical systems. I'm going to kind of just talk more about the technical systems, but the 33 commitment of traders actually kind of help you analyze and look at the different futures and kind of what their commitments of traders are doing. So in addition to that, we've got the 6 systems, and those include a full integrated suite into MetaStock. So you get the expert advisor, the explorations, the ability to do system tests, all of that kind of stuff is included. And here are actually what's included in this technical systems. You've got 15-minute orb, you've got the 5-bar moving average channel, the JBS MAC with ADMA, the momentum moving average, power momentum, and stochastic pop. All of these methods use Jake's very specific setup, trigger, and follow-through methodology. And I want to kind of just show you basically kind of, this is meta again. I haven't changed charts yet today, and maybe I will for the next kind of segment. If you have a chart you'd like to look at, let me know, because I'm about to start talking for a few minutes about MetaStock and kind of some of the things that are included in it. And but here's Meta. What I'm going to do is I'm going to go ahead and apply one of the templates, so you can see how well this has worked. But since Jake talked a little bit, quite a bit about it, he talked a lot about the MAC with the ADMA. So I'm going to go ahead and apply this to the chart. It's going to give you the Williams percent R as well as his setups, his triggers, and his follow through, so you can see exactly where they happen on the chart. It's going to kind of highlight them and give different symbols for you and all that kind of stuff. Okay, go ahead and zoom in a little bit to this by setup, and we'll just kind of talk a little bit about how the expert advisor works. So you can see kind of how well this has been working in Meta this year. You go ahead and go to the expert advisor, just like we did a little bit earlier. You go to view, expert commentary. There's a picture of Jake. Go ahead and move that over here. And this is going to basically kind of give you, for this particular methodology, it's going to give you the entries, the exits, how to trade them, et cetera, et cetera. So I jumped over to where this buy signal would have been on the chart had we run a scan for this. And it's basically saying a new long trade has been triggered. I'm going to make it bigger. In this implementation of Jake's moving average channel setup, a new long signal is generated when an instrument trades above its moving average channel for 2 days. Okay, and when the Williams accumulation distribution indicator trades above its moving average, also for at least 2 days. So here we got that entry signal. As we kind of get in the trade, it's going to kind of tell us as long as we're long. When we get an exit, it's going to kind of come in here and it's going to go ahead and signal that we should get out of that trade. So this is all pretty automatic. It's all very objective. It's all programmed, ready to go. It's going to advise it for you. You can go in and scan for signals. I'll show you that in a second. You can also test. So if I wanted to test to see how well this stock worked on this market or a bunch of different markets and compare them to the other methods, I absolutely could. MetaStock's got a really, really good system test. Neil's like, happy birthday to Jeff's mom. Yeah, just a couple days away. So thanks, Neil. I'll pass that along for her. Any case, all right, let's not get distracted. yet. All right, so in total, there are 33 different commitment of trader systems, and you've got these technical systems. If you want to find an entry, if you like this JBS MAC with ADMA, you want to see if there's any entries today. Well, let's run a scan for it. It's really, really easy to do. I'm going to come in here. I'm going to go to the scan tab, and I'm just going to unselect all of the Silas Peters 3S code ones. So we'll go ahead and unselect these. What I'm going to do is I'm going to actually just go to JBS, and I'll pull up the different scans that we've got. If we wanted the Mac with the ADMA, I'm going to go ahead and run that one. We'll go ahead and use the Dow Industrials again, the S&P 500. We'll just use that as our list today. I'm going to go ahead and run daily. Okay, you see where it says daily here. If you're using an intraday version of MetaStock, you can choose a different periodicity. I'm just going to go ahead and start the scan. And it's going to go through all of those stocks for me. Of course, I could run more than one if I wanted to. I just wanted to kind of give you an idea of how it works. With it so far, it's gone through about 130, 160. It's rejected 100%. Now it's rejected 99.5. So I know that there's at least one setup in here that we're going to look at. But this quickly, it's going to give us all the buy and sell setups that happened on this chart at the same time. So there you go. Let me go ahead and set this. Okay, so over here in the longs, there's no longs. These are all shorts, which is designated by a 1 in this column. You've got a short on Ecolab, Generac, Lowe's, Pultigraph, Trust Financial. And what I love about that is, for me, you know, I'm probably not going to have a chance to trade today since I'm about to start talking for an hour. But I usually don't have a lot of time to actually trade. I'm a very, very pretty busy professional. I come in and but I try and kind of just about 15 minutes a day, run my scans, look and say, hey, is there any new stocks that I want to buy based on what I'm looking at? Are there any positions that I want to get out? And so then I go look at all of my things. And because of the power of the scanning of MetaStock, I can really just identify, is there any opportunities that exist in the market? Should I be buying now? Or is there anything I want to get rid of? And I can make all those decisions very, very rapidly, which certainly makes beats. I'd much rather look at maybe 6 stocks right here than 500 stocks, okay? And so the ability to go in and just have MetaStock allow us to focus on the opportunities. One of the best features of MetaStock. Absolutely love it. I'm going to talk more about it as we get on here as well. So Landv says, thank you. Happy birthday, Jake. MetaStock says, happy birthday, Jake. Net Kunda says, good analysis. So thanks for that. All right. Again, let's kind of just go ahead and wrap up what's included here. You've got the technical systems, the ORB, the MAC with ADMA, the momentum moving average, the power momentum, and the stochastic pop. Those are all included in this system with Jake Bernstein. And with this one, the setups and timing triggers has been very, very popular. We're currently on the second version. We just did a pretty big enhancement to this. Here at the event, it's going to be $397. Normally it's $499. And you should get this. If you like it, if you get it, you pay one time, you own it forever, $397. It's a 30-day money-back guarantee. So you can call us at 800-882-3040, and you can chat online with us at metastock.com/saleschat. So I'm going to go ahead and clear out some of these questions because I'm going to talk for a minute. And I want you to know, if you have any questions, you can actually type them in. Every time I look over here, I'm looking to see if you've asked a question. So make sure you ask them if you've got them. And also, in addition, of course, this is included in the Summit Action Pack. So, and we're kind of getting towards the end of it. Steve isn't going to make it today, but we have the Candle Profit Systems 3.0, Vince Vora's Victory, the 3S code, the trend lines and trainings, the setup and timing triggers, and then Price Headley's Big Trend Toolkit. You get 3 months of that. All of this would normally be $47.37. Here at the event today, it's $27.37. So more than 50% off. You can take advantage of that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. If you haven't used MetaStock before, you can get either a free trial as part of this package, or an extended trial, and our sales guys will help you with that. And you can also do that at metastock.com/summit deal. You can also call us at 800-882-3040. Where does it say meat stock? Oh, okay. Or metastock.com/sales chat. So apparently, maybe I accidentally said meat stock, which is a thing. There's a meat festival called Meat Stock. So there you go, Jack. All right, very cool. I'll say thanks to Stocks and Commodities real quick. Thank you to Stocks and Commodities. They've been supporting the Trader Summit. Great magazine, 17,000 articles over since 1982. You can find about them more at traders.com. Very, very good magazine. If you want to get a free issue of Stocks and Commodities magazine and you're watching us on YouTube, go to metastock.com/traders-summit and you can go ahead and get a free copy of it. So thank you again for the support. All right, cool. All right, I'm going to talk a little bit about MetaStock. And today I have kind of one of a favorite class of mine. There's a lot of times we'll kind of talk about different stuff when we talk about MetaStock. Today, during the summit, I have the opportunity to talk about why MetaStock has some really good tools, and why it's been rated 30 years in a row #1. Sometimes, and there's a few where I could talk about things that are in MetaStock. Because with MetaStock, it's a software that we've created now since the 80s. I look at the clock. We've worked on it for decades now. It's been rated #1 for decades now. And it's a very, very mature product and has a lot of really cool things that are in there. And today I'm going to highlight a few of my favorite things in MetaStock that you can play with, that you can use, that are going to help you do analysis, all kinds of stuff like that. So that's what we're going to talk about today. I am going to read a legal disclaimer. And before I do that, I would say we've been looking at Meta all day. So if you'd like to look at a different stock, go ahead and type it in the comments. We'll use whatever stocks you're interested in. I have about 40 minutes or so. And during that time, we're just going to be looking at your charts. So if you have charts you want to look at, now's the time to type them in. Okay. Now, let's get to the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. No symbols yet, guys. If you have symbols you want to look at, type them in. Okay. All right. Let me give you a little bit of a background on me, and you can read this slide as you do if you want to. I started here MetaStock, like it's been 27 years now, or maybe 26 years. Anyway, it's been a while. When I started in inside sales. I'm going to say that I absolutely love working here at MetaStock. It's a great environment to work for. A couple of things that I like is I'm very, very proud of the software that we have. So, I'm also really very, very happy with the support that we offer. If you ever have questions about MetaStock, you can chat online with us. You can give us a call. And one of the things that we take a lot of pride in is the amount and how good our support is. So if you ever have questions for us and you want to get in touch with us, if you chat into our support, and if you've had an interaction with support, let us know. Type in the comments. Tell us how it went. So, it's not uncommon for a whole week. Every time somebody contacts support, we ask them, how did we do? What did you think? Give us a score. And it's not uncommon for them to get 100% week after week after week. Not all the time, but they're very, very good at getting 100%. So very, very happy, very proud. One of the things I like about MetaStock is the culture here, as well as the people that we work with, and the fact that it's just a product that's been rated consistently #1. as I've worked for MetaStock, I've seen a lot of competitors come in. I've seen a lot of competitors go away. And then you see a lot of software that comes in that's like, hey, we can do these things. And it's not much depth to it. One of the things that I've always taken kind of pride in, if you would, is the fact that I feel like with MetaStock, there's so much there. It's like getting a huge toolbox. And then the better you understand, it's not something that, it's like one methodology that's based on some moving averages and you're just going to grow out of it. It's very affordable. Pricing starts at $69 per month. But I feel like, and I've always felt like, the more you learn about the markets, the better you understand how the markets trade, the better MetaStock can be put to use for you. So there you go. I think that kind of went off on a big, huge tangent that I didn't mean to go on, but there you go. Anyway, so in any case, I hope you read these bullet points. The one thing that I'm also very, very proud of is this year, it was the 30th year in a row that it's been rated #1 by Stocks and Commodities magazine. And today we're going to talk about just some of my hidden gems in MetaStock. There's a lot of classes that I could teach, and there's a lot of classes that I enjoy teaching. Sometimes we'll talk about how MetaStock has a really good tester. So you can go in and test ideas and see how well they work and compare them to thousands of different stocks and other systems, a couple hundred, and just kind of see how well a method works on a specific stock or in general or across the marketplace. And in my 100% totally biased opinion, MetaStock's got one of the best system testers out there. Of course, we talk about scanning and how scanning helps you identify opportunities. And then the expert advisor and the ability it has to kind of explain things to you, that's great as well. I mean, there are reasons. Today, what I'm going to talk about, if I can get on task, is we're going to talk about a few of the things in MetaStock that you might not be aware of. So if you've been using MetaStock for a number of years, here's a few things that might be extremely helpful for you. So let's go ahead and get started with that. And the first thing I want to talk about is finding breakouts. So today, very top of today, Vince Vora started out the session and he talked about like his victory setup. And one of the things that he says a lot is he likes to trade stocks when there's no more support and resistance, when they've broken up above support or resistance. Particularly, one of the things that he likes is when you're trading at all-time highs, because once you've hit an all-time high, there is no more resistance that's been established. And that's generally how that's generally a pretty good opportunity. One of the most famous methodologies was called the turtle system. And the turtle traders were trading basically breakout stocks. So what I want to kind of do is show you a methodology that's built into MetaStock that will help you identify where support and resistance are, any available trend lines on the chart, and that way you can kind of see if they're breaking out. So let's go ahead and kind of get into MetaStock. And because Ralph and Paul and Scott gave us some stocks, we're going to go ahead and look at those ones. So let's see. Let me go ahead and do this. I'm going to go ahead and clean up a little bit here, just kind of get some of these charts out of the way, and then we'll open up some brand new charts. So I'm going to go ahead and close all of these. We'll just say no, and we'll get back to kind of a blank screen. I'm going to go ahead and I'm going to open up our Power Console. And I'm going to go to our chart tab here, right here. And this is where you'd go if you want to do a chart. And we are going to look at a few stocks, okay? So because Ralph wants to look at an FX example, let's go ahead and look at EUR equals, and that would be Euro US dollar. We could also do JPY, and we could also do CAD. Now, just because I'm opening these, doesn't mean we're going to look at all of them, time permitting, right? Paul, I'm going to actually open up EWZ for you. And Scott, let's go ahead and look at DOL. Okay. Whitney, I will cover pricing options for end of day and real time. So there you go. Question we've been getting all day, Ralph. Thank you for the question. Let me go ahead and open these charts and I'll answer it. So the only thing I'm doing is like, okay, I've got the charting tab open. I'm just typing in some symbols here. And you can type in as many symbols as you want. There's a whole list down here. You can look up symbols, but if you know what the symbols are that you want to follow, you can just type them in here. So I've got Euro, Japanese Yen, CAD. Is there a space there? I think there is. If not, we need to add one. EWZ, and then DOL, which I bet is TO, because it is on the Toronto Exchange. So let me go ahead and I'm going to apply a template. Applying a template just adds any indicators. It adds an expert advisor. It kind of dictates what shows up. And what I'm going to do for this one, this is a template that is called Dynamic Trading Tools. So I'm going to go ahead and do that. I'm going to go ahead and click on Open the Chart. I'm going to go ahead and close this expert advisor commentary window because I won't need it for a minute. And then I'm just going to transit out so we can kind of see all of these charts and kind of what they look like. Okay. I promised to answer your question. Ralph, here you go. So Ralph has one of the most popular questions that we get. And it's a question that I really like because when people want to watch the sessions again, I feel like we're doing something right. So the question is how do I get a copy of the recordings? The whole day today is going to be recorded. We're recording every session. Everything's going straight up to YouTube. If you're watching this on YouTube, make sure to like and subscribe. It helps a great deal. But after the session is over, if you're watching on GoToWebinar, we will send you the YouTube link. So you don't need to keep this link, but if you want it, it's right here. 1 hour after we close up the session today, we'll go ahead and send this over to you. Okay. All right, let's go ahead and move this. William says, oh, thank you. William says, thanks for an informative session today. I'm glad you liked it. Okay. All right. Okay. So now with this, we have a couple more symbols that I'll show next, but let's look at Dollarama, which is the one Scott wanted to look at. And I just want to kind of explain what's going on this chart, because when you initially put this, it puts a lot of lines on the chart. And the name of this template that we're looking at is the Dynamic Support and Resistance template. And what this template is going to actually do is it's going to look for stocks and identify what's going to look to identify major areas of resistance, major areas of support, minor areas of support and resistance. And if it sees any trend lines on a chart, it's going to draw those as well. And so this is a template that I actually put together based on these tools, and it's in MetaStock, and it's just called the Dynamic Trading Tools template. So just to kind of point out a little bit about what's going on, I'm going to grab my trend line tool here and just draw over some of the lines. But right here, it was kind of sensing a trend line up. You see that drawn on the chart right there. Okay, I'm going to go ahead and delete my line because you get that. Right here, you can see where it could kind of hit a major short-term actually, this is a trend line down. So there's a little bit of a short-term trend line that was down right here that it noticed. Here, it's noticing a shorter-term resistance area, right here where this green line is. Here's another shorter-term resistance area that later, and this happens a lot, later became a longer-term support area, okay? I'm gonna make these a little bit, actually I think what I'm gonna do is actually make these a little bit bigger so you can see them. Double click on it. Just gonna increase the weight, because I know, especially like when we start showing charts on YouTube, that sometimes they get a little bit smaller, and what we might want you to see, well, it's clear over here to me, might be not as clear for you. So this is the major resistance, this is the major support, and this is that trend line that we were talking about, okay? And generally, like a good rule of thumb, actually, no, I don't wanna do that, I wanna go to color style. A good rule of thumb for this is if something's breaking through resistance or support or through a trend line. In this case, Dollar Tree broke through both a trend line short-term and resistance area. Once it breaks through, that's a good time to, in theory, buy a stock, okay? Because once you're breaking through resistance, that resistance, what does it become? It becomes support, which is exactly what happened here. This was resistance here for the longest time. As soon as it kind of went up above it, it used that as a support level and kind of went into this channel. So right here, the fact that this is automatic is it's going to be identifying these areas for you. So, and that's pretty handy. If we're breaking through a resistance area and you can see that, it's generally a good opportunity to buy. Now, the thing that I like about this, and I actually kind of agree with a lot of these lines, In other words, I say this is a pretty good place to kind of call resistance. Here's a great place to call resistance, which later became support. Here's a good place to call support, and this looks like a good trend line for me. So you may not, there are definitely examples where I open up a chart and it doesn't look like something that I would agree with. And so I do like to visually look at this and confirm it. But the reason, because this is completely automatic, it means that it's very, very easy to find these breakout opportunities with scanning. So let me show you how that works. I'm going to go ahead and go to back to the Power Console. I'm going to come back in here to the scanner as such. And what I'm going to do is I'll go ahead and kind of get rid of this. These are called DT for dynamic trend. And I'm going to just run the support and resistance long-term scan. And we'll also do the trend line breakouts long-term. So right here where it says longer, it's looking at a longer period of time for a breakout. Here it would be looking at a shorter term, okay? And so I'm just going to basically identify both of these scans, and we're going to run it against the same list that we did before. So you've got the Dow Jones Industrial, you've got the S&P 500, and then I'll add the NASDAQ because I found it, okay? So we'll do just about 500 stocks. Now, again, one of the things I love about scanning is you can do it on just about any market that you're interested in. We had a question about the Nifty 50 and earlier, and we do get a lot of people that trade using MetaStock in India. And if we wanted to find the Nifty 50, that's right there. We could actually, let's go ahead and add the Nifty 50 to it. So there we go. If you're in London, if you're looking at Euro, if you're looking at currencies, whatever it is that you might be interested in, you're going to most likely be able to scan for it because the fact that we get our data from such an institutional quality source. So let me go ahead and start an exploration here. We'll go ahead and run this. And I'm just going to go ahead and now it's going to run through a few more than we did last time. We're going to do 576 because we threw in the NASDAQ 100, which didn't add 100 because a lot of the stocks that are on the NASDAQ are also on the Dow, are also on the S&P. But we did add the Nifty 50, so those will be another 50. But again, what this is going to do is it's going to identify anything that broke out of longer-term support or longer-term resistance. And then when it's done identifying those, it's going to go and look for any trend line breakouts, which is another analysis that we could do. So there we go. All right. Now, with this one, it's a little bit different. Basically, it doesn't reject as many because it's looking for it to happen at any time. It's looking for a breakup above support and resistance at any time in the past, okay? And so right here, you've got the close price. If it's broken up, there's a column for breakup, and there's a number for breakup, okay? If it's broken down, there's a number in here for broken down. So if I want to find stuff that's broken up, I can scan by this broken up column, and I can know that in Mid-America Apartment Communities, I believe is the name of that, broke up through resistance. I was being careful about the way I worded it, 673 days ago, which is a lot of days ago, okay? And I'm kind of not really that interested in things that broke 3 years ago. So what I'm going to do is I'm just going to scroll down a little bit here until we find something a little bit more reasonable, like within the last week or so. So, and looking here, we have had stuff that have broken today, like AMD actually apparently broken today, broke up today, okay? 3M company broke today. S&P Global Incorporated, SPGI, broke today. So you kind of get the idea here. All of these stocks should have broken through that level this many days ago. 3 days ago for New York, 3 days ago for Expeditors, 3 days ago for DeVito, 4 days ago for Occidental, okay? And so if I wanted to kind of get an idea of what those look like and kind of say, okay, well, how does this look on the chart? I can very, very easily from this screen go ahead and open these up, and we'll just open up a few of them. And we'll go ahead and let it load. But now we can see right here is where it's calling that longer term resistance area. There's your break. It was 3 days ago. Do I like that? Does that look good to me? Well, we do have what would be a resistance area coming right up here at 70. So maybe not, but I'd call that a pretty good breakout of this high and this high. So it's very, very easy for me at this point to go in, kind of identify how well these are working. Okay, right here we've got expedited. It broke up just about 3 days ago. Okay, it does have this upward trend line that is trading down below. We can kind of use that in our analysis. But you see now I'm looking at stocks that have broken up. This one broke up above this level. This is, oh, I actually closed it. Here you got Davida. Here's where is showing the resistance area coming in. And it broke up just about 3 days ago. So that's how you run it. With this one, I don't think very, very easy to identify where those support and resistance areas are. And to find breakouts, it makes it very, very easy to do as well. So there we go. Okay. All right, and Art wants to know, is my session starting? Yeah, it's going right now. So there you go. And we did have a schedule change a little bit earlier, but we should be everything up on everything for the rest of the day. It's the same schedule. So we've got Melissa Armo coming up and Price Headley. Thank you for the assist MetaStock for those questions in YouTube. So, all right, there you go. That's the first tool I like to show you. I really like that one. I'm going to go ahead and close out some charts. We've got some new symbols to look at, and I want to talk to you about my next tool. And this one I actually really, really like too. It might be like one of my favorites, but it uses, go ahead, go here. So hopefully that's something that you can use. It'll help you find breakouts, good breakout opportunities in the market included in MetaStock. This one, next one is more of a full methodology, looking at the time to see how long I should talk about it. But this was created by Rahul Mohindar, and it's based on the Rahul Mohindar oscillator. Rahul has been a partner of MetaStock for about 23 years. He's been a great partner of MetaStock. He's a seasoned trader. He actually teaches people in India how to trade. And he's actually the reason, or one of the reasons, probably the primary reason, that we've been as successful as we have been in India. He's got several offices. He teaches people how to trade. The Armo system I'm going to very, very briefly cover, and it's probably the last tool that I'm going to talk about. But it is the first tool that I ever invested my own money in. It's called the Rahul Mohindar oscillator. It's a trend following system, and it does a really, really good job. There's some reasons I like to show it. It's easy. If I do a decent job of actually explaining to you what it is, you'll understand exactly what it is, how you're supposed to use it, how you get buy and sell signals, where to put in your stop losses, all of that kind of stuff. It's objective. Because I just said I'd employ stop losses, you'll know that it uses some money management built in. And I've shown this thing everywhere. I've shown it in India, I've shown it in London, I've shown it in Australia. And usually what we'll do is we'll just look at stocks that the audience is interested in, like we're going to do now. And it's very, very simple three-step process. And since it's a trend following system, the first thing we want to do is identify the trend. So what we're going to do is we're going to open up a few charts. We're going to do it very quickly, just so that we don't go into Melissa's time. And what I'm going to do is we're going to look at AFRM for George. Okay, and I believe that's probably going to be a dot. Oh, let me actually look that up real quick. AFRM. Yep, okay. We're going to do EWZ PAL. And then we're going to do, for NASDAQ, let's do the QQQ.O instead of the future. Okay, HLOC, is that okay? Hello, Vincenzo, it's good to see you. All right, so thanks for those symbols. What I'm going to do is I'm going to actually apply a template. It's called the Armo template, okay? And then I'm going to walk you through how to use it. So we're going to go ahead and go down here to the R's. QR, and this is called the Armo trade model. Go ahead and open up these charts. Okay. Now I'm going to make, actually, this is fine. I was thinking about maybe making some changes to the charts, but due to time, I'm just not going to. I think what we're going to do is kind of in general look at the cues. Let me explain how this works on the cues, and then we'll do a brief look at the other two charts if that's okay. So with Rahul, I would say this is a trend following system. Befriend the trend, a rising tide lifts all boats, the trend is your friend. All that kind of stuff kind of feeds into this. But as a trend following system, what you want to be able to do is very objectively look at a chart and identify the trend. So the way that Rahul does this right here is called the Rahul-Mohindar oscillator, and it measures the primary trend. And when I say primary trend, I mean the long-term trend. And the way that you read it is very simple. If you're above zero here, you're bullish long-term, okay? If you're above zero here, you're bullish down long-term, okay? If you're down below zero, as you are right here, then you're bearish long-term, okay? And it does actually identify that as being bullish above zero. It'll say that actually on the chart, you're bullish long-term, okay? Now the rule number one is trade with the primary long-term trend, okay? So if this is above zero, okay, which it has been for the better part of this year, since about January, if this is above zero, we're only going to be looking to go long. We're not going to be looking to take short positions, okay? If it's down below zero, you just reverse the rules. Right here, it's down below zero. In this little area where it's going that way, I actually moved the chart over. We gotta fix that. If it's down below zero, like it is right here, you're allowed to go short and you're not allowed to go long, okay? That's rule number one, okay? Long-term, are we in a bullish trend? NASDAQ, yes, we are. And long-term, we've been bullish since January-ish this year, okay? Step number two is we want to identify the short-term trend, okay? And to do that, I'm gonna go ahead and make this full screen for a second and make this not a histogram because I actually like this as a field line. I'm gonna go ahead and apply that, click on OK, because that just allows me to see the relationship a little bit more, okay? The indicator though that we're gonna focus on is gonna be this, this pinkish indicator. And its name is actually swing trade number 2. And the way we read that is the same way. It's looking at the short-term trend, okay? So it's a lot more, it's a lot faster to go up above zero and below zero and up above zero because it's looking at a shorter time frame, okay? But the rule is the same. If it's above zero, we're allowed to go long, okay? If it's below zero like it is right here, we're not allowed to go long. We'd be allowed to go short, but we'd only be allowed to go short if it matches the primary trend. So if I'm in this area that started back in August and just concluded also in August, that whole month, if I'm looking at the cues, I'm bullish long-term, but bearish short-term. Oops, that's not what I meant to do, okay? And so during that whole area, I'm not gonna be trading. I'm gonna be waiting for us to get a signal, okay? Is this market going up or down, okay? And in order for me to feel comfortable about taking a position, I want my long-term trend to be bullish and I want my short-term trend to be bullish, okay? Now, the other way that Rahul made this extremely easy to read is as long as this short-term or the red line is above, zero, I keep moving shit around. As long as that's above zero, you're gonna get blue bars, okay? So you can either pay attention to the indicator if you want, or you can pay attention to just the ribbon and the color code. If I'm looking at the cues today and trying to decide what I'm doing today, I'm bullish long-term, but I'm bearish short-term, which means they don't match up. I'm allowed to wait. So step one, again, is identify that primary trend. If it's bullish, you're allowed to buy. If it's bearish, you're allowed to short. But it must match step number 2, which is the short-term trend. You want those both to be bullish. You want them both to be bearish. And if they're not, then you're allowed to wait. Or you could run a scan and find signals that do match up. But what we want to be able to do as traders is identify that it's long-term it's going up and short-term it's also going up, okay? So if I'm looking at, again, if I'm looking at the NASDAQ right now and I'm trying to make an assessment right now, I'm bullish long-term, I'm bearish short-term. Obviously the market's not trending in any specific direction. I'm gonna wait, okay? If they're both bullish, then I'm going to want a trigger. Okay. And the way that Rahul looks at triggers, it has to do with these two lines, the short-term trend that we just talked about. And what you might have guessed is this medium turn trend, which is the blue line that I put together. Okay. And now the way that Rahul kind of says to kind of look at this, again, the pink line is going to be your short-term trend. The blue line is going to be your medium-term trend. If you have a bit of an upward move in the market, what's going to happen is the swing trade 2 is going to get a little bit more bullish. It's going to come up. In this case, it crossed above 0, which means that it would have went bullish short-term. But when it crosses above the blue line right here, that's what Rahul calls a change of momentum or change of sentiment or change of force. Okay. And when that happens, okay, to the bullish side, you're going to get a buy arrow on the chart. Okay, and that's actually a buy arrow that you could look to buy on, but only if you're bullish long term and if you're bullish short term. So, step 1, identify the trend. Step 2, identify the trend. Step 3, wait for a change in direction or a change of force, and then we'd get into a trade. Okay, so if I'm looking at it now, there's no trade that exists, okay? But if I want to show you how to kind of look at a particular trade, I'm gonna come back here and I'll just walk you through how a trade would work. So let me zoom in here. Here's where we went Armo bearish to Armo bullish on NASDAQ. And let me just kind of walk you through how to do this, bearing in mind that I have about 14 minutes to wrap this thing up and land us. So let's just kind of go through this as an example. If I started watching cues, let's say January, let's say the very first part of this year, okay? We're just kind of watching into it. Here on January 9th, we might be into a short position if we were already looking at this. But on January 9th, we had that change of momentum or that change of direction or that change of force and gave us a buy signal, okay? Why did that buy signal happen? Right here, you can see we had a crossover between the short-term trend and the medium-term trend. That's why we had a buy signal. Now, if we're looking at January 9th, we're looking right here where you're not going to buy because the rest of our analysis, step number 1, we're in a bearish trend. We're not going long. Step number 2, we're in a bearish short-term trend. We're not going long. So this particular thing, we're not going to do anything. If we're in a short position, we might start paying closer attention to the chart, but I'm going to ignore that for now. Okay, we might be in a short position right here if we were following it earlier than that, but we had to start somewhere. Okay, if I keep watching this a few days later, like a couple days later, you'll notice that the short-term trend comes up into positive territory. My bars start to get blue. That happens right here. Okay, very easy to read. Okay, so now I've had a change of direction, change of force. I've also had a shift to where it's bullish short-term. Am I going to trade yet? No, because I'm still in that bearish trend. It's not until right here, this day here, and I'm going to circle it right here. Actually, I think I put a square around it. No problem. Here is where we actually have all of everything match up. So here we go to long-term bullish. Okay. So now not only are we long-term bullish, we're short-term bullish, and we had that shift of momentum, and all of that happened within a short time period. And that means I can structure a trade, okay? I'm gonna take my time and talk about this just so that this is very important, okay? The way that I structure a trade right here, this is the day after all of these other days that we're going to go ahead and go long, okay? Now what Rahul wants you to do, go ahead and take a horizontal line here. I'm gonna look at the high of this bar and the high of the bar before, okay? I'm gonna draw a horizontal line right across there. Okay, and I'm going to say, okay, if this goes up above that high, I'm going to go ahead and buy. That's an active buy signal. Okay, so and to find that high, I just did a little bit above either the higher of today's high or yesterday's high on a daily chart. 2 bars. Okay. In addition to that, Rahul wants you to use a stop loss, and there's 2 methods that he teaches. I should use the present tense when I'm talking about Rahul. But there's 2 methods that he teaches for putting in a stop loss. One, you could look at the lows. So you could say, well, here's the low today, here's the low the previous day I could put a stop in right here. That'd be a super tight stop, and you can definitely do that. The other way that he teaches is he says, look for an area of support, okay? The way I've kind of defined that a little bit more for the way that I'm doing it is I'll look for in the last pivot low. So when I'm looking at a pivot low, if you're not sure what a pivot low is, just look for a low that is surrounded by two higher lows, okay? So if we look at, for example, this low right here, we'll go ahead and get rid of the ellipse here. If we look at this low here, this low is higher to the next side, and this low is higher to the next side. This is where I put my stop in, right below that pivot low, okay? If I wanted to kind of give it a little bit more room, I could also go right there, okay? But usually, for me, I'm gonna go with this, the closest pivot low, okay? So now I've got a clear idea of what I wanna do, okay? If it goes up above this line, this horizontal line at 282.12, let's call it 282.12, I'm gonna buy, okay? If I buy and it goes down below 268.17, I'm gonna sell, okay? So now I know I'm gonna get in. If I get in, it's gonna be up 282. And if it goes down below 268, I'm gonna get out of that trade. I have a pretty good idea of what my risk is gonna be. Not counting if it gaps, which stocks do, or that kind of stuff, but I have a pretty clear idea of exactly what I'm getting in at and what I'm going to get out at, as long as it doesn't gap really hard on me, okay? Here we go ahead and get a trigger to go in. We put in our stop loss. It goes up a little bit, comes back down, and you have that change of momentum or that change of direction or that change of force right here. See where that happens? Because you can also see right here, I just did something funny. Let me fix it. You can also see right here, because there's a sell chart on the chart. Now, if I'm in a long trade and this sell happens right here, I'm not going to get out of the trade immediately because I'm going to look at the bullish, and as long as I'm bullish long term, and as long as I'm bullish short term, I'm going to go ahead and stay in that trade. I'm going to stay in this trade until it goes bearish and bearish. If it goes bearish and bearish, I'm going to go ahead and get out of the trade. Because generally the markets don't go up in a straight line and they don't go down in a straight line either. And generally there's a natural stair step. So you expect an up move, you expect a retracement, and you expect an up move. And you're generally going to take a bit of a staggered path when you trade in, even if it's going up. So here, we're going to kind of pay attention. If everything goes negative, we're going to go ahead and get out, okay? Or if we hit our stop loss, again, that's what this is for. Okay, it does pull back a little bit, enough even to get short term, but we're still bullish the whole time. Okay, it goes up a little bit more, comes back down a little bit more, teases our entry spot. Okay, and then eventually what happens right here is we get that shift of momentum again. Okay, or that change of momentum, and again that's drawn off because your short-term trend is pressing up above your long-term trend, and when that happens, you can do two things, and according to Rahul, you definitely need to do at least one of those two things. The first thing is you can buy more. I generally don't. I like to kind of take an initial position immediately, and then kind of let that ride. Okay, but if you want to, you could buy more here. Okay, what you do need to do is move your stop. Okay, and if you this makes sense because if you kind of think of it as a stair step. It goes up a little bit, it comes back down, forms a new support level, and hopefully heads up again, right? Not all the time, but hopefully that's what it's going to do. And so if we formed a new step or a new support area, what would make sense is for us to lock in some profit. And so when this buy signal comes in, buy more if you want to, I don't. But but what you want to do is go ahead and move up your stop. And I use exactly the same rule. So I'm looking for that pivot low. That low that's surrounded by two higher lows, okay? Let's go ahead and go out a little bit, okay? Had a nice little move up, not a big one. Market's been kind of a little bit. Here you have a little bit of that shift of momentum. Here, you have a buy signal, okay? And when this buy signal comes in, I'm gonna look for that last pivot low, okay? Which could be right here. I'd probably put it right here, okay? And so what I'm doing right now is just moving up this top, okay? You go ahead and kind of give it a little bit of room. Here you have another sell signal. Here you have another buy signal. You're going to move your stop. And here's that pivot low. This is what I'm looking for to move that stop, that low that's surrounded by two higher lows. Okay, it's going to keep going. Okay, now I start to finally get some momentum. Here you have a sell signal. Here you have another buy signal. Move the stop, right? And this isn't hard. There's the pivot low, the low surrounded by two higher lows. Okay, sell signal, buy signal, pivot low. Okay, you should be able to do this all by yourself, right? It's very, very easy. Okay, here we got a sell signal. Okay, here we went short. Here we stopped out. Okay, right here we stopped out. Okay, so in this particular example, where did we get in? We got in right here at 282. Okay, we stopped out. What was our last stop? 363, about an 80-point move. Okay, did we get in at the exact low? No. Did we get in at the exact high? No. Okay, but did we have a very concerted methodology for getting into the trade? Did we have an objective way to look at the trade? Were we able to take a good chunk of that? Now, right now, if I'm looking at NASDAQ, okay, I'm looking either to get Armo to get bearish, okay, or I'm still just looking for that long-term buy position to buy into this if it goes on, okay? But one of the things that I'll say is this is very much a trend-following system. It was created by Rahul to be a trend-following system. It's never going to get you in at the exact bottom, and it's never going to get you out at the exact top. A good friend of mine, the late Robert Deal, used to travel around with us, and we'd do classes. And he would always say, with a zeal that I could never duplicate, bulls will make money, and bears will make money, but pigs will get slaughtered. The reason I like this method is I've shown it all over the place. It's something that works very, very consistently. It's something that's going to give you stop losses. It's going to tell you where to put in those stop losses. It's going to be something that's a very mechanical approach to trading that works on a lot of different markets. I think that I better stop. So again, the reasons that I like it is because of how objective it is. The other method that I kind of talk about a little bit is the Haguro method. There's the videos on our YouTube channel that you can look at. They're going to kind of outline that Haguro method for you. I really like it. It was developed by Siki Shinzu. And I hope I said that right, Greg. So there you go. Pricing. Okay. Again, MetaStock's been rated #1 in its price category for 30 years in a row. We have two versions of MetaStock. MetaStock Real-Time. With MetaStock Real-Time, basically, not only do you get MetaStock, but you also get a product called MetaStock Zenith, which Zenith is basically, well, it's a competitor to Bloomberg. They spent $1 billion designing it. Our partners it was Reuters at the time. Now it's the London Stock Exchange Group. It's one of the premier news and information sites in the world. In fact, if you have a hedge fund, or if you're a mutual fund, or if you're a hedge fund or something like that, you most likely subscribe to a very, very similar service. Bloomberg is a benchmark cost about $1,300 per month. And we won't talk a lot about Zenith today just because we're talking about technical analysis today, but it's one of the best news and information services out there. If you're an institutional client getting it, you're going to, we have a very retail friendly rate, I'll say it that way. $265 per month will get you MetaStock Zenith, as well as the MetaStock Real-Time. So everything that we talked about today. And then we also have an end-of-day program, MetaStock DC. The DC version of the program, DC stands for daily charts. So it looks at dailies and weeklies and monthlies. And if you use it like me, daily will be just fine because I run my scan once a day, decide what I want to do, et cetera, et cetera, et cetera. It's $69 per month, and that's it. For the software that's been rated #1 30 years straight, okay? So the offer that we're going to do today is you pay for a month, we will give you the second and the third month for free. So basically right now, here in Utah, it's $9.18. If you're in Asia, it might be $9.19. But we'll just say that we're in Utah right now, or we're in the States. If you sign up for a 30-day trial, you'll be running until December 18th, which just blows my mind that that's 90 days away. That'll cost you basically $69 to run until December. That's basically $23 a month. To try out the software, it's not a web-based software. It's not HTML. It's software that's really designed to help you. It's a toolbox for MetaStock, okay? And you'll pay $23 per month for it, okay? That'll include MetaStock 18. It'll include any data for the regions that you're interested in. We have what we call our white glove installation support, and they'll get on the phone with you and go, hey, what do you want to do with MetaStock? And they'll show you, they'll take you on a tour. They'll make sure that you understand how to use it. It does also include unlimited access to our support desk. And you'll also get Unleash the Power of MetaStock for free as part of it as well. So $23 a month if you do the DC version, and $265 if you do the real time, less than $100 a month. So if you're interested in doing that, you can call us. If you want more information, we're happy to send it. If you want to ask questions, we're happy to answer them. Give us a call, 800-882-3040. Go to metastock.com/sales-chat or metastock.com/traders-summit 3-for-1. So, and they'll be happy to kind of get you on your way. There is a reason MetaStock's been rated 30 years in a row best choice of software, best software in its price category by the readers of Stocks and Commodities magazine. And if it doesn't work for you, if it's not helpful, there's no commitment. You can just cancel at any time. I'd encourage you to try it. 800-882-3040, metastock.com/sales-chat, metastock.com/traders-summit, traders-summit 3-for-1. All of those will get you there. So hopefully, Whitney, that answered your questions. And there you go. It is you can do this. This isn't part of the Summit deal, but you can do an extended trial on top of the Summit deal. That would include Steve Bigelow's Candle Profit Systems 3, Vince Vora's Victory, the 3S code, Oscar Carboni's training that he does, the setup and triggers. Man, if there was a collection of products that were just kind of our best products, or our best selling products, or highest rated, this would be it. 3 months of the Big Trend Toolkit by Price Headley, 3 months of Learn MetaStock, all of that. Normally it would be $47.37, more than half price off, $22.37. Metastock.com/summit deal, 800-882-3040, or metastock.com/sales-chat. So there you go. RK wants to know, can you use this for intraday? Yes, absolutely. Thank you. Is there a deal for us MetaStock users looking to renew in the next month or two? Jack, thanks for using MetaStock. Get in touch with me. Is there an Armo expert advisor to tell me all of this that you explained? There is. We actually just added it with 18. So, and if you want to, you can read about it in Stocks and Commodities magazine. So, R says, I did not associate the picture in the presenter list with the presenter in the session. Yeah, I should probably update that. That was my high school photo. All right, thanks, guys. I hope that was helpful for you. All right, special thanks, Stocks and Commodities again, sponsoring all of our summits. Been great partners for us. You can get a free issue. If you're watching us on YouTube, go to metastock.com/traders-summit. I guess I'll take a new photo tomorrow. All right. There we go. Our next speaker is Melissa Armo. Melissa has spoken at a number of our summits. I love her gap method. I love her personality. I love her ability to look at stocks. She's ready to go. Melissa, how are you doing today?
Good afternoon. Can you hear me?
I can. Yeah, there you are. Let me go ahead and make you the presenter. Okay. And I'll make sure I can hear you. So we're going to talk about gaps today, right?
We're going to talk about gaps. Let me know if you can see a picture of New York.
I can see a picture of New York, and I can see shorting stocks for profits. Did you take that picture yourself, Melissa?
I did not, but you know what? It's funny. I used to live in Midtown. This is a Midtown view. I got to get a picture of Central Park now. I take this picture, but I need to put one of the pictures I took of Central Park because I moved since I've been using this. But this is a great picture of New York, though. Classic.
Cool. All right. Well, I can see you. I can hear you. I'm going to get out of your way. It's your turn.
Great. right. Thanks so much for having me, Jeff. Good to be here, everyone. It is a rainy day here in Manhattan, and I am here to talk to you. Market is officially closed for the day to start out what I anticipate to be a very volatile week. Why do I say that? Because we had a big sell-off in the market on Friday, and the Fed meets on Wednesday. So something is going to happen. Nobody knows for sure what the Fed's going to say. And if the Fed decides to raise rates, the market could drop or it could rally. The Fed could decide to pause raising rates. And again, we don't know the market reaction to that as well. So it's going to be a really, really interesting week because the market tried to hold on today after we sold off Friday. And one of the things that I like about trading, and specifically that I like about trading gaps, is you get a lot of volatility. And again, I expect that we will see that this week. We could even see that prior to the Fed meeting on Wednesday. We could see some volatility tomorrow. We could fall off a cliff tomorrow. We could rally. Volatility is not necessarily a downward move. Volatility is something that happens unexpectedly. That being said, I do prefer to short. So today we're going to talk about shorting. We're going to talk about gaps. If you have any questions, you can plop it in the room. We're going to talk about shorting stocks for profits using the Golden Gap system, which is the system that I created. And I talk about and teach in a class once a month. This is me. If you've seen me, I appear on TV on pretty much every channel out there. Mostly I talk about the market, and sometimes I talk about the economy. And again, this week we're talking about interest rates. But if you've been trying to trade or attempting to trade, or if you've been wanting to trade, trading is actually a great job. So I started trading in 2008. And one of the reasons that trading is a good job is you can do it from home, but also you have unlimited potential for income versus if you have a regular job with a set salary. So when I started trading, I was doing mortgages. And one of the things that I liked a lot about trading the market was that I had the potential to earn a lot of money like I was earning doing mortgages, except for the fact that it had to do with how good I was. And so I very, very quickly learned that it's about size, and then it's also about accuracy in order to make money trading. What do I mean by accuracy? I mean accuracy in the pick, making the pick, getting the direction right, and obviously getting the right specific stock pick or direction in the market that you can trade it. So again, trading is a great job because you can get in and out of trades fast, and you can also make a lot of money and work from home, which a lot of people want to do. Some people are already working from home since COVID, but not everyone. Now, when you trade, you have one goal, and that is to make money. So if you've been trading, and if you are trading for 2023 and you're not making money, then probably you don't have a good strategy or system to apply each and every single day in order to make money. Because if you're losing for the whole year, we're 9 months into 2023, you probably don't have a good trading system. So we're going to talk today, like I said, about my gap trading system, but you have to have a good system in order to make money. If you don't have a system at all, that's another reason why you may be losing, because you need a system that you can apply to any pick that you make, any trade that you take, any choice that you make in the market. You have to be able to say, I'm taking this trade because, and then again, it should follow the system that you use. But ultimately, you need a system to make money. And then that system has to have a high win ratio in order to be profitable as well. It does not mean that every trade that you take is going to be a winning trade. I wish that every trade that I took was a winning trade. That's not the case. But I do take more winners than losers. So for me, if I happen to take a trade and I lose, I've been doing this for long enough, like I said, going on 15 years, that I know that the next trade then that I take has a high probability of working. So again, it's about the odds. You're looking at the odds. You need to put the odds in your favor. If you can put the odds in your favor, then you will make money. If you can have more winners than losers, then you will make money. And of course, also, you want to have some really, really big winners too. This is the stats so far. Actually, I didn't even put September because I took some time off around Labor Day. But this is through the end of August. So this is the first 8 months of the year with an average risk of $2,800 per trade. These are day trades on margin. These are not options trades. 417,937. And again, this is only through the end of August. I will update this for 2023 3 going into the end of this week for September. But so far this year, we have had a good year, and almost all of these trades I called in the live trading room were shorts. So again, I do prefer to short, and we're going to talk about shorting today. So far year to date, again, this doesn't have the last 2 weeks of options in it either. Year to date for options, I'm risking more money. This is a newsletter. I will show you some of the newsletters. We're at 936,895 for the year. And again, this does not include the last few weeks of trades. So we're over 1 million so far this year. This is a higher risk. One of the reasons that I risk more money in my options trades is because I want to hold trades overnight and take larger size overnight. Many people ask me about options. You can take one contract. You can risk $100. You can risk $500. The amount of money that you risk in each trade, it doesn't matter if it's an option or a day trade, you have to look at the amount of cash that you have, and all your trade risks have to be equal or close to equal. Again, this trade set up quickly. This is not an exact science, but you can't take, and what I found that many people do, which is incorrect, they'll take 500 shares, 500 shares, 500 shares. That's wrong. A different entry, the difference between the entry and the stop might be $1.30 on something and maybe 50 cents on something else. So therefore, if you took 500 shares of both those trades, you wouldn't have the same cash risk. And in that case, for example, if you had one trade that lost and one trade that won, you would have upside down results. So your cash risk per trade, and it doesn't matter if you do day trades, options, or even swing trades, should be consistent. Okay. And again, that's close to it. So if you're trying to risk $1,000 in a trade and you risk $925, that's okay. If the whole idea is if you're risking $1,000 on average a trade, you should be risking $200 on the trade. Do you follow what I'm saying? Because inevitably the one that you risk less on, if you do that, if you chop up your sizing, will be the one that works, and the one you risk too much will be the one that loses. And you want to have consistent results. And it's about the percentage, okay? It's a percentage of win ratio that you're trying to look at. And that's how you can grow an account. And that's how you can move ahead. And again, as I'm looking here on the side, any questions that anybody has, you can plop them in the room. But trading requires a positive attitude. What do I mean by that? I mean, you can't get down on yourself. I've been teaching people now since I started the sock swoosh business. It was 2012. And again, I'm in business now for 11 years. I've taught all kinds of people, all kinds of ages, all across the planet, actually. And many people that are new that have never traded before, and some people that have traded, older than I am. And some people who have never been successful and they want to be successful, and they get down on themselves when they're not successful and they feel frustrated with the market. You can't get mad at the market if you're not doing well. The market doesn't have any feelings at all. The market doesn't love you or hate you. It's just there, okay? So you have to understand that there's so many people that want to trade and so many people that want to make money in the market. It's kind of the survival of the fittest mentality. The people that are at the top are the people that are going to win, the people that want it, the people that are willing to make sacrifices to do what is necessary to get there. And you have to understand that nobody wakes up, and is born all knowing how to trade or takes their first class and then all of a sudden trades. That's very unusual. You may come to me, you may take my class, you may have a learning curve, but that's what I'm here to help you answer your questions, understand what to do. And then of course I run a live trading room every day. And in that trading room, I'm there to answer questions for you if you have questions and need explanations after the class. But you've got to have a positive attitude. I encourage people to do that, because what you don't want to do is work against yourself. It's very easy to go negative if you have a bad day or a bad week or even a bad year. But if you really want to do this, if this is something that you really want to do and you've been trying to do it for a while and you really want to become a successful trader, I'm here to tell you, you can do it and I can help you do it. And again, my class is on one weekend, but it may take you time after the class to go through the process and learn. That's okay. If you take the baby steps to do it, go through trade. And again, the idea is to basically, I don't want to say copy my trades, but take my trades at the same time as I'm taking them, because I'm calling them live in the room. That should help you to be able to move forward in order to make money while you're learning. But in order to become successful, you need a system and you need a niche. For me, it's shorting. And really, it's the fast trades. It's the quick trades. And it's really getting in and out quick. And then also, like I said, it's playing the volatility, playing the big moves, which of course you want. anyways, you can make money in the market. People do it all the time. However, not everyone does. Why? Like I said, there's always one winner for every loser. There's always somebody on the opposite side of your trade. You know, there are people that went long the market today. And depending on where you got in and where you got out, you may have made money. Okay. I did not go long the market today. Okay. In fact, I wouldn't be shocked at all if we fall off a cliff tomorrow. But long story short, there's always somebody on the opposite side of a trade. So you're not really creating anything when you trade. It's not like you're going into like a factory and you're knitting sweaters and selling them in the open market. You're not making anything with your trade. It's the smartest person gets the profits. The smartest person gets the money, okay? The one who gets it right. The one who gets in the trade before the move happens in the right direction. And ultimately, you need a good system to succeed. And then you have to follow it daily, every single solitary day. So that's where it really helps me having my rating system, because I don't get all caught up in what people are saying on TV, what the Fed is saying. I will look at the market reaction. I will be reading the price action in the charts, in the gaps, to read what's happening Tuesday, Wednesday, Thursday, Friday, before the Fed and after the Fed, to make my determination, trying to predict what Jerome Powell is going to do Wednesday or what he's going to do after September, you know, in the December meeting or anything else. No one knows. And again, a lot of pundits on TV, people I even appear on television with, they all have their thoughts. They all have their opinions. But at the end of the day, nobody really knows what he's going to say. But even if you say, yeah, he's going to say X, Y, Z, it doesn't mean the market's going to react the way you think. We've seen bad data and the market's rallied. Why? Because they thought that the Fed's going to lower rates then. I disagree with that. But we've also seen good data. Good data, and then the market fall. And they said, well, that doesn't make any sense. That's crazy. How's that happening? And again, because they're saying, oh, well, then the Fed's going to continue to raise rates. And that doesn't make any sense either when you think about it. And it also doesn't even make any sense when you look at some of the good economic data, because you say, oh, really? We're having good economic data when inflation is still sky high? You can't even trust the reports 100% because they're so skewed. And they look at some things and not others. So again, price action, reading the chart in live time. I look at the 1 minute chart. We're going to look at some daily charts today. I follow the daily. That's what you can rely on. That's what you know. That's the truth. Whatever you see the market close at today at 4 o'clock Eastern time, boom, we can all pull it up and agree on that 100%. There's no ifs, ands, or buts. There's no interpretation. We say, the market closed at this. And then you make the decisions based on that. But for me, I'm looking at a gap. At one focus, if you come and learn from me, it's gaps. And more importantly, it is really shorting, because I like the fast moves in shorts. And what do I mean? I mean also volatility. Now let's take a look at Oracle. This is one of the ones we did in the last week. This was a short. Oracle actually had earnings. Now this is a 1 minute. And I just want to show you here what happened. It fell. We shorted it. And again, here's the drop. Here's the sell-off. You could have held it even more. Okay, this is on September 12th. But anyways, look at how it fell. Look at how it sold off. Look at how it just continued lower. So if you would have wanted to play Oracle, this was again last week, it was on Tuesday. The only way to make money in this was to have shorted it. Okay, and it did move fast, and it did move quick, and it did move big. And a stock like this, I'd say $1 plus is a good move, is a good trade. Now, let's take a look at the SPY here. Again, let's just talk about what is a gap. A gap is the difference between the close and the open. Simple. So the stock market closed today at 4 o'clock, and it will open tomorrow at 9:30 at a new price, a different price. It could gap up. It could gap down. It could be neutral. That's rare. But the market can be neutral. So any place or point of the closing price at 4, from that point to the next day, is considered a gap. Again, there are bearish gaps. There are bullish gaps. There's a bunch of gaps we traded and played here in the last few weeks. Now, this is a SPY. Okay, this is a daily. Just want to show you this here. Market closed here at 4 o'clock, gap down here at 9:30. And again, we fell, boom. And then we gap down again here. So this was the beginning of September. So you could have played this. You could have shorted the market here as a day trade. You could have bought puts, got in, got out. You could have bought puts, got in, got out here. Why? Market was down here. Market opened lower here. This was a gap down. And again, that was the first week in September after the Labor Day. And again, any questions here, let me know. Here was the Oracle. Okay, this is the daily chart. We were looking at the 1 minute. Up in here, you can see where Oracle closed, 4 o'clock Eastern time. Then it had earnings after hours at night. Then boom, open in the morning. So it was up here. I don't remember the exact prices closed, 126 and change, something like that. It opened here though around 112-ish, fell. This is the short play. And again, I called a put. So a put is an option, which is basically a short. You're basically shorting the stock. It was a cheaper way to get in than to take a trade on margin as a day trade. Okay. And again, any questions, you can plop it in the room as we go along. But for everything I'm doing, I'm looking for momentum. Oracle's a great example. SPY was a great example. They were shorts and they went quick and fast. And again, Oracle was a great example of that. You could have got in and out of the day trade quick. You could have got in and out of the put quick. You could have got it in the put and out of the put in the same day. And I'm doing weekly puts, okay? Everything expires on a Friday, like we did some trades today. The trades that I called today expire this week on Friday. So that's a short time frame, actually, to do an option, in my opinion. And when we're doing the day trades, we're in now 5 minutes, 10 minutes, 3 minutes, 15 minutes. Those are fast trades. But everything I'm looking to do, I'm looking to play the gap. But again, I want momentum. And the gap is giving me momentum when I see it. When I see it, my expectation is that it's going to do like an Oracle move, for example. And then, of course, the benefit of trading momentum is what? The faster you get the trade, the bigger you get the trade, the more money you can make. You just plop on the size. For example, if you have 1,000 shares of a stock and you short it and it drops $1, if you short something to $20 and it drops down to $19, and if 1,000 shares, what will you make? $1,000. So again, same thing. If you got a move of 10 cents, but you'd only make what? $100. Would you rather make $1,000 or $100? I'd rather make 1,000. So again, it's the whole idea that momentum means a big move. Of course, for that, you need what? You need volume too. Okay, you need volume. We're only trading stocks with volume. I'm not doing penny stocks or cheap stocks. But getting back to what I'm saying, the key to day trading stocks successfully is using a system that sets up daily, has predictability in the direction of the move, and works independently in the market, and does not need the market to work, because that can be a bugaboo. This market has been back and forth, back and forth, back and forth at different points throughout the last several months this summer. The market overall this year started out the year in January, and I was surprised, very bullish. We rallied this year, we're up for the year in the market. When I say the market, I'm talking about the SPY, the QQQs, or even the diamonds you could look at, which is the ETF for the Dow. But either way, the market is bullish. We are in an uptrend. Does it hold? No one knows. Okay, just like no one knows what's going to happen with the Fed. We have 3.5 more months left in the year. Anything could happen. The market may not hold between now and the end of the year, or it might, but we could still have a bearish fall where the market's selling off, and we may not break the low for the year, or we might. Okay, the one thing that's beautiful about selling, what I like about shorting, is that short moves happen big and fast and out of nowhere, and panic comes in when they do. And again, that's why shorting gives me such an itch. Most day traders, and I'm making a blanket statement here, but most retail traders, most day traders, most swing traders prefer to go long. I don't know why that's true, but it is. The only explanation I can have for that is because the idea of going long makes more sense to people, buying low and selling high. Also, there are some types of accounts that people don't have set up correctly to short, so therefore they cannot short. They cannot short. They don't have the ability to short in their account. They can only go long. And then also people tend to want stocks to move higher. And again, they can grasp those concepts. And people want to buy into companies like Apple and other companies too, Microsoft, whatever it happens to be, that they believe in, that they love, and they want to go long the stocks. And again, this could be as something like a swing trade, for example, or a call, which is an option, but it is basically like going long in the position. But if you learn how to short, I'm telling you, you can have a niche. And again, that's important, because anything that you can do to give you a leg up so that you can get ahead of the next guy is going to help you succeed, is going to help you make more money, and it's going to help you be successful in the market, which obviously you want to do. So success or failure has everything to do with the quality of your system. So for me, I developed a system that involves 26 points. It's a 26-point rating system. I'm looking for 20 points or more. If I get 20 points or more, I feel like it has enough points where I will short it in the direction of the gap and a gap down, okay? So, for example, Oracle, again, was a good gap. It rated per my system more than 20 points. So we shorted it, okay? And again, you could do a put, which is a short, or you could have done a day trade in it as well. But my niche is shorting moves for the fast speed, in and out. And again, if I'm in and out of a trade in 5 minutes, 10 minutes, 15 minutes in the morning between 9:30 and 10 a.m. Eastern time, I don't have to worry about the market. I don't have to worry about the Fed. I don't have to worry about data that comes out at 10 o'clock or 2 o'clock or anything that may screw up my trades, you know? And that's the other thing. If you don't know how to read the market, you could be struggling now. If you need the market for your trades, you could be struggling now. Again, Friday's a good example of that. Today's a good example of that. You know, we rallied today, but we pretty much went nowhere. And we opened lower this morning. We actually gapped down in the market this morning, pushed back a little bit and sidelined all day, went nowhere. Today, we had really no momentum in the market. In fact, today, I would say the market showed its hand of weakness once again. But for me, it's the shorting. It's the shorting. That's my niche. Okay, that's what I'm looking at. We did this BA. We've done this a couple of times in here, but this closed here, gap down, fell. This was the end of August. Again, you could have done this as a day trade. You could have done this as a put. We're talking about momentum. You can see this is a big fat red bar on the daily chart. We're on the daily here, okay? And again, I'm only doing stocks like BA is Boeing. You know the company, you've heard of the company, you know, you're going to get filled in the trade. You're going to get in, you're going to get out. But again, whether you do it as a day trade or whether you do it as an option has to do with the type of account you have. But the system, the method, the strategy is the same no matter what type of trade, no matter how I enter the trade. But for me, it's the shorting part of it. And again, if you're trading, you really need a niche. If you want to be like everyone else out there, your results are going to be like everyone else. And I hate to tell you, but most people that trade the market lose. There's many reasons for that. Some people just don't have good discipline in their trades. Some people don't get out. Jeff was talking about earlier, he was talking about people getting greedy with piggy targets, you know, and some people have other issues. But ultimately, even if you were a piggy in most of your trades, you would still make money in the market if you had a good system, quite frankly. And if you had a good system, you would get some trades. So booking money is part of it. Not everything's going to go to the dream target, but you will have some trades that do. And if you want to have outstanding results, then you need to be different with what you're doing to get yourself out of the cream of the crop where people are, you know, doing whatever they're doing. Like today is a good example. They're buying the dip. I would not be doing that. We did not do that. To me, that was not a good idea to do whatsoever at all today. And I know people did it. I know people did it. So, and when I say people, I mean retail traders. So my method is based on reading institutional money that moves stocks and gaps. Not all gaps are made with institutional money, though. This is one reason why people often are confused when they're reading the gap direction. But it's not confusing if you have a method to review it and read it and rate it and use it every single day. So here's another one we did. This is Apple. Again, Apple has been trying to break for a while now. And by break, I mean fall lower than it's been. Stock closed here, gap down, rallied, fell. Again, this was a nice move for Apple. Hit up here, broke under 185, fell off a cliff, broke 180, came all the way down, finally broke 175. This was July. The stock had earnings, and then it fell into the August weeks. Pushback, fell again, got the drop here, fell once again down in here, broke 175. I didn't see where this closed today. Apple was up today, and good news, Apple rallied today, which is one of the reasons the QQQs were green. The overall market was green a little bit today. But anyways, we shorted this. We did shorts in this. And again, this has been actually a really nice short. So how do you make money shorting? You make money shorting when the stock price drops. Again, like that Apple or Oracle. Who can short? Anyone can short, as long as you have an account set up to short. And if you don't have a margin account, then you can buy a put. You can buy a put. You can set up a cash account as an options account, and buying a put is basically a short. So retail traders and professional traders both can short. Hedge funds can short. Okay. So again, if you don't know how to short, it's something that you need to learn how to do. You need to know how to short in a bullish market or a bearish market. But what if we go into a bearish market? What if the market turns? I don't know if any of you have traded in 2022. The market fell in 2022. Multiple opportunities to short in 2022. And if you didn't know how to short and you didn't take advantage of it, you didn't have a good year if you were going long every single drop, buying every dip in 2022. We could have another year like that in 2024. Who knows? Again, the fall this year could be bearish, but selling happens quick. It happens fast, usually done early in the morning, quick. Now we're going to talk about, this was again before I took off for Labor Day vacation. This is 1 week of day trades. These are day trades that we did. I get up in the morning, I rate the gap, I use my system. If I don't find any gaps to trade, I won't trade. This was for 1 week with an average risk of $2,800 per trade using, these are all trades on margin. We're going to go over every trade we did this week. It was the end of August. Monday, there were no trades. Tuesday, we had a good one, 39.65 profit. Again, I'm trying to turn over my money once, okay? Wednesday, 3,200, Thursday, 25.50, and Friday, 22.50. Total for this week was 11,965. So we started out 821. There was no good gaps. Nothing met my criteria. We didn't trade. Then on the second day, the 22nd, was DKS. So we shorted it, 115.95. This is a trade on margin. You could have bought a put. Risk was 33.15. Again, 1,300 shares is what I did, and then we exited 112.90. Profit was 39.65. Here was the gap. So let's take a look at it. Again, this is a daily chart. Stock closed here, gap down. Again, stock closed up here around in the 140s, mid 140s, gap down here in the morning and opened well under 120. Fell off a cliff. I had a fast exit in this. I'd like to get in and out quick, but I could have held this all the way down. I could have made more. Came all the way down. You see where it went, came down to 110 and change. So I could have made at least another $3 out of this, but I got in and out fast. So this was a really nice move, a very bearish move, a really solid sell-off on the 22nd. And this was a day trade. I called this trade live in the room. So again, one of the benefits of doing my classes, you're eligible to join the live trading room where I call the trades live. I call the entry, stop, and the exit. And again, the size that you take is based on you yourself, whatever you decide to do. If you want to do a small size, you can do a smaller size. If you want to take 100 shares, you can. If you want to take bigger size than I'm taking, that's up to you as well. Then on the 23rd, we did Foot Locker. This was another good one. Again, here is the gap. Stock closed here, gap down. Stock closed up here around 23 and change. Open in the morning here, above 16, fell off a planet. We got in, got out, done, boom. Entry was 15.25, exit was 14.85, profit was 3,200. Again, this was a very, 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 very fast move, but it went and we didn't, and we got in, got out. Again, I prefer the fast trades, but that was a day trade. That was on Tuesday, and we were in it, or Wednesday, I'm sorry, and we were in and out of that one. Then the 25th, we did Marvell. This was Friday. This was Friday. This was Thursday. Oh, no, I skipped this one. Oops. The LTR was Thursday. 824. We shorted this here at 129.90, exited at 128.80, and I could have held this longer too. I could have had this down. Profit was 25.50. Again, I'm risking an average of $2,800 per trade. I'm trying to turn it over once, but I could have held this. Stock closed here, gap down, fell, boom. Closed the night before up here above 140, open in the morning here, or right around, slightly above 130, fell off a cliff. Again, I could have held this more, but I get in and out fast. I like to be done my trades in the first half hour of the day. Ideally, first 5, 10, 15 minutes if I can get in and out of it. But this kept going, and that was a nice one. Then Friday, we did the Marvell. This was the 25th. Stock closed here, gap down, fell, shorted it, 50 54.10. Again, $1 is a good move in a stock like this at a $50, around a $50 price point, and made $22.50. And this is it. This is the daily. So I'm entering the trade on the 1 minute, exiting it, but I'm looking at the daily when I'm making the rating decision. And of course, if you do an option, you are playing the daily as well. Somebody's asking, I'm putting the stop in my day trades. Establishing my risk. You lost me there, establishing my risk. If I call a trade, and I'm just throwing numbers out here so you'd understand, if you want to go to my YouTube, I have some videos of the live room on YouTube. But let's say I said 10 by 50. I don't remember where I put the stop in this Marvell. It was like a month ago now. But if I said 10 by 50, that would be what? 40 cents. In other words, the stop would be 54. I'd be entering at 54.10. Stop would be 54.50. That would be 40 cents. If you're asking me how you size yourself, in my head, I already know that 1,000 shares of 40 cents is $400. So I have that in my brain. If you cannot do math that quickly, then you need to buy a calculator. I do have a calculator. I have a calculator by me all the time if I need it. But you should know, okay, 1,000 for every 1,000 shares, it's $400. I don't know if that answers your question. But you can use a calculator and buy a calculator if you want to, okay? I don't know if that answers your question or not. Anyways, it was a good week. It was a good week. And again, you know, right now, this week, there are some earnings, but on tap this week is really going to be the Fed. And then we will have gaps related to the market moves. We play stocks that are related, what I call a bucket of market stocks that we will look at and trade and play. But I'm looking every day at usually different things. You know, it's whatever we happen to be looking at. Like we did Adobe last week. Adobe was earnings. Now let's talk about some options here. This was August 16th. We shorted a SPY. We did a put. So I called in the afternoon. Usually I call the trades in the morning, but I saw this anyways. 1:11 in the afternoon on Wednesday, called the 440 puts. This was cheap. 330. Number of contracts was 25. Risk was 82.50. Sold at 750. Again, I'm turning it over. One is a good amount. More than that's great. Get in, get out. Profit was 10,500 with a return on investment 127%. Let's take a look at the chart. This expired on the 25th. Oops, where is the 16th? The 16th is here. So again, here's the drop off. Boom. Get in, get out. Done. Boom. So here's the sell off. And then the gap down here. Out. Boom. So again, when you're playing a put, what do you want? You want a big fat red bar, or you want to be in the put and then the put gaps down and you exit. I don't have this in here because this trade just occurred today, but I will tell you that I called a put in NVIDIA last week. The stock gap down huge this morning, and you would get out. You're up a lot, you get right out into the beginning of the open. And we did that trade. It was a nice trade. So anyways, one of the benefits of doing options is you get to capture those overnight moves, which you do not always get. You know, when you're doing a swing trade, you really essentially have unlimited risk, and that's the problem with doing swing trades. And again, the day trades, I'm in and out in a couple of minutes, but the options, you have a fixed risk. Yeah, you got to get it within the time, but that's the whole point. You only have a certain time anyways in anything you do. Because even if you did a swing trade, you don't want to be down for months and weeks and years before the trade goes. And if you do a day trade, you only got till 4 o'clock. Now, here was if you took a smaller risk, a risk of $13.20. Cost was $330, sold at $750, profit $1,680, return on investment 127%. Same trade, again, just smaller risk. You take it, you get in, get the move, get out. Boom, done. And again, it's chunking it out. It's chunk it, chunk it, chunk it. Chunk it out, chunk it, chunk it, chunk it, chunk it. You get the trade, you get the momentum, you get out. You take the trade, you get the momentum, you get out. That's the whole point of trading. It's not holding something forever and ever and ever and ever. But you will have some trades that go really big because you will happen to be in them, and you'll be in them and they will go in your direction overnight. How do I determine the direction? In the morning, I rate the gap using my 26-point rating system. That's what I was starting to talk about earlier. That is the system that I teach in the class that's 16 hours long that I teach once a month. That's what you'd come if you wanted to learn and take my class. That's what you'd pay me for, to learn the information in the 16-hour weekend course. I'm doing the ratings myself. If you come, you're going to learn how to do them. Then you can do them yourself. And then if you do them yourself and I'm doing them, and then you get in the room and then I call the trades and I call Oracle, you say, yeah, I got Oracle too. I know what I'm doing. I get it. Then I call the trade, then you do it. Someone's asking, how do you foresee the gap down? I'm not predicting the gap itself, if that's what you mean. I predict the move that it's going to make after I see the gap, whoever asked that question. Like I can tell you right now, if we gap down tomorrow morning, we're going to fall. So there you go. You just got a freebie trade. I don't know if we do, but I'm telling you right now, if you get up tomorrow morning and the SPY is down, we're going to drop. Boop. So there you go. I don't know if we will open lower the SPY. Is there a high probability we will? Yes. I don't know if we will, but if we do, it's going to drop. So I don't predict the gap. I predict what it's going to go after I see the gap. Where do I see the gap? Well, I can see it in the post-market or I can see it in the pre-market. I'm sure we're not doing anything in the post-market tonight in the market. But the pre-market is when you get up in the morning, okay? And you got to get that data. You got to get that information and you got to get it on the charts. And that's something you can talk to Jeff about. You need to be able to have access to post-market data and pre-market data. That is where I'm seeing the gap. I'm not predicting the gap. I'm predicting where the stock's going to go after I see it. I see DKS gapping down. I'm saying this is going to drop. I'm not saying it's going to rally, because if it had rallied, we would have lost. You follow me? There was one we did not do. I don't have it in here. You can look it up on your own. Len. We looked at Len last week. Len gapped down. I think it was Thursday or Friday. I don't even remember now. Every day runs together for me lately. We didn't short it. We didn't go long it. Why? It was a gap down. It reversed and we didn't do it and we didn't touch it and we didn't touch it at all. And that was a gap down and I didn't like it and it didn't work. I think it was Len. Anyway, short moves happen fast. Why? Because of panic. Panic is fear. Fear creates selling. Selling is scary. We're getting into Halloween. Hard to believe. I like that Halloween Wars, I think is on Food Network tonight. Just started last Monday. It's a fun show to watch. Not that I have time to cook and make all the things they do, but you know, fear creates panic. So going back onto what I was discussing earlier, 2022 was a very panicky year for the market. And the market recovered in January. And then all seemed calm. And if I see one more article on a soft landing, I'm really going to scream because it's really funny. You have all these money managers out there trying to calm people down. It's a soft landing. Everything's fine. This is going to be the end. Even if he raises rates Wednesday, this will be the end. This is the end of the rate hikes. Nobody knows. But people say that because obviously people that are managing money I don't manage money. I trade my own. You're going to trade your own. You're going to learn from me how to trade your money and what trades to take. That's what you're going to learn from me. But there are people whose jobs, and again, these are people I appear on Fox News and other channels with, they manage people's money. They get paid a percentage. If they're wrong, then it's a problem. And then they can actually lose their clients because people can get pissed, especially very wealthy people or people that have a lot of money. And they say, wait a minute. And in 2022, when the market sold off like a hotcake, money managers were scrambling to calm down their clients and try to keep people patient and everything will come back and it'll be fine and wait till tomorrow. Again, that is not what I do. That would be a completely different thing. But I do find it interesting because a lot of the people that I talk to on TV, you know, they're very bullish most of the time, 99% of the time. Most of the money that they take from people, they're going long, they're investing in people's retirements account, and they need people just to hang on. They also need people to get the profits for their accounts. Do I do the put orders in the pre-market? No, I usually wait till the open, but you can estimate what you think it's going to be, and you can put the order out, but it may not fill. You can watch it, you can adjust it. Sometimes I do that, but usually 99% of the time I wait and I just buy the put in the open. The Halloween baking shows, yes, they're fun to watch. The Baking Championship or whatever was the other one. One of those is on tonight. I forget whatever one. How do you handle an overnight option that goes far against you? Well, if I'm in a trade that goes against me overnight, for example, then I could be down. But if I still have time left in the trade, then I hold it through. So I don't have a kill point in my options, just so you know. My stop is my risk. So whatever you want to risk, I say play it out. So if I call it a trade today and you're in it and it reverses against you tomorrow's only Tuesday, I say play it out. If it reverses against you and you want to kill it at 50%, that's up to you. I don't do that. So I say, okay, I'm going to risk this much of the trade. That's it. Boom. My stop is my risk. You can't lose any more than that. So something can go big against you, but you're only going to lose what you risk. So if you risk $1,000 in an option, it goes completely against you. The most you could possibly lose is $1,000. And if you got a week left, guess what? That trade could come back. And that has happened. That has happened. So I play things out. So that's that. Okay, how do I find the best shorts daily? I'm looking for the gaps and then I rate them and I make a watch list every morning, I go through and I rate them. Now in busy season, which is earnings season, which starts in October. So September, we get 2 more weeks, barely. I mean, it's the 18th, I can't even believe it. This week's the fall starts. So we got 2 more weeks basically left in this month. That's it, less than that. And then October is busy, it's earnings season. So in earnings season, I might rate 30 things in the morning. In non-earning season, I might rate 8, 7, 5. So it depends how busy we are. We're busier in earnings season than we are in non-earning season, but I'll rate as many gaps as I need to. That's my job, to find the best pick. And then I prefer to do 1 pick a day, but it's a 26-point rating system. And again, I'm looking for 20 points or more. But my niche is the golden gap system. It follows large institutional money in the market. Gaps are created with large institutional money. That's what makes a gap in the first place. Okay, the professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. The SPY is a great example of this. Again, we had that sell-off after Labor Day, and then we had it again on Friday. We played it. We played it. I said in an ideal world, we sell off today hard and fall off a cliff and sell off into the close. That's what I said in the room on Friday. I was right. So, you know, there was very low odds that the market was going to rally before Wednesday. And there's even less odds that that's going to happen now. And today was like a nothing rally. Like if you had $10 million, would you buy the market today? If you did, that would be a dumb move, in my opinion. So again, people did it. People did it though. How you're going to make a lot of money is you got to get on the right side of where institutions are trading. And again, this is one of the reasons. I mean, look at where we could go for the fall. Look at what's happening with the banking sector. Look at some of these charts. I mean, some of these leading banks look like crap. You're not going to have the market. And when I say the market, again, I mean the QQQs, the SPY, the Dow. You're not going to have the market make brand new all-time highs without the financials. They're still a mess. They're wrapped up and invested in too many long-term bonds. You know, even if they take a break, the rates are what they are unless they start to lower them. And that's not going to happen this year. And how do I know? Because Powell said it wasn't going to happen this year. In fact, if you listen to him, he said, I don't remember if it was the last meeting or the meeting before, he said they're probably not going to start lowering rates until 2025. And even though everyone wishes and hopes and prays that he does it sooner than that, if the data keeps hitting out bad, the data would have to be so bad, so egregious, so horrible. We'd have to have a 4.5% unemployment rate or something crazy. And we're not even over 4. We'd have to well tick over 4 for him to even think about lowering rates because inflation's too high. And one of the main jobs as a Fed is not only to keep unemployment low, to have full or almost full employment, but it's also to prevent high inflation, which unfortunately we still have. I mean, I don't care what these numbers say. It's still too high. I know, I'm a consumer. I go to the store. I pay for everything. I don't have an assistant that's going and buying stuff for me. When I write the check, When I ring that credit card through, I know what I'm paying, and I see this is ridiculous. And I don't even have kids or a husband. I live by myself. If you're a family of 4 or 5 or even more, you're paying double, triple in your grocery bills every single week. It's crazy. So we may have come down, but barely a whoop. So they're not going to lower rates anytime soon, in my opinion. So the Golden Gap 26-point checklist is a trading system that is based on common sense. Common sense, think about it. Think where we're at. Think about the economy. Think about this idea of shorting. Think about the idea of getting good at shorting, knowing that many people aren't, okay? That you could get on top of that move, get the sell-off in the market, get the sell-off in NVIDIA like we got. Shorting gives me a niche. People get scared. They're scared. They love to go long. They love to buy. But think about the concept, the mental concept of shorting. Now, what if you have a small account? Can you still short? Yes, because you can buy a put. You can open up an options account and you can buy puts, and that is a short. And you can also buy puts in your retirement accounts too. So you can use the system to trade options. A put option is a short, okay? Now we did this the same day, actually. I was in this before the SPY. We shorted the QQQs, 360s. We did, it was the same week. That exact same week. These were cheap too. $290 for one contract. You could buy one. You could spend $290 and you would have flipped it around. 141% return investment. Profit was $12,300 with a risk of $8,700. Let's take a look at it. The 360s. So this was the same sell-off. Boom, boom, gap down, doom. See again where it is. Again, if you're buying a certain strike and this is falling through the strike and you're through the strike, which you can see you were here in this gap down, you get out, done, boom. You can wait a little bit. You can watch it, see if it keeps going. It could have kept going. If it doesn't, it starts to reverse, you're out, boom, done. Again, your goal is to make 100. This is more than 100. You've made your goal. If you took 4 contracts worth 1160, you could have made 1640. But again, you could have taken 1. This is how you can take a small account and build it up into a larger account. Now, again, 1-to-1 I'm looking for, 50% is good in option. It really is, at least until earnings season. But you should expect 1-to-1, and that is what I'm looking for in most of the trades that I take. That's what we got, and we got more than that in the NVIDIA. But again, if you learn my system, we're looking for the 26 points. I'm doing it. You're going to learn this. This is what's the whole weekend of the class. It's an intense class. It's a live class. It's an online class. You must be there. You will ask me questions. I allow you to contact me after the class and ask me questions. You're going to learn the checklist. That tells you what to look for in the price of the stock. It tells you what to read the direction correctly, when to short, or when not to do it. Like I told you, the one we didn't do. I said, nah, I don't like this one. But having a positive attitude really helps you. And not only that, getting an education. So listen, trading the stock market is not an essential, this is not a necessity. You must eat food to live. That is a necessity. You don't have to trade as a necessity to live. You never take another trade again, you will survive, okay? If you don't eat food ever again, you won't survive, all right? Now, if you decide to trade, and this is what you want to do, and you say, I want to do this. No, I don't need to do this, but I want to do this. I love this idea of trading, and I'm going to get this thing, and I'm going to be successful. Then you need education. Then the education is a necessity, because you will lose money if you don't know what you're doing. If you will lose money if you don't have a system. If you don't have a mentor, you're going to really struggle too, and I didn't. And the problem is, you don't want to lose. And it's so easy to lose if you don't know what to do. So while trading itself is not a necessity, education is if you are going to trade, because otherwise you will lose. Somebody's asking, someone's asking, do you buy puts after the earnings if the stock gaps? It depends if the gap rate's good. So again, there are gaps for earnings, there are gaps for news, there are gaps for sector gaps. I will do gaps for any reason. It all has to do with the rating, but I will do them for any reason. Earnings could be one reason, but we also do non-earnings gaps. Will your method work as well for gap ups? Bullish gaps, there's a bullish gap class that I teach usually once a year. I have not done that yet so far this year in 2023. I don't even have a date for that yet this year. I do not teach the bullish gap class every month. I teach the bearish gap class every month. So this is a bearish gap class. You will not learn how to rate bullish gaps in this class. You will learn how to short, and this is a bearish gap class, and the bullish class is not the exact same. In other words, you can't flip all of the points, if that's what you're asking me. And I do not have a date for the bullish gap class yet. I will plan it. You can get on my marketing list to see, but this is the class that I teach every month. Anyways, it's about taking calculated risk, not risk for risk's sake when you trade. Okay, so create a plan of action to achieve your financial goals, whatever amount of money that is you want. And again, it has to do with how much you risk. And again, it has to do with the quality of the pick. The pick is the stock pick, is the gap pick. The pick is the most important part. Even if you get a crappy entry and a good pick, you can do it. I actually had a late entry in the video. I saw it and I said, oh crap, I wish we'd done this earlier. I said, but it's still gonna go, let's do it. And we did it. And we did it last week and I'm glad I did. It was a good trade, but I would have made probably double what I made if I had done it earlier. I just didn't see it. I didn't see it early enough, but you know, you get a late entry, you can still make money if you get a good pick because it's all about the momentum. So it measures gaps for rating them in the daily chart to find stocks to trade that have a high probability of directional bias for the entire day, a big move on the day, which you want, early confirmation of the bias of the move between 9:30 and 10, and then precise entries with follow through and a good risk to reward target potential because that's what you want to. So the Golden Gap System is a 26-point professional gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. The checklist tells you what to trade when and in what direction. And the 26-point checklist predicts directional bias in a stock. That's how you're going to make money because you can't short something that's rallying and you can't go long something that's falling. You know, the direction is imperative. One strategy, though, is all you need to be successful in the market. You do not need a general, overall, broad-based view to make money. Tons of people have that, and they fail all the time. Learn how to read institutional money and price patterns and gaps, and you don't need to do anything else. And you could do them as options. You could do as swing trades. You could do them as day trades, because if your reason for doing this is to make money, you will make money. Again, the type of trade you take, the position, whether it is a put or a trade short on margin, it has to do with your choice, the size of your account, whether or not you can open up a margin account or not, and how much money you have, and whether or not you feel comfortable. You feel comfortable doing options or day trades. I like both personally, but you're going to learn the checklist in the class with me. It's a 26-point checklist. Again, it's the meat and potatoes of everything that I do, but I also teach all of my entries in the course, the exits and the targets. The class is at the end of the month. I can't even believe it's almost October. This is crazy. September 30th and October 1st. It's almost here, 9 a.m. to 5 p.m. Eastern Time classes online. You can be anywhere in the world and take it. It's a class on how to find, pick, and play professional bearish gaps. The class is $69.99. Everyone pays the same. If you want to sign up, email me, and I'm doing a fall special that's going on through the 29th. But of course, if you sign up and you want to get in, you can start trading with us this week. I'm going to give the training room free through the end of this year, the options newsletter free through the end of this year, and the market report free through the end of this year with the class by the 29th. So this class for September. So again, you could sign up and get this week's trades. Someone's asking a question. Let me go back. Does your system also fade the bearish gap like the NVIDIA gap? No, you will be going long. If you went long NVIDIA today, that would not be a good trade in my opinion. So no, we do not do that. The put was last week. You could have got out of it this morning. You could still be in the put that I called, however, and you would still be up money, to be honest with you. So say you did the trade that I called. I'll tell you exactly when I called it. Let me look it up. It wasn't in the pre-market though. I'll tell you exactly the time I sent this out. And any other questions while I'm looking this up? Friday.
We did have a question, Melissa, from YouTube that I promised to ask.
Go ahead.
Rita wanted to know how risk is calculated.
Your risk you should calculate based on the size of your cash account. So for example, you can't, if you have a $10,000, and I'm just using an example, if you have a $10,000 options account, First of all, if you have a $10,000 options account, you should have it set up as a cash account. You cannot trade on margin at a retail broker with $10,000. You would have to go to a prop broker. You get 10-to-1 margin. At a retail broker, you would need 25,000 minimum, and you get 4-to-1 margin. So if you have $10,000, you can go prop for day trades, or you could trade options, and then you would take that amount of money, and I would say I would risk no more than $500 per trade with 10 grand. For example, now if you get good and you're doing well, you could risk 1,000, but you want to be able to be in more than one trade at a time, if that makes any sense, because otherwise, again, you can't risk $2,000 with a $10,000 account and then take 5 trades. You'd have your whole account at risk. That doesn't make sense. I don't know if that answers that question, but anyways, we did the 445 NVIDIA puts. I'm not sure where that stock closed today, but it didn't close over 445, so that's still through the strike, even if you're in it. Any other questions?
That catches us up to YouTube anyway.
Okay. Anybody else? Oops. So if you have questions, email me at melissa@thestockswoosh.com. If you would like a trial to the trading room for the rest of this week, email me. I can give you a free trial for Tuesday, Wednesday, Thursday, Friday. It should be an exciting week with the Fed coming out. I appreciate everybody for coming today. Thank you for staying. I know it's getting late, but it's really a great time to trade. And again, it could be a really good time to short for this coming quarter. So know how to short. It's important to do it. And if you have questions on getting all of that data, talk to Jeff about that, because again, you need the charts. You need the charts to make decisions. Everything I do to make decisions is always based on reading the live data, because that is something that everybody sees. One more question here. No, I think I got it. Any other questions before I let everybody go? Thank you. Thanks for having me, Jeff, and have a wonderful evening.
All right, thank you, Melissa. Thank you. We really appreciate your coming in. All right, very cool. And then if you have more questions for Melissa, email her at melissa@thestockswoosh.com. Thank you. All right, let me go ahead and kind of make myself the presenter real quick. Okay. And let me remind you of the special that we're doing. So today at the event, we are doing a special offer. It's going to include Steve Bigelow's Candle Profit System 3, Vince Vora's Victory, Silas 3S Code, Oscar Carboni's training, 3 months of Price Headley's Big Trend Toolkit, who's our keynote speaker tonight, our finishing speaker, 3 months of Learn MetaStock and Unleash the Power of MetaStock, the workbook and video. Normally all of that stuff would cost you $47.37. Here today, $22.37. So you can take advantage of that by giving us a call at 800-882-3040. You can go to metastock.com/sales chat, or you can go to metastock.com/summit deal. So there you go. We want to say thank you for Stocks and Commodities for sponsoring the events today. They've been sponsoring us for 10 years. Great magazine, great company to work with. If you're watching us on YouTube, you want to get a free issue, go to metastock.com/traders-summit. Fill in the registration form for today's event, and you can get a free issue. That easy. And of course, we're MetaStock. Our last presenter today is also a good friend of mine, very, very good technician, Hall of Fame trader, Price Headley. I can hear you, Price.
How you doing, Jeff?
Good. How are you?
Super. Thanks for having me.
Do you have any ideas on how I'm going to introduce you?
No idea. I'm sure it will be a wonderful introduction. Thank you.
Well, I always talk about how I really like the attitude you have around trading. I like how you focus all of your research on maybe ignoring some of the smaller opportunities that exist in the market to maybe focus on some of the bigger ones.
That's
so
right.
Maybe I'll say a little bit about that. Maybe I'll say, like, you're the first person that I really learned a lot from in the market. I really like the work that you've done with the Big Trends book, the Big Trend. What was it? What's the exact title of your book?
Big Trends in Trading.
Big Trends in Trading. BigTrends.com is your website. I think that's about what I'll say today. So
that's Very kind, Jeff. It's we've known each other for so long, and you helped us to really get on the map with this unbelievable toolkit, which now I can't believe it's already on its third iteration. We've added in a lot of other goodies for folks. So I'll let you talk about the toolkit at the end, but I've got a lot that I want to share in this next 50 minutes or so. I'll try to leave you some time to finish that up. Let me make sure the screen looks okay here, Jeff. Talking about $1 options today.
Yeah, I got it. I can hear you.
Beautiful. And I'm impressed with our attendees that have shown amazing fortitude to stick with it here. So I'm thrilled to have you with us, one and all, and pop in any questions you want via the chat. My experience in options trading has been one I got started, and I caught the trading bug while I was in college at Duke University. When I graduated from there in 1989, I went right into trading stocks and options. And back then, I didn't have amazing tools like MetaStock to be able to scan the market. So I was coming up with pages upon pages of chart patterns and all this stuff. And what I found is that if I had too much information flying at me, what do you think I did with pages upon pages of potential trades? Anybody have a guess of what I did with many pages worth of trades? Not boiled down to my top few. Didn't do much trading. I was confused in the early days because I had way too much I was looking at. And so the power of MetaStock to be able to scan, to be able to find the best of the best, to be able to boil it down to a handful of opportunities really makes you able to start taking action, to start knowing what are the times where you should be pulling the trigger with confidence. So what I want to share with you is how I pull the trigger on cheap options. This has been an evolution in my options trading philosophy over the past now 34 years, is basically learning how to trade aggressive options, but still have a game plan on how you get the heck out, whether it's at a profit or whether it's time to cut and run, preserve capital, and move on to the next trade. So we're going to walk you through both sides of the equation today. And like I said, at the end, Jeff will come back in and talk about our Big Trends Toolkit and all the ways you could be scanning to boil it down to the true nuggets that you can pull out of the markets on a daily basis via the software. So just as we get started here talking about these $1 options, they've been giving us doubles, triples, sometimes even quadruples here in 2023. We're going to walk you through how that works and walk you through how to manage the risk. There's always risk in trading. It's time for the disclaimer slide, right? The information provided in today's presentation, it's based on our proprietary research, and it's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations today. As you know, stock and options trading have a large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. Do see our terms of use on our bigtrends.com homepage for more information in this regard. So with that understood, like I said, I've been trading for coming up on 34 full years and launched Big Trends in November of 1999. That'll be our 24th full year anniversary here in just another couple of months. Blessed to be inducted into the Traders Library Hall of Fame, back in 2007, standing on the shoulders of a lot of other giants in the trading world, I would say. And I know Jeff probably already had some of them in earlier today, but my goal is to help you stand on my shoulders of what I've learned, so you can get basically a much faster jumpstart, kind of a quantum leap, warp speed to actually where you want to be quicker and start trading the way you should be trading. Been blessed to serve many thousands, if not tens of thousands of traders all over the world in the last 2.5 decades. But bottom line is that, this is my focus here, how we can trade options for aggressive growth, but also knowing we can manage the risk. Let me ask you real quick in the chat box, if you've traded options, type in the number of years you've traded, just type a number. If you've never traded an option, type a 0. If you're in the first year of your options experience, type a 1. If you're in your 50th year, type a 50. I'm in my 34th year. But basically the idea is that whether you're new or more experienced, the idea is that you want to make sure you're always green and growing. You're always learning something new. When I launched BigTrends.com, I was mainly trading in the money options, pretty conservative options. Because I was like, well, I'm going to launch this company. I'd made good money in the tech run up in the mid to late 90s. And I was like, I don't want to give it back, right? I want to make sure it's there. So when I launched the company in 99, guess what? We had over the next couple of years was a bear market. And the tech bubble popped, right? And you had this situation where thankfully I had traded and built my portfolio, but also had strategies on how to pull the ripcord to get the heck out and minimize my givebacks. So we've got a 10, a 1, a 1, a 10, a 2, a 0. So we've got a nice mix of both new and experienced options traders. I appreciate the feedback. Another one says 8 years unsuccessfully. I never named names, put anybody on the spot, but you know what? We'll help you flip that around and start learning what you maybe have been missing here in options trading, especially in options buying. A lot of people try options buying, they mess it up, and then they give it up or say it must be a seller's game. The reality is options are a zero-sum game. So that means that there's money to be made on the buy side, money to be made on the sell side, and equally there's money to be lost on both sides, right? If you're not careful, you can give back your profits way too easily. So that's why we're always recommending discipline, vigilance, proper capital allocations, a lot more. But let's just talk about this option strategy. It's called Grand Slam options because we're really looking for home runs here. As you know, a Grand Slam is when you have the bases loaded, you hit one swing of the bat with a home run, actually scores 4 runs off of just that one swing of the bat. So the idea is that, you know, we want to focus on how we can really leverage this. So we're going to share with you not one, but my top 2 indicators for trend trading low price options. These are options priced at $1 or less, which means you got to multiply times 100 shares that each contract controls. So if an option is quoted at $1, that means it'll cost you $100 to control 100 shares of stock on one option contract. So you can oftentimes control tens of thousands of dollars for $100 or less. And that's where the leverage potential of this methodology really comes in. So we're going to review a number of past trades, some success stories, also talk about when it didn't work, what we do to cut and run, how you can find new trades for the rest of 2023 and beyond. Our prior speaker was talking about bearish opportunities. My view is that you're going to see bear and bull opportunities here. You're going to see that it almost doesn't matter about the market condition because there's always a bull market and a bear market somewhere in individual stocks and stock options. So we're going to focus on the individual equities. And let's talk about one that we just cashed in on here just in the past week or so. And this was Marathon Petroleum, MPC. I don't know about you, but has anybody been trading oil lately? Oil's been where the action is on the upside. MPC was one that was signaling for us that it was moving into this relatively unusual pattern. And Jeff alluded to it. I don't try to trade the small trends. I don't try to trade if I catch a little fish, I literally would throw it back. If I think it's not a big enough opportunity, I'm not interested. Why? Because if you get into little fishing, you will miss the big fish, right? You will not be thinking properly about how to ride when you really get on a big trend. So the philosophy of big trends in so many ways and so many different systems that I've developed over these last several decades is that we want to see 2 indicators in this pattern, both going overbought on the same bar. And I'm going to give you what they are so you can actually go play with them. I'm not going to give you settings. You get settings when you become a subscriber. But I'm going to tell you, the first one here in red is the Larry Williams %R indicator. What %R stands for percent range. A percent range means where is it trading in a recent look back period on a scale of 0 to 100%. So if it's at 100%, you think it's at the top of its range, right? But as you know, the top of its range implies that would mean that high should not be going any higher. And yet you see what's happening. It's continuing to go higher in this first leg. And of course, continuing to go higher in this next really big profit leg here. So that's not a percent range anymore. I often joke that we should rename it %T for percent trend. When something goes overbought and stays overbought, that's actually not a bearish phenomenon. You can see here, that's a very bullish period where you want to be riding on the way up here and not bailing too early, right? Not getting weak-kneed, not getting scared. You never want to trade scared, okay? So that's why I always tell people that if you've been trading scared, I'm not going to ask how many of you have been trading scared, but I'm going to say I know that we've all been there, okay? If for any length of time that you trade. And if you have fear, you can always start with paper trading, but the beauty of this method I'm teaching you about is that one option contract here, even if you just bought one contract just to say, let's see how it goes. One option contract would have cost you $95. If you can't risk $95, you probably shouldn't, or not just probably, definitely should not be trading options, right? You've got to have the ability to give a trade some room. You've got to have an ability for some trades that don't work to lose and still know that we've got a way out of these trades typically when they don't work. Sure, you could always lose what you put into it. And good to see you, Shirley. She says she's been trading XLE. I see Shirley on a lot of our Big Trends webinars as well. But bottom line is, hope the horses are doing well, Shirley. But bottom line is that, we want to be on the sprinters, right? We don't want to be on the plotters. We want to be saying, okay, look, Marathon was giving us a signal that not only was CCI breaking out, but this blue line is not only is %R breaking out with CCI, the Commodity Channel Index is the blue line here. When both of those go overbought on the same point in time, this is, by the way, an hourly chart, 60-minute chart for MPC. This is going back to our entry point, which was right there as we kicked off September, essentially, September 1st. Notice where the stock is trading. We wait for the first hour's close, so we don't try to get in right off the open. We're getting in at 10:30 Wall Street time, Eastern time. The stock is trading here near 146. So notice what we're buying. We're not buying the weekly options that are going to expire in a day or two or 5. We're buying typically 1 month out, give or take, somewhere between 3 and 6 weeks out before expiration. So about a month out. The October monthly options, or the traditional monthly options, expire the 3rd Friday of a given month. We just had the September monthlies expire this past Friday. So now we're into the October monthlies. Sure, everybody loves 0 days to expiration options. That's a hot trend. Frankly, it's a very speculative trend. It's very much of a volatile trend. I'm trying to smooth out some of that volatility and still get paid for big trend moves, okay, without so much of a worry about, am I going to have enough time? If you listen to Warren Buffett, obviously you think, well, Warren Buffett doesn't trade options. Actually, he's done a lot of put selling in the past and made a ton of money put selling. Names like Coke, when they had their new Coke fiasco, he was like, I'll buy as much Coke stock as you can give me below. I remember it was like $40 many splits ago. And it never went below 40 because everybody knew he'd buy any bit of shares that were there, and he pocketed from selling those put options. But Buffett says he likes a long runway, right? He likes to make sure he's got plenty of time for his plane to take off in whatever stock investment he's making. It's kind of the same idea here. We don't need 6 weeks till the expiration when we bought this September 1st, but we bought an October 20th expiration, actually had almost 7 weeks to go before the expiration. Definitely at least 6. And we're saying we're only in this trade, as you can see, for 4 trading days. So we have plenty of time left if it hadn't fired to cut and run and move on. We'll talk about how we cut and run. But let's talk about what's happening on this chart. We got our first little leg up. It's not a huge leg on this first little move. I acknowledge that. It only moved up a couple of points. And then it retraced back in here to about where we bought it. Now, what those retracements are, I have a different word that starts with an R on those key lows. They're called retests in my language. That key low there, noontime back on September 6th, was a retracement. Okay, big R there. That low needs to hold. That's a %R retracement. We'd also had a CCI retracement right back into that prior support, right? And that's about that same level. That was right around where we got in, around 146. So far, we're not making any money. We might even be down a little bit on the option trade after a day or 2. Okay, now we don't want to be wrong after 2 full days in an options trade typically, and definitely not more than about 3. So the idea is that, look, we'd like to be, even if we're buying out 6 weeks, you say you've got all this time, you don't want to be in a position where you're saying, okay, I'm going to hold and hope all the way for 6 weeks and this thing's never moved. That's disaster because these are out of the money options, right? The stock was 146. We bought a 10% out of the money 160 strike call. A lot of people, and frankly, when I was launching bigtrends.com in 1999, I would have been like, no, that's way too risky. That's 10% out of the money. My philosophy has shifted to say, you know what? If you're, at least on part of my capital, I'm not saying you do this with your rent money, but the idea is that you do this with speculative capital. You can afford to take some risk to get much bigger growth on part of your portfolio. And again, you can peel it off with just small little pieces to start of a few $100 per trade and not have that much risk in any one trade. But principle is, look, you don't have to get it past 160. Most people assume you do to get paid. If it moves quickly, what's going to happen is as it gets closer to the strike price, you're going to see that the option that you paid 95 cents, that's $95 to control 100 shares of stock that would have cost you 14.5 grand roughly. That's where your leverage is, right? 150 to 1 or so in this example. You're saying, look, okay, then it finally starts going about the third day into the trade on the 7th, the morning of the 7th, maybe the fourth day into the trade, actually, because we had that Labor Day weekend, right? The first was a Friday, then you got Monday, Tuesday, and then Wednesday of that next week. It pops up here at about 150, 149 and change. And now we're getting our first position target at a double. So what do we do when our trade gets to 100% gain? Do we sell it all? We do not. My philosophy always has been that if I can double anything, whether it's a stock, an option, a Bitcoin, a Forex trade, or whatever, if I can double anything, a future's a little different, obviously. But, you know, if you can double any investment, I believe you should sell half of it at a double. And if it gaps past a double, still sell half of it. If you can sell it at a double or better, what does that do for your original risk capital, right? Say you put $1,000 in to start. Say about 10 contracts cost you $950 in this example. Well, that $950 has now gone up and doubled to $1,900. Well, you can get $950, half of those contracts, 5 of those 10 contracts back out now at $1.90 a piece. And that puts $950 back into your pocket, into your trading account in the form of cash. That's safety, right? That's your initial risk capital return to you with no more risk in the market. You've sold half of it out, and yet you still have the other half riding. So when you leave the other half on, what we're going to do is, okay, in baseball terms, think if you get a double, that's a nice hit, right? You get a triple, that's another nice one, and then the home run is the 4-bagger. That's the 300% target in this example. 4 times your money is the final target. So when we get a triple, we sell half our remaining piece. You can see that was achieved when it gapped up Friday before last, the morning of September 8th. It gapped up to about 152.5, 153. We're selling out at a triple. Remember, the stock's only gone up 6 points to 7 points. That's roughly what? That's a 4 to 4.5% move, and we're making 200% on our option. And then the final piece is achieved when it pops up here at about 155, 156. That first hour of September 8th, 300% achieved. At that point, I could care less where MPC goes from there. It could keep going. It could reverse. It doesn't matter. When you can think about that. You put $950 in on 10 contracts. That $950 made you $1,615 gross before commissions. And remember, commissions now are lower than they've ever been in my 30-plus year trading career. You're paying less than $1 a contract on the way in, or less than $1 a contract on the way out. So round trip, you're still, even take your commissions out, you're still up about $1,600. So the idea of this, all this took a whopping 4 trading days. And the stock never got to our strike price of 160, yet we still made a 4-bagger, 300% on the final piece. We did take half out at a double, half of our remainder out at a triple, and then the final quarter of our original position out at 300%, right? So you're not getting all of that trade out at any one, but this is the secret to trend trading success, folks. You've heard the old phrase, cut losers quickly, let profits run. I see so many traders who have so much scar tissue from past trades where you feel like you've been burned, where you let a winner turn into a loser, where you're like, well, I'm not going to let that happen again. You can't go broke taking a profit. I'll take a 25, 30, 40, 50% gain on one of these and feel pretty good about it. And I'm saying, don't do that. That's not the way that this type of a strategy is set up. We've got other strategies set up for the slow, steady, high win rate, 25, 30% type of return potentials. But this is much bigger potential, and it is in more risk. You are taking more risk on these trades. You could lose what you put into it, but we're going to talk about how we minimize that risk, and we've done a really good job, I think, of managing risk, especially throughout recent choppy markets, which are probably the toughest type of market to trade an out-of-the-money option strategy on. We're still cashing it in on a name like MPC last week. Our scans pick this up. We use MetaStock's Explorer as one of the great tools that you can use to go scan for these type of opportunities. So HL says, where would we cut the MPC trade? If we got that, 3 days in and it wasn't working, typically we'll cut and run. This is one that was a little bumpy here on eBay where we didn't get off to a great start compared to MPC that was very steady, and yet we still managed to hang in there. So you can see on eBay, here's one where it's a little bit more rugged. There's both of the indicators breaking out together on this first hour close. That was July the 3rd, right before the July 4th holiday. That was a Monday morning, July 3rd. Stock was trading near 45 bucks. Are we buying a 45 strike call? No, we usually have to go out of the money because we're going out to the third Friday in August. So again, about 6 weeks to go before the expiration. We're buying 2.5 points out of the money, which in percentage terms is what, about maybe 5.25% out of the money. And we're paying 84 cents. That's 84 bucks to control 100 shares of stock that would cost you 4,500 bucks. So the leverage here is only theoretically about 50 to 1. And you can see first, remember that's a half day, so we didn't kind of count that in our count because the market closed early that day on July 3rd before the holiday. But first day in, first full day in, July 5th, you can see July 5th here is flat. Second day, we're down. Okay, third day, we've come back to about flat. So we're saying it's got to get going by the next day or we're bailing out on the next day. And you can see the next day it started to really trend up into a positive direction. So this trade took a whopping 5 trading days and it doubled and hit our 102% target. Notice this one did have to go a little in the money because it was a cheaper stock, right? The out of the money options, you can get paid even before it gets to the strike price. And this one, it did go up to about 46 3/4. Actually, I take that back. We're not quite to the money there either. 47.5. I was thinking 45, but we're 47.5. So we're still a hair out of the money here, but closer to the strike price, right? You can see we're up near like 47.25 here. And then we had a CPI report coming out. Sometimes we will say, you know what? We've already gotten our double. We don't want to give it back on some kind of a bad news reaction to, say, earnings or CPI event risk. And so we just said, let's take the other half out before that CPI report, and the other half was sold at 97%. So that's where those two rectangles are, where we're taking our profits early on July 11th and again later on July 11th before that July 12th morning CPI news. So you take those two halves out, you average a double over a full 5 trading days. That's 1 week held. You still had basically 5 more weeks to go before the expiration, but we're not going to make excuses, right? We're not going to hold and hope. So you could have gotten 11 contracts if you're putting $1,000 in at maximum. That'd be in for like 926 bucks, and you made 926 bucks gross before commissions, right? You're still up over 900 bucks or so even after commissions. If you pay $1 a contract in, $1 a contract out, you have no ticket charge anymore. That would be 22 bucks in commissions maximum. So you're still up 904 bucks at least if you follow our rules. We guide you with real-time email alerts and text alerts when you become a Grand Slam Options subscriber. More on that later. So then you look at this and say, okay, how about another full target, all 3 targets achieved? This one on AMD, Advanced Micro Devices, one of the new chip leaders. Everybody's talking about NVIDIA, but boy, AMD sure has been really good to us, not just this year, but in the past years as well, on the upside and the downside. Here's a great example where both of them go overbought together. Remember, the blue line's the CCI, red line's %R. Give me that. You get the settings on all the parameters when you get signed up. But bottom line is that, look, that was on this big surge. A lot of people would tell me, you missed it. Now it's not going anywhere. You can see in retrospect. Well, yeah, for the next day, it kind of day and a half even, it pauses, right? So we're getting our signal here at the end of that first hour when he gives us that signal, stock trading in the neighborhood of about, what, 87 bucks. And look, we're buying the 105 strike call, some 18 points out of the money, right? We're pushing towards 20% out of the money, and yet we're saying we're not worried by that. So you get this little flag pattern. By the way, do you notice the first retest here? This little slam down here on the %R, that low needs to hold. It does. CCI never even retests. It would have to retest under that green threshold line. It didn't. So you can see here that we're getting a nice little pause. That pause refreshes. The flag is holding. You know, the flag pattern is just oscillating back and forth. Don't get faked out by that. A lot of traders get nervous. Say, it's not moving. It's supposed to be moving. I better get out. No, the structure of the trade is still good. We will assure you as a subscriber, we're still holding it. We still like it. Structure's still good. You can see the next launch phase as we go back into the overbought mode here is coming up. And then basically first target getting achieved as it surges up into the low 90s. Our 84 bucks a contract, controlling 100 shares of stock that would have cost you over 8,400, right? So more than 100 to 1 leverage, theoretically. It's getting its first target hit in the low 90s. So the stock's made a move up of about, what, 5 points? A little more like, what, 6%? And you're making 102%. Then the next move, it's only making another couple of percent move up from about 92 to about 94, 95, we'll call it. 3% move more. You get another 100 percentage points, 203% on the next target achieved. And then final target achieved when it goes up from about 95 up to about 98, made another 3% move. You got another 100 percentage points, 304% on your final target. All this took a whopping 3 trading days. Did you get to the 105 strike? No. Did it matter? No, because you got the speed of movement. See, when you can find speed of trend, speed of movement, as Jeff alluded to earlier, the big trend, not the small fish, trade for the big fish, that's where you really get paid. That's where the opportunity is as a trend trader buying out of the money options. Again, this is for more aggressive kickers to your portfolio to really put the growth back into your portfolio. I don't recommend it for, long-term, like kind of slow, steady money. I recommend it for putting the fast speed of movement into a more aggressive piece of your smaller but more aggressive piece of your overall portfolio. And we got to talk about trades that don't work. I'll show you one that didn't work here recently. Not every trade is going to be a winner, even though this would have worked. It hit our time stop. This was Fluor, the construction giant, FLR. I keep feeling like all these presidents kind of keep missing the opportunity to say, instead of handing out trillions of dollars, why can't we go back to the 90 years ago, New Deal approach of saying, yeah, let's build some bridges, let's build some highways, let's our infrastructure of our roads is crumbling, right? It gets terrible grades compared to the rest of the world, and it's amazing, right? But yeah, we're just handing out money instead of putting it into infrastructure and building out our roads, our bridges, our overall infrastructure of our whole system in the U.S. highway transportation system. Anyway, don't get me started there. Point being, Fluor, check the boxes. Okay, percent R is just breaking out. The CCI is already breaking out here too. We felt good about because these options are cheap. The stock's trading at just under 34.5, maybe 34.25. We're buying about 10% out of the money. The 37.5 calls. Only paying $66 a contract. Now, I'm not in the game to trade maximum contracts. I'm in the game to get the leverage to get me doubles, triples, and quadruples in this system. So I'm betting it's going to go, and you see it just pauses. Now, you could say, hold on, our retest never really broke on the percent R, but it looked like we were starting to lose a little bit, at least intraday here, we were losing a little bit of this CCI support. It turned out that it flipped back up. But you know what? We were at the end of this second full day where we said, let's not hold on and hope. Let's take the just under 17% loss. And this is why we switched. I used to do this on an hourly system, and this is why we switched to the 60-minute system. Because we found that on the daily system, I should say, the daily system, I'd end up holding too long, and then I might end up taking bigger losses than any subscriber really wants to take. Nobody really wants to take big losses, right? We all want winners and we prefer to have no losers. There's going to be losers. But if we can say, okay, fine, give it that full two trading days and give it a chance. As you can see, then it popped from 34 after we sold it up to 35.75. So we probably would have gotten our double target on that fairly small-ish 5% move in the stock, 4% move in the stock, because those options were so cheap, right? But we missed it. Okay, we took the 17% loss. We moved on. The cutting the losses quickly is what's helped us to keep growing our equity curve. That you're not giving back your profits that you just made on some of these nice winners I'm showing you. But I see a lot of other services out there where they just throw a bunch of stuff against the wall and they only tell you about the winners, and meanwhile they've got a bunch of 100% losers. We really don't want to show 100% losers. We don't want to experience 100% losers. It could happen if you got a really bad gap. I always tell people to plan like it could happen, so you don't overcommit your capital. But when you could even call us at our 800 big trends line and ask for the full Grand Slam track record and see we've had very few 100% losers over many, many years of data. Okay, so point being that, and I think especially in recent years, it's incredibly good on our risk control. So we've really worked hard at that. To say we know you don't just want winners, you want to minimize your losers too. Not all profitable trades get to exactly 300%. Here's a Delta trade. We closed the final piece at 270%, again, because we were worried about overnight risk. There was another inflation report coming out. But Delta, you can just see, Delta was taking off, pardon the pun, couldn't help it. But basically you say, look, there it is. You say, oh, you get me in, and then at first it's a little bit down. Well, it's going through that little retest phase, right? We get the next little surge up, we're starting to make some money, and then we're back to where we started, getting back into a retest zone here. You can see retest after retest here. I call this a stair step. You want to trade, and when you're buying a call trade, you want a call trade that climbs the steps slowly and steady. Kind of like you've heard the old phrase, stocks ride the escalator up, but then they ride the elevator down, right? So you go in and you look at these and you say, okay, look at the retests that are happening in here. Look at how the stair steps just keep on going and going. Energizer bunny style, it seems like. So you can connect all those dots and you can see the stair step, right? You can kind of just see how the stair step is going here, right? So you can see it. Sometimes it's just a little bit higher. Sometimes it's a lot higher by the time of the next step. But the point is, we think you can keep on stepping up here. What you don't want to see is it, of course, rolling over and starting to go down the step, right? That's what you don't want to see. But that's not happening here. But what we said is, look, our first target hit there when the stocks moved up to 39.5. We bought the 39 strike calls. This was when the cheap options, cheap stocks, I should say. These are all cheap options, right? This one's priced at $100, $100 a contract to control 100 shares when the stock was trading in the neighborhood of about 36.5, right? 3,600 and change dollars. So we're only getting like 36-to-1 leverage, paying $100 to control $3,600 worth of stock per contract, per 100 shares. But you can see that, so the double took a little bit longer. It took about a full week, but actually, week and a day, actually. And you see, then it pauses again after we sold it out, but we didn't bail because it's still in that good structure headed towards target number 2, which is the 200% gain. Target number 3, we didn't quite get to our 300% profit. Said, you know what? We've got another inflation report coming out the next morning, 270%. We're 30 percentage points away from our final target. Prudence is the better part of valor, right? The idea being that, you know what? I think subscribers would be happy with nearly the third target achieved. We've already gotten 100 and 200% on 3/4 of our positions in our pockets. And now we're saying, okay, just go ahead and lock it down because there's not that much reward left versus if we walk in tomorrow morning and we've got everybody wringing their hands about more inflation and the market's gapping down, that's going to give us much more risk than reward. So you always want to be thinking about risk reward. This took a little bit longer than most. This took 9 trading days. But remember, we bought it at the start of June. We bought a mid-July, third Friday of July option. So we had 6 weeks to go. We lost just a third of the time in that trade, essentially, if you think about it that way, that we lost 2 weeks out of the 6 weeks and had 4 weeks left to go when we shut it down. I hope this is making sense. Do you see how overbought is not bad, right? I left this line red the way that it was defaulted. Red's supposed to be bad, right? It's supposed to be bearish when it's overbought. But actually, when it stays overbought like that, you can see this stock keeps cruising to the upside. Why? Because it's not the top of the range. It continues to make new highs. It's a new trend. The institutions are just like you and me. The institutions are driving these stocks in the markets. They want more of what's working and less of what's not. They're going to keep building their position. If they want to get on Delta, they're going to keep buying it. And the thing is, institutions cannot buy it all at once like you and I can. If you and I are trading 1, 2, 3, 5, 10, 20, even 100 contracts, we're small fish against the many thousands of contracts or many millions of shares that institutions want to own to make it have an impact in their bigger portfolios, right? You can see that just one of these winning trades has been able to generate tremendous returns, right? $1,000 plus type of profit potentials per trade, even on relatively small amounts invested. But what happens if you add up all the winners and losers? And these are before commissions or before subscription investment. But the idea here is that, look, this goes back to inception when we first started the Grand Slam approach back at the start of 2017. So this portfolio has been around for a while, right? Here we are 6 3/4 years later. But the idea is that, look, we're looking at here is that over those 7 years, you could have literally, if you're putting in $1,000 a trade, you could have started with this as little as, probably a several $1,000 trading account, but we'll call it a $5,000 trading account, be up to 33,000, almost 34, because it'd be 28,900 plus dollars in profit, adding up all wins and losses before commissions or subscription investment. We all know that past performance never guarantees future results, right? So don't quote me that it's got to be that number in the future. It could be more or less. It will be more or less, right? It's not going to be exactly like that. We like to think we're green and growing, always getting better, but let's face it, there's going to be down cycles as well as up cycles. And if you say, well, what have you done for me lately? If we just look back to our performance since June 1st of this year, I love how my staff always updates these through today. You'd see that you'd be up $4,800 gross, adding up all winners and losses before commissions, before subscription investment. So if you're starting with a $5,000 account, putting $1,000 in per trade, because we're not going to usually hold more than 2 or maximum 3 trades open at once. Okay, so you're not going to ever be like fully invested here. But the idea is that, look, you look at this and say, okay, $1,000 a trade, you basically almost doubled it, 96.8% gross in what, under 4 months, roughly 3.5 months. So you say, okay, can we do that every 3.5 months? We'll see, but we know that we can't guarantee that. But the idea is that we're working hard for our subscribers, and you can benefit from us being your eyes, ears, and fingers, typing out trades to you via real-time email, and you can get set for real-time text alerts from us. So when we summarize kind of what the indicators are that I like to use for these trades, and these are ones I encourage you to study on your MetaStock platform. And what you're going to find is that the default settings for these 2 indicators, the CCI, the Commodity Channel Index, and the Williams percent R is often how it's shown, but I tweak it a little bit to make it a positive scale. I know Larry Williams, he's a brilliant trader and innovator, and I compliment him on this indicator regularly, that we just adapted to our purposes to say, let's turn it from a range-bound oscillator into a big trend indicator. Same thing with CCI. It turns out CCI, the inventor of that, Donald Lambert, was using it the same way that it turns out I do to find the big trends when it really goes overbought or oversold and stays there. But principles are that one of these by itself is tradable, but 2 of them together signaling on the exact same hourly close tells you that you've got a fresh, new opportunity. It's important, just like your produce, you want fresh trades. You don't want trades that are stale, that have been around for a while, that have been hanging. And because if it's been hanging, either it should have taken off and it didn't, or else you're buying it much too high, much too late, and you're increasing your risk. You want to get on these right as the rockets take off. So the principle of this is that it's really important to take advantage of this. When you get a real-time email and text alert from us as a Grand Slam Option subscriber, you get the benefit from that in real time, and said, that's the option we want to buy right here, right now. And then we'll guide you every step of the way, whether we need to get in, stay in, get out, or take profits and what the next new target is, as we gradually peel off those profits at the 3 different target objectives when we can. So when you become a subscriber, you get full access to our systems and rules. But I'm not done. I'm going to show you one more example here, and then tell you how you can get started with this, and then I'll bring Jeff back in so he can tell you also about the Big Trends Toolkit as well. But bottom line is that Intel is interesting because it didn't get all 3 of its targets. It got its first 2. And then we do put a trailing stop. We don't recommend a price stop when you start out these trades, right? If you say, well, I'm going to put a 50% price stop on these, you may whipsaw yourself out of some otherwise good trades just based on a little quick shakedown, right? So we recommend just using the time stop rules that we recommend, looking out over the next 2 to no more than 3 days in a given trade, and say, okay, just look at the pattern here. Intel is starting to break out. This was on June 12th. Intel has been a laggard, used to be a leader. I made a lot of money on Intel on the way up in the late 90s, but it hasn't led here in recent times. But I figured it was due to play some catch up. So both of them are signaling the morning of June 12th that its stock is launching here, okay? You see it goes through a little breakout, now a little pullback, and look, there's your first what? Retest right on that low. First retest low holds. You can see the next retest comes in for CCI in here right near that low. So HL, when you ask, where do I get out of these trades? As I'm trailing them through, once we're past the initial time stop phase, and if we of course, have gotten our target price. We're going to take those. But you can see each of these retests along the way should be holding. So CCI giving another one up in here. So the stair step I talked about, you can see as it starts to come down, we've gotten the first target out 100%, 103% actually and change. Second target 202%. Remember, we bought a 35 strike call. We paid $81 a contract to control 100 shares of stock that would have cost us about, what, $3,250. So we're a couple, 2.5 points out of the money when we bought this, with about roughly 4.5 weeks to go before expiration. You can see they announced news here. I'll put an N by this third one here. This is our final exit. News comes out that they're going to invest multiple $billion into a chip foundry, meaning something to build more chip capacity. Wall Street did not like that news. They thought it was too expensive, thought it was a bad use of capital. Whatever they thought, ultimately the chart tells the tale, and the chart told us that this past retest was violating here. Our trailing stop was getting triggered as well. We didn't quite get to 300%. We got to like 270%. So we send you new stops to tell you where to get out of the final piece of the position. And this stop was triggered on the last quarter of our position at 166% and change. So you can see, good thing we got out there, because what's happening now? It's going the other direction. This is why you always got to follow the charts. You can see we're starting to get actually the other side. We didn't really talk about puts today, but you can see starting to get some bearishness in the CCI, and then a little later in the percent R. They didn't signal together, but you can see when they were both working together here, we got probably the worst part of this downtrend happening, but that would not have been a signal in our work because they didn't happen on the same hourly close. Okay, we need that double confirmation, the double freshness happening together on a new breakout or a new breakdown. So we're always scanning for the markets. A lot of these signals you've noticed come in the first hour's close around 10:30 Eastern Wall Street time, because that's where a lot of early morning gaps happen, whether it's tied to news, whether it's tied to, you know, broker upgrades, or whether it's tied to something like oil prices surging. So Lee says, how do we pick the stocks? What are the key aspects of the selections? So we're looking at your big cap, typically S&P 500 and NASDAQ 100 names. But what we're doing is we're running them through scans where we're saying, okay, show us the fresh breakouts and the fresh breakdowns on each hourly close. So each hour, we're basically running a new scan. MetaStock calls it an exploration. Jeff can tell you about that. And it's something that you could do in your Big Trends toolkit as part of MetaStock. That's an add-on that I'm going to have Jeff come on in about 5 more minutes to tell you about. But I want to first tell you, of course, how you can get started as a Grand Slam option subscriber at an incredible, basically a thank you MetaStock for including me in all these years and so many great events, and for being right there to help folks join the Big Trends view of the world with the Big Trends toolkit. So what we've done, remember the track record historically, we don't guarantee performance in the future. This looks back in the past. Just even though the past 3.5 months here, you can see up $4,800. And so beauty of this is that you don't need a lot of capital to get started. I would tend to recommend, if you're going to follow all of our rules, that you get started with at least 4 contracts, which would be a minimum of $400 invested per trade. Because if you do that, then you can sell half of them at a double, one more at a triple, the final one at a quadruple when we get that chance. So 4 contracts, $400 maximum investment per trade is a great way to get started. We believe that as you see how it's working for you, let the service prove it to you. Don't just take my word for it. But for $400 a trade, it starts to prove it to you, and then you can gradually scale up your allocations. So as I said, I want to introduce what I call my MetaStock appreciation package. Thank you, Jeff, and all the MetaStock team for all you've done for me to help get the word out about Big Trends. So you can actually today get 12 months of trade alerts from Grand Slam options, which would normally cost you on my website over $3,500 because we charge $297 a month times 12. But basically, you look at this and say, hey, I'm going to give you some extra goodies too. It's part of my appreciation package. Thank you, MetaStock. And thank each one of you for being with me today. I'm going to give you access to my Gamma Options Bootcamp. Remember, I alluded to Gamma earlier. You don't have to know the options Greeks, but when you get my bootcamp, you'll get the nitty-gritty on exactly why I love these options to get the bang for your buck with high Gamma options that gain very quickly as they move from out of the money to closer to the money, and then ultimately sometimes in the money. And then access to my Grand Slam settings and rules sheet. access to my weekly video training. I do a weekly video every Monday. I just recorded one today that's posting to our website here in about the member site in about 11 minutes. And you get access to me and my analyst team via dedicated email address. So you can reach out if you've got any questions about your Grand Slam subscription. That'd be well over $3,800 of value, but today I'm going to slash it for you. Take that $3,800, cross it out. Okay, it's not going to cost you that much. We're going to knock it down. Thank you, Jeff and MetaStock team, to just $442. Now, where can you get such an insane deal to save more than 85%? I'm going to set it up here and I'll post it in the chat box here. It's members. It's not www. That's the biggest confusion people get. We like you thinking like a Big Trends member, a new subscriber or longtime subscribers like Shirley I saw in here. Basically, no, we want you benefiting from all the goodies that you get as a Big Trends subscriber and member to the service called Grand Slam Options here. So it's members.bigtrends.com/slam12. And so we keep it really simple on these order pages. If I show you that real quick, what that looks like, I'm going to type it into my browser window real quick, members.bigtrends.com/slam12, and you'll see it look like this. Here it comes. Super simple. And by the way, you're going to see on this page too, when you go in, it's got your whatever credit card you want to use. Scroll down if you want to use PayPal, it's down there in the bottom right. But you'll notice that it actually mentions the boot camp can be added to the order. You don't need to do that. Cross out that $77, which would be an insane value already for more than 3 hours of training from me that I've captured for your benefit. That you can also ask questions and you get lifetime access to the boot camp training. You get that free today when you act before midnight, all in for $442 with the 12 months of access to Grand Slams trades. We call it a 6-month BOGO, meaning you buy 6 months, I throw in the extra 6 months on me, 12 months total access. I expect you're going to see in the neighborhood of about 6 trades a month, maybe sometimes 8. Call it 75 to 90 trades in a year. We're in the neighborhood of about $2 a trade. Okay, if you think of it that way, you know it's pretty insane value. If you're, I take that back. More like $4 a trade. Sorry if we got about 100 trades. It's been a long day, but basically $4 to $5 a trade. Okay, that's insane value, right? So you're looking at this and saying, okay, you're getting insane value. You're getting education. You're getting support every step of the way. Whenever you've got a question, all at that special link I showed you when you go to this link here at the bottom of this page. Members. That's not a clickable off of this, but and I don't know if it's clickable off of the link that I just sent. Thank you, Jeff, as well for sending it over. Members.bigtrends.com/slam12. Check it out. Shirley says the weekly updates are so good. I appreciate it, Shirley. We give you a lot of education, a lot of bang for your buck. That's really my philosophy. It's why Big Trends has been around, coming up on 24 years in November. I've always believed in really making sure there's a lot of meat on the bone, it's not a bunch of hype. There's a lot there that you can apply to your own trading, whatever type of trading you do. Even if you want to use this for longer term, you can actually convert this from an hourly system into a daily or a weekly system. You can convert it into a shorter term system if you're a more active trader. So you can tweak all that. And so basically, the idea is that we're here to help guide you through how this works, how you can scan for this. And you can scan for this on a daily chart too. I saw Jack's question is asking, hey, can we do this on more than beyond a daily? You could do this on a daily scan too with the way that we set it up. And Jeff helped me to set up a lot of scans that were very similar to this using tools like %R and CCI as well as part of the Big Trends Toolkit. We also in the Big Trends Toolkit have some amazing stuff in our latest iteration, the 3.0 Big Trends Toolkit, that includes things like what we call Big Trends Scoring, where you're starting to now include a lot of the indicators that I look for together and saying, okay, now just don't give me one indicator, show me the whole Big Trends view of the world. And now instead of it being two-dimensional, it's like you're looking in multiple dimensions and really seeing depth of greatness of a trade setup, because it's like checking so many boxes that it's like, boom, it gets into that super highlighted attractive area or super bearish area on things that are really breaking down across multiple Big Trends indicators and methods. So check it out at members.bigtrends.com/slam12. That'll save you some insane money there. It saves you like over $3,000, more than $3,400 off, just $442. It's a one-time investment. You're not going to get auto billed. It's like one-time investment, $442, locks you in for the next year with all the educational bonuses. So I'm going to hand it back over to Jeff so he can tell you also about the Big Trends Toolkit. And then if there's any questions I need to pick up, Jeff, you let me know. I'll hang around for a few minutes.
All right. Thank you, Price. Let me just check. I don't see any questions, but if you have some questions for Price, let us know. Before I let you go, or before I kind of take over, I just want to say thanks for all of your help over the years.
Thank you.
I've had a lot of fun developing out some tools. So, and I'm going to show them to everybody right now. Thank you, Price.
Cool. Thank you.
All right. Very cool. We go ahead and kind of just take over a little bit. And as Price had said, yeah, we've developed out some really, really good tools. Let me go ahead and kind of take over the presentation here and go ahead and show my screen. This actually, Big Trends Toolkit was the first massive project that I undertook when I went from sales to business development. And I'm so proud of kind of the work that we did on it. It's gone on to be one of our most popular add-ons, and so popular, in fact, that we've made 3 reversions. Big Trends Toolkit is available for a number of platforms, but I always like to think that we've got the most extensive, the signature version, and it's massive. I'm just kind of walk you through the things that we've added over the years. So let me kind of go in here and just talk about the methodologies. Here is a list. You've got 80-day Bollinger Bands, acceleration patterns, plus Bollinger Bands. You've got the Big Trends Score, the Big Trends Break It Down, the DMI difference, the efficiency ratio, and I'm going to stop reading. There's just too much on here. It's extensive. It's a complete collection of the work that Price has done. And with methodologies, I mean, that includes indicators, it includes expert advisors and scans and system tests, templates, the indicators that are required to run it. And I've always been a really, really big fan of kind of the way Price looks for things and kind of the things that he's looking for and kind of the methodologies that he talks about. And I want to kind of just show you, give you a kind of a taste for what we did with the version 3. So let's go ahead. I'm looking at cues here again. But one of the things, actually, let's clean this thing up. Actually, I made a mess of this one, didn't I? Let me go ahead and delete all of these. And just going to delete the indicators and the line studies and kind of go back. Actually, I could just apply kind of the new template. So what I'm going to do is I'm going to go ahead and right click on here and I'm going to go to apply template. And I'm going to come down to BTT3. Okay, so Big Trend Toolkit 3.0 basically is what they stand. What I wanted to show is kind of the methodologies that we built with Price around scoring. So the idea is Price has a number of indicators that he really, really likes. And what we wanted to be able to do is identify a scoring mechanism. So out of the indicators that Price really uses, we wanted to be able to show if those were bullish or bearish at any given time. So let me go ahead and kind of zoom in just a little bit so we can kind of get a bit of a clearer view here of what's going on with this. Right here, let me just go into the commentary and kind of give you an idea from there. So I'm going to go to View, Expert Commentary here. And obviously, Price has a number of indicators that he likes. And right here, again, when I put the commentary on a screen, it's going to kind of highlight the last day. And so if you look over here, if you want to breakdown of the Big Trend Score indicators, like the Williams percentile is currently neutral. The 2-day Williams percentile is neutral. The commodity channel index is neutral. The efficiency ratio is actually bearish right now. Neutral, 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 bullish, neutral. So it gives you a pretty good idea out of Price's 10 favorite indicators, kind of what is looking very neutral to me. I see a whole bunch of neutral, one bearish and one bullish. It's neutral. So, but in any case, actually that gives us a score of 0 when we go in and score everything. So right now, cues are looking as neutral as possible according to prices indicators. But when they start to kind of score in the direction that you like, that you might recommend, you can kind of come back here. And I'm just going to move this back over to kind of when we had a bit of a better score. So let me zoom in a little bit more, back it up just a little bit more. And right here, we got a bit of a buy signal. Now the buy signal is going to happen when you get a buy signal. You're going to have a setup, which is initially going to show a score of, I think, at least 80. That'll be a signal. And then your entry is going to be when it goes above the high. So if I'm looking at this right now, okay, my big trend score would be 90. That's because all of these are bullish, except for the directional movement index. That's neutral. Okay, the BTS indicator crossed above 80, indicating a buy setup is formed on the current bar. If you're interested in trading above this, you'd be looking at 349 to confirm the trend. So here you had the setup because you crossed up above 80. The very next day you had a little bit of a buy signal. Okay, and that would have given you the opportunity to buy in. If you didn't buy in, right here where it crashed back into the balance, you're going to see that there's a bit of a setup right here. Okay, and the setup basically says that it's crossed above 80 again. So you're already going to trade, but it's giving you this kind of additional notification that you can still go ahead and buy. It does have a stop. You'll notice right here that it says your current stop is 348.18. So with the last version, what we wanted to do, Price and I wanted to be able to see a very good scoreboard of kind of what the indicators were doing, because we've gotten to a point where there's quite a few of them and quite a number of them. And so with this big trend score, what it allows you to do is to see kind of that scoreboard view of what's going on. And I liked that idea so much I integrated it not into just the scanning for the Big Trend Toolkit score kit, but into all of the add-ons, or all of the entire add-on. So for example, if I run a scan, and a couple of the ones that I like, I'm going to come into the scanning mechanism or the scanner, the Explorer, as Price was saying. If I run a scan on the score, I can see whatever scores are actually triggering. But if I wanted to, for example, look at stocks where they're currently trading 400% above their 200-day moving average, or they're a certain percentage, 200% above their 200 or 400-day moving average, those are going to look for stocks that have really exploding in value. And so if I run a scan like that, I'm also going to get a score. If I run a scan based on Price's efficiency ratio, I'm also going to get a score. So every time you kind of look at a signal, it's going to kind of give you that scoring mechanism. So that's one of the things that we added. But in total, this is a massive, massive big trend toolkit. In total, you get 17 expert advisors, 17 scans. They all come with system testing, so you can test them and see how well they work. And it includes 15 templates and 18 of Price's custom indicators. So normally this add-on is $49 per month, and that's all. If you do it today at the summit, what you're going to do is you're going to get 3 months for that $50. So you can give us a call, 800-882-3040, or you can visit us again at metastock.com/saleschat. I just love the work that Price has done over the years in his big trends work. And this is a great way to kind of get access to all of the studies that he's done. And of course, oh, hold on. Of course, oh, dang it. It's included as part of the Trader's Action Pack. So you can get Steve Bigelow's Count of Profit Systems 3.0, the Vince Vora Victory, 3S Code, the Train Lines and Training from Oscar Carboni, the Setup and Timing and Triggers with Jake Bernstein, the Big Trend Toolkit, 3 months of that, 3 months of Learn MetaStock, and Unleash the Power of MetaStock. Normally, all of these systems from all of these designers would be $4,737, but here at the event today, they're just going to be $2,237. Almost everything is going to have a money-back guarantee on it. And you can give us a call at 800-882-3040. You can visit us at metastock.com/saleschat, or you can visit us online at metastock.com/summitdeal. So let me know if you have any questions about that. Since Steve couldn't make it today, I wanted to spend a couple minutes because we worked really hard on creating his update to his add-on. With Candle Pro, Steve's a great friend of mine. Absolutely love him, and a very, very good technician as well. But I wanted to talk about the updates that we did for Candle Profit Systems 3.0, and just kind of talk a little bit about what's included with that. And you know, it's a great add-on that has a 3 behind it, because we've just, it's been so popular. It's been so well received that we've done 3 different versions of it. Steve is a great technician when it comes to looking at candlesticks. And his Candle Profit Systems has sold thousands of copies. We're very, very proud of how well it's done. The initial version that we released, when I first brought it out to the market, I sent it to a friend of mine, Dennis Peterson, the late Dennis Peterson, and I had him review it, and he gave us a really good, solid review in Stocks and Commodities for this add-on. A few years later, when we released the upgrade, the 2 version, I sent it over to Barbara Starr, and she reviewed it, and she gave it a good review. This product has also been rated number 1 of the best products of any add-ons, not just for MetaStock, but for any product, several times by the readers of Stocks and Commodities. So it's prices as well. So it's been very, very well received. And in total, it's a very, I'm very, very proud of it. People have really enjoyed it. I remember showing it to a guy a number of years ago up in Toronto. It's like, I use this to make all of my trading decisions, and I love it. So I want to give you an idea of kind of like what we did with it, what it does, what it's designed to do, et cetera, et cetera, et cetera. Since it's the 3rd version, like prices, it is that's actually a good suggestion. With Price Headley, it is a 3-month subscription. With the rest of them, it's a wholly owned, and that's actually a good suggestion maybe for next time. I appreciate that. So what we did with Steve is we actually went together and we put together a pretty massive upgrade to his already pretty massive product. If you're familiar with Steve, he has a lot of patterns that he talks about. And here's a list of what we do. Doji Best Friend, Doji Bear Friend, all of these ones that are over here in his top rank patterns are patterns that he considers, with his 37 years of experience, the best patterns to be looking for. And so let me kind of show you what this looks like on the chart. This is 57 different patterns. So I'm going to kind of open up the chart. Let's go ahead and look at, I guess, Meta, because why not? And I just kind of, I want to show you kind of all the stuff, all that this does. With 57 patterns, one of the things that we wanted to do is we wanted to get really specific about the patterns that are Steve's favorites. So, you know, like the bullish engulfing, the bearish engulfing, those kind of things are important to know on a chart. But those patterns that Steve really, really likes, and some of them will even say, if this happens on a chart, that's all that needs to happen. You know, not all of them, but certainly some of them. So I'm going to go ahead and just do this. I'm going to apply his chart view. That's going to apply all of the indicators that he has. And what I want to kind of show you is kind of how this has worked on Facebook or MetaStock over the couple of years. If you remember going into kind of the first part of this year, we had, actually, I'll just show it to you. Like, we'll zoom out, had a very, very big down year, okay? Right around December, things kind of shift in a bullish direction for Facebook, and it's been very, very good stock to own. And you can see kind of, let me go ahead and zoom in a bit here. One of his favorite patterns on that favorite list is the Doji Best Friend, which happened right here. You also have the Doji, another one that happened right here. And the reason I kind of wanted to show these patterns is what we try to do is kind of highlight them on a chart more than some of his other patterns. So you'll notice with this one's called matching lines. It's not quite as big, I'm sorry, the meeting lines, it's not quite as big, and it's not quite as bold as the Doji Best Friend, which is green and it pops out on the chart, and the chart is highlighted blue. And we did that very much on purpose. Those patterns that are going to kind of show a change of direction, as they did with this Doji Best Friend, are those patterns that in Steve's experience are the most popular, the ones that he really, really wants to highlight. And so this is kind of the display that we came up with. If I go back a little bit in this expert advisor, what you're going to notice is right here, we've got the doji best friend. If I click on the doji best friend, it's going to tell me exactly what that pattern means. So doji best friend is a gap up after a doji or a spinning top formation where prices are in the oversold area with stochastics. Okay, this is a long opportunity. Traders can expect strength, the strength of the uptrend to be greater if the last bar closed above the 8 exponential moving average, which right here is this black line. Okay, so basically all of the patterns that you see kind of drawn out there for you on this graph are basically identified on the chart for you. If they happen on a chart, it's going to put it on there for real time. It's going to give you a description for it. And Steve is just such a great technician. He does such a great job with making this available. And it's been just such a popular product. So for me as a trader, again, if I want to find one of those top ranked patterns, that doji best friend or the kicker or the fry pan or any of those ones that are top ranked, I can now run a scan for that. So if I come into the scanner here, and it was probably the last time we showed the scanner, but if I go to CPS 3, I still have some of the other pattern scans that I can run, like the doji dynamite, the J hook, the major patterns. If I want to just find bullish top trend patterns, what I can do is I'll just kind of run it here right now for you. And what it's going to do for me is it's going to outline those stocks that have just the best opportunities that exist in the market. So we'll go ahead and let that run through real quick, see if there's any opportunities. I really thank Steve for all the work that he's done over the years with this. He, very much like Price, has been just such a huge, and has had such a huge impact on the MetaStock business and on my trading. And I consider him a very good friend. So let's just see what kind of comes up here. So if we're looking for a bullish pattern tomorrow, we're going to find one. 98% of them have been rejected, but there's no doji best friends. You can see all these zeros. There's no flutter kickers. There's some trend kickers right here. So we've got AbbVie, that's a trend kicker, Berkshire, Valero Energy, and then WR Berkeley. They're also kickers. A trend kicker is a further refined kicker, by the way. You've got a bobble pattern here in Moody's, and then, yeah, that's it. So then if I want to kind of take a look at one of these trend kickers, let's go ahead and look at Valero Energy. Go ahead and open that up. If I apply as template, I'm just going to do that. We're going to apply template. We'll go to that CPS3. I'm just going to do the chart view here. Go ahead and apply the chart view. And then we can kind of see where patterns have kind of come in. You can kind of see kicker. We had a pretty good 10 kicker right here, kind of at the bottom. We had a kicker. And this doji sandwich didn't work out well, but this fry pan did. This doji bear friend actually worked out really well, or at least signified the end of a trend. Here, though, we've had a kicker, a fry pan, and a trend kicker. And if I want to know what a trend kicker is, if I kind of scroll in a little bit, you can see that the bullish trend kicker occurs when a bearish dark candle forms and then is followed by an open above a previous candle and then trades positive. This signal is even more powerful when it forms at a major support level. The larger the dark candle at the bottom, the more powerful the reversal. This pattern should be deemed relevant no matter where it occurs in a trend. Okay. The trend kicker is a top trend signal, and it's going to kind of go into more definition about how trend kicker is different than a bullish kicker. So really, really cool add-on. We've done a lot of work on it, 57 patterns. But one of the things that Steve and I talked about during the design process is like, okay, let's identify those patterns that you really like, the ones that you should really pay attention to, the ones you should really want to scan for. And so we came up with kind of the top ranked patterns ideas. In total, if you have the older version of Bigelow, you can see what we've added. We've added these power patterns. All of these are new. But in addition, not only did we kind of come up with all of the top ranked patterns, we put in the doji bear friend, which is new to this version, the bearish trend kicker, the bullish trend kicker, the bearish bobble, J hook, the bearish J hook, and the dagwood. Those are all new. So, and if you own an older version, one of the things that we worked out and negotiated with Steve is you can get an upgrade. The upgrade, if you own version 1 or 2, is only $97, and you should get it. is such a cool add-on. Absolutely love the scans for it, the way that it's put together. I think we did a good job together. I'm very proud of it. So in total, you're going to have the explorations right here. The new ones are the power signals, and then the top rank bearish and bullish. You've got the doji, dynamite, and the other explorations. You can scan for any of the patterns that you want. We did go in and put 2 expert advisors together, and they're the same expert advisor, but what I did was I pulled out, so it just shows you the top rank patterns. But I don't think, in retrospect, I don't think you really need it. Well, let me show you the difference. So like, for example, if I'm looking at the kicker, right here, I've got a kicker. Here, I've got the kicker, the fry pan, and the trend kicker. And you can tell that all of these are kind of power signals. So because they're larger than the other signals and larger than the other patterns. If I was to attach the other expert advisor, let me just go and find it real quick. It's only going to show me the top rank patterns. I don't necessarily think you're going to use that because you already can see that they're visually better. They're visually bigger and stuff like that. But if you're new, you might want to use just like the top patterns, and that way you can kind of focus on just learning the top rank patterns. It is a scan that we built just so that you could focus on just the top rank patterns. So in any case, you've got all of the patterns. You've got the expert advisors, the scanning, all of those are available. In total, you have 20 new patterns, 7 new top ranks. So those are what we added from version 2 to version 3. What I tried to do is make it formatted so they'd stand out clear on the charts, make explorations so that if you're new to Steve's great body of work, you could focus on what he really liked with all of his experience. And so I worked on a cleaner look and feel. There's a 70-page manual that includes explanations of all the patterns, how to trade them. Steve put a lot of information that we wanted to capture. So in total, with what's new, 58 unique patterns, 11 explorations, 2 expert advisors, 4 different layouts. So normally this would cost $6.99. As part of the summit, we're going to do it as a retail cost of $5.97. You can give us a call at 800-882-3040, or you can do it at metastock.com/saleschat. So I do want to thank Steve for all the work that he's done. It's also part of the Summit Action Pack today. So you can get that 3.0. You can get Vora Victory. These are some of the best add-ons, some of our most popular add-ons that are available. So normally the whole price for this would be $47.37. Here at the event, you can do it for $22.37. Give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/summitjeff. I looked over the chat and saw Jeff. Summit deal, not Summit Jeff. In any case, let me look to see if we've got questions. As I do that, I hope you've enjoyed the class today. I hope you've learned something. I feel like there was a lot of really good speakers. I feel like they did a good job. One thing I will say is, as you're wrapping up, when you're done, on about an hour, GoToWebinar is going to send you a survey. It's going to ask you 4 questions. It's going to ask you how you like the event, what speaker you like the best, and if you have any suggestions for the future. It'll only take you a few minutes, but I'd appreciate it if you fill it out. So Jabber says, is this web-based or a desktop app? So we've tested. Jabber, that's a really good question because there's a lot of web-based apps that are available. Like there's a million of them. When we were looking to do kind of the new charting that we did with this last version, the big upgrade that we did to charting, we actually test HTML5 for web deliverability of chart data, and we didn't like what we found. So we still have a desktop-based application. We think it responds better to real-time data, doesn't stall out. You can look at more charts. The scanning is better. And so for now, it's a web-based app. So thank you for that question, Jabber. I appreciate it. Okay. In terms of your questions about which work best, which ones have the best percentage, that's one of the things we wanted to answer, Jabber. So when we said, when we sat down, Steve and I sat down, I was like, Steve, we've got a lot of patterns here. And there were, at that point, I mean, right now we're up to 57 and we just added So we were at 37. And I said, one of the most useful things that we can do, I think, Steve, is to really identify those patterns that you think have the highest profit potential. And he agreed with me. And so he put together a list of the stocks, or the patterns that over the last 37 years have been his favorite. So with his decades of experience. And so what we do as part of that, Jaber, is if it's a pattern that he calls one of his top ranked patterns, it's going to be bigger on the chart. Like this kicker, it's like this fry pan and like this trend kicker. If you want to scan for just his top ranked patterns, that's a scan you can run. You can run just the bullish ones or the bearish ones. And if I scroll back just a little bit, let me find, here we had a doji bear friend. Let me just find one of the non-top ranked patterns. Oh, I'm only looking at the top ranked patterns at Scan Expert Advisor. But to answer your question, the ones that I would focus on are the ones that he says are the best because they're his patterns. He's the one that works with them day in and out, and those are the ones based on his experience. But you can kind of see the difference. If I have the full one up, you've got a kicker right here, which is big and green. Just a few days later, we had a hanging man, right here. And you can see just it says HM. And if I highlight over it, it'll say hanging man. But we tried to make those more the better patterns kind of stand out on the chart for you. And we spent a lot of time doing that. So what I would focus on, Jaber, very easily is right here, these top ranked patterns, which are the ones in this column. These are the ones Steve would recommend you focus on at least first. Okay, hopefully that answered. Okay, again, 800-882-3040, metastock.com/sales-chat, metastock.com/summit deal. If you have any questions for us, give us a call. Those guys are awesome. They do a really good job. 800-882-3040. And I do want to say thank you again to Stocks and Commodities. They've done a great job of sponsoring the event over the years. I want to thank all of the speakers. Everybody did a great job today. I really appreciate kind of the support that they bring. Thanks for coming. If you liked the session, if you're watching it on YouTube today, tomorrow, or the next day, give it a like. It helps a lot. Subscribe. You'll see more content like this. If you haven't tried MetaStock, it's been rated #1 30 years straight. Like, you really can't buy that kind of like experience and reputation. So if you haven't tried it before, just get in touch with us and we'll give you that extended trial where you buy a month and get the second and third month for free. We'd love to have you on. We'd love to help you. And in my opinion, it's one of the best software programs. Measurably one of the best programs, rated one of the best programs, the best program for 30 years in a row. So give us a call. I hope you enjoyed today's classes. Stay healthy, stay well. We'll see you at the next one.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.